Deal with item number 5, which is insurance costs for small and medium-sized businesses. I want to welcome the Alliance for Insurance Reform and ISME to the meeting this morning. And I wish to advise the witnesses by virtue of 17(2)(1 of the Defamation Act 2009, witnesses are protected by absolute privilege in respect of their evidence to this committee. If you are directed by the committee to cease giving evidence in relation to a particular matter, and you continue to do so, you are entitled thereafter only to qualified privilege in respect of your evidence. You are directed that only evidence connected with the subject matter of these proceedings is to be given, and you are asked to respect the parliamentary practice to the effect that, where possible, you should not criticise nor make charges against any person, entity, by name or such a way as to make it more identifiable. Members are reminded of long-standing parliamentary practice to the effect that members should not comment on, criticise or make charges against a person outside the House or an official by name or such a way as to make them identifiable. We're going to have an opening statement now, I think, from the Insurance Reform Group.
Good morning, Mr. Chairman, and thank you for inviting us here today. My name is Peter Boland of the Alliance for Insurance Reform. I'm joined this morning by my colleagues Linda Murray, also a director of the Alliance and owner of Huckleberry's Den Play Centre in Navan, by Jerry Monks, director of JDM Insurances, and in the Visitors Gallery by Noel Anderson of the Licensed Vintners Association. You've all received a copy of our presentation, so I'm going to cut to the chase, if that's okay, and get through some of the key bits. So apologies if I'm skipping paragraphs along the way. It'll just get us to the business end of it. Since we last presented to you in May 2018, the situation for our members has worsened considerably. In particular, small businesses are now closing on a weekly basis. Members right across the spectrum are reporting savage increases in liability insurance renewals. My colleagues will give you evidence in this respect. The crisis is spreading to a broader range of SME sectors, as illustrated by our most recent members, including the likes of the Nursing Homes Ireland, the Irish Travel Agents Association, the Showman's Guild, who represent circuses and fairs around the country, and Retail Excellence. The crisis is existential in many sectors. Businesses across the leisure, childcare and hospitality areas are threatened. You can add many community, charity, sporting and arts organisations to this list. Additionally, there is increasing alarm among members regarding the slow pace of key reforms. And finally, it is clear to us that the dead hand of vested interests and a lack of sufficient political will are grinding the response to this crisis to a halt. Moving on then, my colleagues will gladly share their specific experiences with you, but right now I intend to cut to the chase and focus on analysis and solutions. When we last presented to the committee, we submitted 10 asks, practical measures that would help reform this dysfunctional area quickly. We further communicated these asks to the Cost of Insurance Working Group and to the ministers involved. While we acknowledge the amendment of Section 8 of the Civil Liability in Courts Act 2004, which now obliges claimants to inform defendants of a potential claim within 1 month, progress in other key reforms has been frustratingly slow. It is illuminating to note in this regard that when a similar crisis arose in 2002, the major reforms were in place within 2.5 years. Following on the publication of the Motor Insurance Advisory Board report published in April 2002, the two key responses, the establishment of PIAB and the commencement of the Civil Liability in Courts Act, had already happened by July 2004 and September 2004 respectively. By contrast, the Cost of Insurance Working Group report was published in January 2017, and over 2 years later, the key reforms remain uncompleted. It is also worth noting that of the 68 recommendations made in this committee's report on the rising cost of motor insurance from November 2016, our analysis suggests that only 17 have been actioned out of the 68 recommendations. Of the Cost of Insurance Working Group recommendations, ongoing delays in the establishment of a long-promised Garda Insurance Fraud Unit and the recalibration of the Book of Quantum are prolonging and amplifying the crisis. So I will now focus on these. So I move to the paragraph that starts, Establishment of the Garda Insurance Fraud Unit. Insurance fraud is a crime with profound consequences up to and including the loss of livelihood and valuable public facilities. Additionally, it criminalises the very process of making a personal injury claim, tarnishing all claimants with the same brush and deterring genuine claimants from seeking redress. As oft-repeated quote from a member of the public at an Alliance meeting last year was, "If I had a need for big money and I had a choice between robbing a bank and faking an injury, I'd pick the fake injury every day, more money and no consequences of being found out." It is absolutely clear from the experience of our members that An Garda Síochána are not presently equipped to deal with this issue. A specialised unit to deal with insurance fraud has been a key element of the Cost of Insurance Working Group strategy since the start and a key recommendation of the Personal Injuries Commission. We are bewildered at how long it has taken to establish the same unit, with issues such as political support, a year-long Insurance Ireland cost-benefit analysis and sources of funding being wheeled out to justify the delays. It must be established without further delay if we are going to meaningfully address the scourge of fraudulent and exaggerated claims. Incidentally, on this point, I welcome Minister Darcy's report on RTE Radio 1 yesterday evening that An Garda Síochána are investigating some medical practitioners and some legal firms in this regard, but these are one-off investigations and do not constitute in themselves a full strategic response to the issue. Number 2, recalibration of the Book of Quantum. As documented in the Personal Injuries Commission reports, the general damages awarded for minor injuries in Ireland bear no relation to those made in other countries, which makes Ireland a very attractive place to sustain a minor injury. This does not just apply to whiplash injuries as covered in detail in the PIC reports, but to all minor, fully recovered soft tissue injuries. Additionally, there is no consistency between awards for identical injuries between the Personal Injuries Assessment Board and the courts, or from judge to judge, which makes it very attractive in personal injury cases to reject a PIAB offer and head for the courts, safe in the knowledge that with the right judge, the rewards from the court or by direct settlement with the insurer may be substantially better. It is now abundantly clear that the Book of Quantum and the current process of its drafting are no longer fit for purpose. However, there has been much debate in recent months regarding the best approach to address this. We are fearful that the net result of all this debate is going to be no action, no change. A situation forced by vested interests making hundreds of millions in income from the status quo. This will have catastrophic results for our members, as they cannot sustain current premium levels, never mind the additional increases in insurance premiums that may happen if quantum for minor injuries is not addressed. What makes the delay in doing so all the more frustrating is that awards are already capped in this country at the top end of the scale by the Court of Appeal in Nolan v Wierenski, which has also clarified the principle of proportionality in Shannon v O'Sullivan. So the framework and the principles for a recalibration are already in place. So we ask that the Book of Quantum is calibrated to reflect international norms and norms already established by the Court of Appeal as a matter of urgency. On this point, we welcome the passing of the Judicial Council Bill on Tuesday night through committee stage in the Seanad, but it's taken over a year to get to this stage, so we really fear that without political will, it will die a slow death. Finally, number 3, schedule of forecast reductions. If anything, the situation with regard to transparency in this systemically important industry has worsened since we last presented to you. As well as the Blue Book, which gave comprehensive data oversight of the insurance industry, we have learned that the Central Bank has abandoned publication of the comprehensive data on policyholder demographics and cost trends provided by the Private Motor Insurance Statistics Report. So, for example, analysing trends in insurance costs for young drivers is no longer possible. This approach to the reports, which offered key consumer protection insights, can only be described as data vandalism. First data from the National Claims Information Database for the years 2009 to 2018 is due from the Central Bank in the second half of this year. Initially, it is expected that the data regarding motor insurance will be very limited. However, neither the National Claims Information Database nor the CSO have any concrete plans to issue any data on liability insurance costs. Reports on possible plans for both are due by the end of 2019. In this data vacuum, both Linda and Jerry are willing to share definitive data on their sectors. From a broader perspective, policyholders cannot plan or be protected if there is no data to measure what is happening or what can be expected to happen. So we ask that the Department of Finance produce a schedule of forecast reductions for reforms, using the 2002 IIF schedule as a model, which I attach in Appendix 3. It is abundantly clear to us at this stage that lawyers and insurance companies will do anything to stop real reform, working tirelessly to slow reforms and blaming each other to deflect from their own responsibilities. This is why it is imperative that political will drives this agenda. Otherwise, we will be here again in a year's time providing a similar update. This concludes our formal presentation. As an alliance, we are intensely aware of how urgent this issue is for our members and their employees and volunteers. We hope the committee can help us in getting meaningful action quickly, and we're happy to take questions.
Thank you very much, Mr. Rowland. Isme, then, give your opening statement, please.
Thank you, Chair, for your invitation to address the committee. Our cost of insurance continues to rise. ISME's latest cost of insurance survey results for Q4 2018 are shown in the first appendix to our paper, and 81% of members report increased public liability insurance. Recent statements about moderating insurance costs refer to private motor insurance only. No one has reliable statistics on liability or other commercial insurances, as the CSO does not measure them. The continued rise in insurance costs is the outcome of a failure to make meaningful change in three areas. Firstly, reducing quantum, to which there is no constitutional impediment, reforming our legal system, and reforming the insurance system itself. The issue goes far beyond the simple cost of insurance to SMEs, although that issue is already causing many businesses to fail. The cost of insurance issue is now hollowing out Irish society. It's restricting the conduct of sport, play and charitable activity. It's attracting criminal activity. It's encouraging the advancement of manufactured grievances. It's reducing the physical and moral health of citizens. We're getting to the point where suing someone for the most minor of inconveniences is now socially acceptable across all educational and class strata. While there has been a large amount of activity by the Cost of Insurance Working Group, it has not addressed the core issues which we do in our presentation. The Cost of Insurance Working Group has committed the cardinal sin of confusing performance, by that we mean doing lots of things, with effectiveness, and that's doing the right things. What we're left with is a veneer of progress and the complete absence of material reform. What we need is quantum reduced, the legal profession to engage honestly with the reform process, moral hazard for plaintiffs in our courts, a perjury statute and an amended Defamation Act, a just, answerable judiciary committed to continuous professional development, meaningful action on the detection and punishment of fraudulent claims, and transparent, granular data on a well-regulated insurance industry. While it would be easy to call in these circumstances for the head of the responsible Minister of State, we believe this would achieve nothing other than political theatre. We need a cabinet minister to personally take over the lead on this issue, and the nature of the reforms required suggests that this should be the Minister for Justice and Equality. We would appreciate that you have pressing issues with Brexit and housing to attend to, but we've suffered a lost decade on this issue. People are losing their jobs and businesses now because of legislative inaction, and you alone are the people who can fix this, and we ask you to do so now. I'm also accompanied by our former chair, who will be able to give you real-world examples and figures brought to his attention by members.
Do you want to go into those? Okay. Okay.
Again, as Neil said, I was an ex-chair, I was in the period 15-17, and I suppose knowing what we know, liability insurance began to ramp up from 2014-2015. So I would have had a lot of people approaching me at that time. So just a couple of stories to illustrate this. So story number one, and it's illustrated on page 10, where an ISME member in the southwest, a medium-sized manufacturer, with a substantial multi-risk policy in 6 figures. The policy was with what I would call an M&E broker, a multinational broker, an international brokerage firm. The policy was with them and was underwritten by, so broker A underwritten by underwriter B, both multinationals. At recent renewal, the member received off-the-record advice that underwriter B had paid broker A and a number of other major brokers a substantial commission to direct all their corporate clients to underwriter B. Broker A would shortly advise the ISME member that the only underwriter who would accept their business for 2018 that is, would be underwriter B for a 30% increase. So now you've only got one underwriter bidding for the business at a 30% premium. However, if the ISME member approached broker C, they could renew the book with underwriter B for the same price as before. Broker A duly quoted the premium plus 30% a few days later, and the ISME member severed their relationship with broker A. The ISME member will not identify himself or the broker underwriter for fear of commercial retribution. I don't think I need to explain the implications of this to anybody here. It should be clear. The second story relates to, and again this is on page 11 and Appendix 8, an ISME member in the East. The policy has been tracked for 6 years in terms of premium, in terms of claims, losses, etc., etc. The underwriter has made a surplus of 430,000 over these 6 years before reinsurance costs and overhead. This surplus of 430k represents an effective gross profit of 91%. The ISME member has had 4 claims over this 6-year period, total value of 45k. So the premium income is 430k. The claim total over 6 years is 45k. I'd love to see how the actuary priced this risk over these 6 years, as this is effectively price gouging. The ISME member, again, will not identify themselves for, again, fear of commercial retribution. When there's only one underwriter bidding for the business, if that bidding party withdraws, you're left uninsured. All brokers should be obliged to provide a 5-year claims history at renewal. The insurance industry will say that this will add to costs, it can't be done. It's done anyway, folks. This information has got to be produced anyway for an actuary to be able to price the risk. So when somebody says it can't be produced, it's already produced. There's no cost. And at least then the client will be in a position to make a business decision, seeing what is the premium, what are the claims over a 5-year period, is that an acceptable level of risk, is that an acceptable price or not. These are just two stories which I've told about members within the organisation. There are many, many, many other stories. And the common thread seems to be that there's only one underwriter bidding for the business. Is that by accident or is that by design? I don't know.
Thanks, Mr. Coughlin. Deputy McGrath.
Yeah, thanks very much, Chair. Welcome our guests from ISME and the Alliance for Insurance Reform. And if I may, Chair, maybe invite Linda Murray to just tell your own story, Linda, because the whole issue of insurance for play centres has come centre stage right now, and I think it's representative of issues facing a number of other sectors too, areas where there is a significant public footfall, pubs, nightclubs, restaurants, other parts of the leisure industry, leisure centres and so on like that. And as a parent of small children myself, I know well the value of play centres and the important role they play in society. So I'd just like to give you an opportunity to tell your story of Huckleberry's Den and the picture you're facing right now.
Good morning, everybody, and thank you, Minister McGrath, for asking me to talk. I'm absolutely honoured to be here. This is not something that I normally do, so I really am honoured, and thank you for asking me here. I'm Linda Murray from Huckleberry's Den in Navan, County Meath, and I also represent 60 businesses who have all come together, and we formed an organisation called PALI, which is Play Activity and Leisure Ireland. We had to form that organisation for a common goal, and it's to lobby for fair insurance for us. We're all in the leisure sector. We're made up of play centres, as mentioned, trampoline parks, pet farms, bowling alleys, karting tracks, basically places where families have fun. And it's something that we definitely don't want to lose in Ireland. We just cannot get fair insurance. We cannot get any insurance in lots of cases. Our premiums have risen anywhere from 379% to over 500% in the last 5 years. And in fact, my own insurance has risen by 1,040% in the last 6 years. Incredibly, though, our premiums far outweigh our claims. As an organisation, we pay €5 million over the last 5 years in premiums. We've paid €5 million in the last 5 years in premiums. We've had claims of just over €1 million. That's claims and reserves. In the last 5 years, only 200,000 of that €5 million has been paid out in claims in our sector. So there's 4.8 million sitting there, and I can't get insurance, and our group can't get fair insurance. In my own case, when I opened 6 years ago, my premium was €2,500. Last year, it was €16,500. And although I have been told I cannot get insurance, I have been advised that if I were to get it, that I would be expected to pay €26,000. Just a little increase of 1,040% since I opened 6 years ago. This is my livelihood. Sorry. Just 10 seconds. Sorry. No, okay, I'm sorry about that.
Maybe just tell us when your current policy expires, Linda,
Sure.
how long you've left.
I've 12 people employed at the moment, and I've 25 days left to get insurance. Why can't I, you may ask? I've had 2 claims in the last 5 years. One for a child who banged his head, and because he banged his head, I've been sued for anxiety. And the fact that the child is now unable to play with his friends or go to play centres or play in playgrounds. The reserve on this is €23,000, even though the child didn't suffer any injury. This is the only reason that I cannot get insurance. I am the only play centre in Navan. The other play centre closed 6 weeks ago. Navan has a population of 40,000 people, and there's lots of children that need to go and play, especially on rainy days, or need to go somewhere to have their kids' parties. And I really don't want to close in 25 days. My own case is horrific, but it's not unusual. We have centres across the length and breadth of the country getting told they are even lucky to get insurance, and to feel lucky that they're getting insurance. And when you're handed your premium or you're handed your quote, you're told, now this is what it is. Okay, it was 20,000 last year, it's 45,000 this year, but you're lucky you're getting it. And that is what we're told. We are genuinely told you're lucky you're getting it. All of our centres in the last year have received increases of between 100 and 300% on their premiums. So even centres that may have had no claims, for example, one down in Cork, which you're very familiar with, Minister McGrath, was paying just under €8,000 in insurance last year, has never had a claim, and was told we're very lucky to get a premium of €18,000 this year. What I would like to ask and to challenge our government is, save my livelihood, save the livelihoods of all our members, save the livelihoods of our staff, and give our kids somewhere to play, because within the next 12 to 24 months there may not be any play centres or leisure centres left if the insurance is allowed to keep going the way it is. I thank you for your time.
Thanks, Linda.
Sorry.
McGrath.
Yeah, thanks very much, Linda. And just to add to what you said there, I'm aware of another example, again Cork-based, where the quote that has been provided for the next 12 months is €32,000 for a play centre. You're probably familiar with it. It's over double last year's premium, and it's more than 6 times the 2017 premium. That's the level of growth, and the excess provision within the policy is going from €1,000 back in 2017 to €7,500 for each and every claim in the current proposed renewal.
And it's making centres consider not going without insurance, which, I mean, nobody wants to do. Like, insurance should be there, and it should be in centres for when there's, a proper injury where a centre has been negligent or something like that. I mean, that's what insurance is there for. We all need it in our lives. But centres are now proposing going without it, which is very risky. We don't want to do that. We want to be able to pay our insurance, but centres just can't afford it.
And just to give a sense of the impact that this will have if this trend continues. So you say Navan has a population of 40,000 people, and the other play centre closed just 6 weeks ago.
A lovely,
and if you close, is that it?
That's it. There's no other play centres in the town at all. So again, like lots of people, I know myself, I prefer to give my kids a party outside of the house. I don't really want people in, I don't want to be cleaning up after everyone after a long day. People live in apartments, they need somewhere to go. On rainy days, you need to go and be able to play. I mean, we've had people coming in with their kids. I mean, we've a very comfortable breastfeeding environment for women to come in with their babies, and then you see them growing up maybe 5 or 6 years later, and they're having their 5th birthday and their 6th birthday, and that's not going to be there anymore. Like, there's no trick up my sleeve. I have 25 days left, and that's it. And I have tried everything. I've worked on nothing but insurance since the beginning of January and a few months before that. And I can't get a quote. And when I say the figures like 5 million in premium, 1 million in claims, and that's including all the reserves, why can't an Irish insurer look at that? Why can't we get insurance on this island? Why do we even have to go across the water to get it? And to be told we're lucky to get it from there. Why can't we get it here? It actually beggars belief, and it's trickling out into other industries. I brought my own 2 children to gymnastics a couple of weeks ago, and when I was going in, the guy said to me, I'll need to get €10 each off you for the 2 kids for insurance. And I said, oh, is that not part of the membership? And he said, no, this is the first year we've had to do it. We're down to our last insurer, so we now have to charge everyone coming in for insurance. If it's now in gymnastics, I mean, I have soccer clubs ringing me saying, can I join in with you? If we can't even send our kids out to play a bit of hurling and football and gymnastics without the worry of them not being there because of insurance, what type of society are we showing our kids?
So I think what all of this brings home really is that the issue of insurance is now centre stage in sporting life, in civic life,
Definitely.
in business life, and in our cultural identity as a people. And if I can maybe ask you, Peter or Neil, just to take up the issue of like what you see as the core issues, and you've again outlined them in detail in the submissions. But when it comes to the issue of awards and the claims environment and trying to stop the current trend and to deal with that, like the roadmap that the government have laid out is the Judicial Council bill, the new guidelines for personal injury awards. Like, do you have faith that that is the right direction to go, and that if that bill becomes law and is enacted and we get guidelines, that it will change the direction that it's currently going in terms of awards?
Okay, well, could I clarify first that like the play centres and Linda in particular have been incredibly brave in going public on this, because it's a very upsetting and it's a very vulnerable time for them. And as I've emphasised in the report, there is a fear out there of alienating the only broker or underwriter who's now available, or of bringing additional claims on board, or of reflecting poorly on themselves personally or from a business point of view. But I can guarantee you that behind the play centres are a queue of sectors which are very close to this situation as well. And I can list off festivals, convenience stores, leisure centres, the entire adventure tourism industry, circuses, street artists, nightlife in Ireland is being severely hit by this issue, and charitable groups. So going to your point on the roadmap, I think it's abundantly clear at this stage there has been enough analysis. We had 2 exceptional reports in the Cost of Insurance Working Group report and the Personal Injuries Commission, both of them kick-started by the report that this committee did at the end of 2016. And that's enough analysis at this stage. We're well aware of what needs to be done. The problem that we have, as I've said already, is in terms of the pace of this action and the apparent lack of political reform, because when there was a similar crisis back in 2002, 2003, there seemed to be the political will to get stuff done, and the establishment of PIAB in particular was an incredibly complex piece of work, and it happened in less than 2 years. And we're looking at the Judicial Council Bill, which hit the Oireachtas in 2017, and is still slowly working its way through the Seanad and on its way to the Dáil. That suggests to us that the political will isn't there to resolve this. And we find this extraordinary in the sense that this is an issue that is solvable. The pathway is there. The government and the Oireachtas in general have many issues which are very difficult to resolve between housing, healthcare, obviously Brexit and all the other issues which are major distractions and are all very difficult to solve. This is solvable, the pathway is there, and the bit that's missing is the momentum and the political will to get it sorted.
But is that direction the right direction, that Judicial Council Bill? And if it is enacted and it becomes law and it's implemented, do you think that is what will make a difference to award levels?
We're policy holders. We don't have sufficient legal background or insurance background to say for sure. But what we know is that after all the expert analysis, it is this Judicial Council which has been tasked with reducing it. And if that's what the expert advice is saying, we're saying fair enough, but get it done quickly and get the results through quickly, because if we're still talking about this in another year's time, what will have happened in the meantime is that all of the small sectors around the periphery of Irish society will have been closed by this issue.
Can I ask Mr MacDonald just on the issue of fraud, and like how big a factor do you think it is? Okay, fraudulent claims, some claims are maybe exaggerated, like from talking to pub, nightclub owners, they would say it's a very significant factor, that a high percentage of claims are either completely bogus or are completely exaggerated. So, like, what is your perspective on that issue and your members? And do you think it's being dealt with? I mean, we have tried to get data on, have prosecutions been taken? Are there any convictions? And we can't get any of that data from the Department of Justice, the Court Service. Nobody seems to have it. I suspect it's because that there have been none.
There is a data black hole. You're absolutely right to point that out. And we've already seen in the latest update on the Cost of Insurance Working Group report that they say there isn't going to be one. Now, we've said that in view of Nicholas Kern's final report, it's absolutely clear that there needs to be a claim-by-claim database. We've asked Minister Darcy to reconsider that decision because we think it's wrong. But in the round, if I answer your question by saying, to a certain extent, if you're the owner of premises like James or Noel, it actually, to a certain extent, it's more angering if you feel it's a fraudulent claim, but the outcome at the end actually doesn't matter. The only difference is that you're getting sued by someone who knows that they don't have an injury, but you're still going to pay whether the claim is a legitimate one or not. So what we've said, and the reason we've made quantum number one, because Nicholas Kearns made this point in his summation, and that is the most important. Nicholas Kearns made a fantastic job, like Hansel and Gretel, of dropping the breadcrumbs for you people to follow in what the outcomes are required. He said that quantum is unjustifiably and unexplainably big in this country, and that is leading to all sorts of other consequences. So of course it's causing higher premiums, but it's also attracting criminality. And then he's saying, because we don't have not an effective mechanism, we don't have any mechanism. Minister Darcy is saying he can't tell the Gardaí what to do. We've suggested that this is a particular area of white-collar crime in which there is no enforcement whatsoever, and the courts don't enforce anything against them. To an extent, for someone like a play centre operator, it doesn't matter if you're getting sued by a fraudulent or a legitimate claim. As long as there's 30 or 40 or 50,000 euro of quantum there, there's going to be someone there. We've described it as a honeypot that's attracting all these people in, and it just has to be reduced. The last point I will make about that is, you collectively have been told in the Oireachtas that there's a problem with capping damages. The very first recommendation Nicholas Kearns made in his report that went back to the department, recommendation number one in the Personal Injuries Commission, cap damages by legislation. and then we have shown on documentation that was sourced under FOI by Mark Tighe in the Sunday Times that was immediately nobbled by the lawyers, and that was taken out. Justice Kearns very cleverly left the same recommendation in. He's just said, well, we think the Judicial Council is the way to go, or the way to achieve the same thing. I have to say that there's a possibility that a Judicial Council could sit down and decide to maintain damages at the same level, or 60 or 70%. That would not be a solution. So in our view, this is a public policy matter. It's not a matter for court procedure or judges, and respectfully we suggest it's your job to cap damages.
Final observation, Chair, and it's just a comment I want to make, and it's really just to commend Linda, you and the other business owners who have spoken out, and in a sense you've nothing to lose at this stage, but telling your own individual story, bringing the humanity of what is involved here to the fore is really important. And when I look back at the work we did as a committee on the tracker mortgage scandal, the tide turned when those affected by the tracker mortgage issue came before the committee and told their story. They were totally outside their comfort zone, of course, bared their soul, told their story, and that's when the tide turned. And I just want to make the final observation. Peter, you spoke about the issue of political will. I mean, my own observation on that is I think Minister Michael Darcy is doing his best, but he is a lone voice within government. The Minister for Finance has completely delegated this whole issue of insurance to Minister of State Darcy. The Minister for Justice seems to have no interest in the issue. I never hear the Minister for Business and Enterprise even talking about the issue. When we had the private members' motion at the Dáil a few weeks ago, Minister Darcy was there pretty much on his own throughout the whole debate. So there is one person in government even attempting to do something about this, and that's just not good enough. So there is a lack of political will, and all that I can say to all of you from our perspective, as a party at least, is for whatever period is left in this Dáil, we will hold our feet to the fire on this issue to deliver action. We know what's at stake. Thank you.
That long we hope. Deputy Doherty.
I want to welcome you to the committee, and Linda, particularly your own contribution. I know it was difficult for you, and for somebody who's invested so much of their life and their expertise and the resources into a business, and facing that uncertain outcome in 25 days. And maybe if I can start with this line of questioning, because many of us here are familiar with other play centres that unfortunately have closed down in my own constituency, or some of them who are facing the same future as yourself and the uncertainty. But if you can explain to anybody who's listening, why is it that insurance companies won't insure, or that no insurance company will insure a soft play centre in Ireland? And is it the case that there's only one that was insuring and they're now in Britain, and now they're pulling out of the market? Or if you can explain why this is coming to this point at this point in time.
Historically, I don't know why we can't get insurance in Ireland. I'm in the leisure sector 11 years. It's just never even been brought up. You just go to your broker all those years ago and they just tell you, leisure centres don't get insurance in Ireland. So it's always been across the water for me. But what they have told me, they being the insurance company in the UK, is that Ireland is seen as a loss-making nation when it comes to insurance, and that it's just way higher than what they would do in the UK in terms of insurance and in terms of claims, and they have no interest, were their words, in insuring play centres in Ireland, especially not any that would have a claim or two claims, and for the centres that don't have any, that their increases are going up by 100 or 200% to cope with any potential claims that may come into their business. What I have noticed is that there seems to be a cycle of insurance companies from the UK coming in every 3 or 4 years and then leaving again. We never have had a choice of insurance companies to choose from. So they just see us as loss-making. But, as our figures show, when you put all the figures together for us as a group, we're not. But what I've been told is that they're afraid of what could potentially happen given the type of awards that are given out. like even with our group scheme that we're presenting at the moment, like when I saw our top line figures, like when I entered into this a few months ago, I genuinely thought the biggest reason for all of this was because of claims, and that maybe our insurance premiums probably matched or were somewhere near what the claims were. But when I see that there's a huge disparity between the two, I then asked, well, if there is so much money to be made on us as an industry, why can't we get insurance? And it's the fear of what can happen because of the type of awards that are given out, is what I've been told. It's the fear of just breakages, like a broken arm or a broken finger. It's not catastrophic injuries. It's the fear of the breakages. Like most of our injuries will be soft tissue injuries, like bruises and a split lip, or they're the ones that are getting the 15 or 20,000. It's not in a lot of cases the broken arms, but they're afraid of 8 centres suing for broken arms within this group scheme could be potentially, 200 or 250,000 of a payout. Do you know the way? So it's just, they're worried about that.
Yeah, but the level of payouts, say over the you gave figures in terms of the last 5 years where 5 million has been paid by the group and €1 million has been either
Reserved.
paid out or reserved. So there's huge profitability within this.
100%.
But the figure, the level for payouts and awards hasn't increased dramatically over the last 5 years. So there, unless there was a surge in claims within the centres, then I can't understand why an insurance...
We don't find that. Half our centres don't even have claims. This is what doesn't make any sense, and this is why I said I challenge an Irish underwriter, an Irish insurance company to look at us, because we don't. Obviously, my own case, there are exaggerated and fraudulent claims, but and you hate seeing them coming through the door, and there's a lot of sleepless nights over them. But as a sector, we don't have a huge amount of them. There doesn't seem to be a huge increase in them, but yet our premiums are going up by 300%, and some of us can't get insurance. There seems to be. There's no transparency in how all this is calculated.
Yeah.
There's when my insurance went from 8,000 to 16,000 2 years ago, and I asked the question why, the broker was just like, this is just the way it is. I had no claims in that year, but I went from 8 to 16,500. And when you question it, it's just like, listen, there's one underwriter that's going to insure you. This is it. This, and I took out a personal loan to pay that. Because there's no way you'd have it. Do you know the way? So, and you pay it then over the year, and you just pray that you're not going to get a claim within that year. We're all literally on tender hooks. And the bigger effect is that a lot of us are in units and industrial parks. A lot of leisure centres are, where you have to take out a 4-year and 9-month lease. How in God's name do you take out a lease for 4 years and 9 months when you don't know what your insurance is going to be next year or the year after? How do you say to a bank that you can take out a 5-year loan to pay for a new set of laser tag equipment like we got there a couple of weeks ago, and be able to say we'll pay it over a few years when you don't know where you're going to be with insurance in a year's time? I didn't know a year ago I wouldn't get insurance this year.
Given the clock is ticking down for yourself, you're talking about 25 days. For others, it's just a case of when the renewal premium, it may be September, October, or maybe in a couple of months that their renewal's up for renewal. What do you believe can be done or should be done?
I'm not very strong when it comes to the law, and so forgive me for basic English. And I don't understand why we can't shop in the European market, and why we can't get an insurance company in. And I also don't understand why an Irish insurer, we saw Irish insurers are posting profits of 200 million there, the 3 or 4 big ones. And you can see the profit in our business, and we can't get one. We need an insurance company to be able to insure us. We need that where there's a fraudulent or an exaggerated claim, that something is done. So in other words, if I walk into a soft play centre with my child and they suffer an injury, I shouldn't immediately think to myself, what could I get for that? And that's what some people are thinking is, what could I get for it? And then they're kind of thinking, well, I might as well just try and go and claim and see if I can get something. Sure, nothing's going to happen to me afterwards anyway. I'm not going to be prosecuted if they find that it's fraudulent or exaggerated. That needs to be nipped in the bud in people's mentality. They need to think, well, if they find out that my child really didn't suffer that big an injury, I could face a fine or I could face prosecution. I think, getting to the start of people, getting into people's minds is very important. So we need, like we can see in the UK, somebody putting in a fraudulent claim, jail time. I mean, we can see that it happens, and it doesn't happen here. And I don't think anybody has even been prosecuted here for anything to do with public liability. Again, I don't know all the facts, but I don't think anybody has. So that needs to change. We need to be able to have an insurance company, and we need to be able to have competitiveness and not a monopoly. And we need to, so that companies aren't faced with having to either go without insurance, or what we're looking at the moment, and we shouldn't have to, is we're looking at self-insurance, and it's so risky. But as a group, we're just trying to think of all different ways of trying to stay in business. We love what we do. I mean, we love being in this business. We love to see tourists coming in. We love to see families coming in. I mean, where would you be if you couldn't go and do a bit of bowling somewhere down the country? Or, I mean, there was one of our members on the Sean O'Rourke show yesterday, and its premium has gone from just under 10,000 to 25,000 with no claims in the last year. A bowling alley. I mean, there's very little that can go wrong apart from a ball stomping your toe. Do you know the way? Yeah. But the same bowling alley in the UK would probably have insurance of 2,000 or 3,000. Yeah. One of our members does the trains in the shopping centres. You know, when you go into like Swords Pavilions or somewhere and you can get into a little train with the kids and go around. And he does it in the UK and Ireland. And in the UK, he could get all of it insured for £1,500. And here, his latest insurance quote is 33,000 for the same industry. It's trains going around a shopping centre.
That's appalling. Peter, like, the Alliance represents, these are made up of a wide range of groups, including the soft play areas, but as was said by Linda and Deputy McGrath, this is way wider than just one sector. We've had the GA talking to us, we've had other sporting organisations, community groups, we've had festivals that can't go ahead because of insurance groups. St Patrick's Day's parades are being put into question as a result of insurance, and then the real sharp impact in terms of businesses and jobs, and the impact, the flow on from that about being able to keep the roof over your head for employees who've lost their job and all the rest. In this situation where there is that type of monopoly, or that the state doesn't provide insurance to a certain sector, has the Alliance engaged with Insurance Ireland, and has Insurance Ireland given a legitimate reason why they haven't done it? Like, I kind of recall, it's not similar, but if you don't get motor insurance from a company, then there's a scheme within Insurance Ireland where you go and you say, look, you've been refused a quote in terms of motor insurance, and they then agree to provide you a quote. Doesn't need to mean that it's a reasonable quote, but at least that there's a quote there. Whereas in this situation, there is no quote. They can, like businesses here operating in this state cannot get insurance from companies and from their representatives, who are very profitable now in the state. Has there been engagement with Insurance Ireland, and what's the rationale for?
There has, absolutely, Deputy Doherty, and I'd say our perspective on this is evolving, because we didn't start as an alliance which could analyse this crisis in detail. We started and remained as an alliance that is representing the crisis that our policyholders, our members are experiencing. But yes, we have engaged, and we've developed a much broader perspective over the last while. And I'd go back to one of your original comments on this. Historically, we have had very high levels of awards in this country, and historically, we have had very high levels of claims. So these are serious issues which have fed into this crisis and which need to be addressed. But what we haven't seen, and in our engagement with the insurance industry we haven't received, is any data that would justify the spike that we've seen over the last number of years. So motor insurance, where we have data, and I'm conscious of the fact that this is the Finance Committee and that we're representing businesses today, but we don't have any data to explain what's happening. And I'm going to ask Jerry Monks to give a little bit of an insight from the point of view of family grocery stores in a minute. But from the motor side, from January 2014 to December 2016, we saw a 70% spike in motor insurance premiums. We did not see a spike in claims or a spike in awards that would justify that. So there is no clarity in this area, and as Linda has already said, we're now at a situation where the insurers are coming back into very healthy profits across the sector, and that's despite the fact that, and we don't have clarity on this either, but our understanding is that management fees transferred back to parent companies remain an issue. We have no blue book, so we can't prove that. The extent to which insurance companies reserve for potential losses has increased dramatically over the last number of years, prompted by the central bank. And again, our understanding is that they're over-reserving at this stage, so they get ploughed back into profitability as well. So we're faced here with a sector that has historically, or an interest group in the lawyers, which has historically done very well out of this sector. And on the other side, insurers who over any 10-year period always make a profit. And we're the jam in the middle. But we haven't got clear answers, and we don't have the data to explain it, and that's certainly part of the problem. Now, Jerry Monks, well, I'll let Jerry introduce himself, but he has put together some data on another sector just to show that this isn't a very specific issue for one sector.
Yes, thank you, Peter. Jerry Monks, Account Director with JDM Insurance. I've been looking after retailers, shops, convenience stores typically right across the country for over 20 years in my 43-year insurance career. These are commercial businesses, but they're families. And the level of increase, when I looked at an analysis for the purposes of this exercise, I deliberately wanted to make sure I wasn't picking out cases with claims, so I whittled it down to a certain number, and I came up with the figure of 73% over a 5-year period is the average increase that has been applied to these businesses. Of the 29 selected cases, 15 of them were claim-free. I took out of it extraordinary figures to try and make it read realistically. Insurance is broken in Ireland, and the very simple fact is that we seem to feel that somehow we will tolerate levels of payments for minor to any class of injury that are multiples of that of countries, for example, our nearest neighbour, where they have a population of more than 10 times our size, and yet we're paying out somewhere around about 4 times the amount that they are. The figures don't add up. It doesn't work. We don't have the numbers to justify it. The amount of reservings being placed by insurers has, of course, increased in accordance with central bank best practices, and nobody's going to argue with that. And then the amount of time, claims don't come and go inside of a matter of weeks or months, but years, and I'm talking, numbers of years. So an outstanding claim can sit there for 4 years, and in the meantime, the policyholder, that family, will be faced with an increased bill based upon the fact that it's like a claim paid, even if it's a claim outstanding or reserved for. Even if ultimately where it's found that the claim goes away and all that the insurer has incurred was their own investigation costs. Nevertheless, that premium increase has happened. It's history now. Yeah. The insurers don't have the makeup, in which case they go back to everybody and say, hold on now, we owe Joe Bloggs back from 4 years ago, etc. They look at the end of every year and they balance out what they need to make sure that they're not going into the red, because if they do, the central bank will close them down.
Look, I want to ask just a final kind of round of questions. I'll put a number of questions out here, if that's okay, because I'm conscious there's a lot of other questioners here. One is, Mr. Monks, I hear what you're saying, and I agree in terms of some of the exaggerated awards that are being paid. My fear is, while that needs to be addressed, I don't believe that the insurance sector will actually reduce premiums accordingly. I don't trust them. I think there's a cartel going on here. I think Linda's example of 5 million in premiums, 1 million in reserves, it shows that there's price gouging going on here. Now, Mr. Boland, you made a point in your opening statement about the commitment from insurers to reduce prices alongside reforms. Now, we've seen the agricultural sector, for example. We've seen FBD say, look, do your additional measures in terms of safety measures, your cameras and all the rest. prices will go down. Prices haven't gone down. They've actually, insurance premiums have gone dramatically increased, which has closed some of our rural marts, which is the fabric of our rural communities in many places. So do we need to revisit before there is any more reforms from this level, that a commitment such as the commitment that was there in 2002, that if you do this, then insurance premiums will reduce by this amount of percentage, which was the table that was agreed at that point in time. The second thing I want to ask is the issue in terms of fraudulent claims. And there's been a lot of talk in relation to fraudulent claims. We've had the insurance industry tell us that it places €50 on all motor insurance premiums and all the rest, so you can imagine that it's absolutely huge, and it's not just motorists, it's in other claims and so on and so forth. I would like to make this point that a lot of people out there don't claim from their insurance, even when there's legitimate claims, and I think the model's broken. Like a tree fell in my car, or a tree fell across the road and the car ran into it just a couple of weeks ago. There's no chance that I would go and claim for the insurance, because they'll throw up my premium, which is twice as the amount that it would cost to fix the car. So, and many people do that when they have small minor accidents in their own motor insurance. They simply do not go to their insurance company. So the sector, it is broken, because you're penalised for actually claiming and using the insurance you have. But in terms of fraudulent claims, what we have for the first time is statistics, because insurance companies now have to report fraudulent claims or suspected fraudulent claims to the Gardaí. And what we find, and I found this quite surprising, is that from the 1st of October to the end of February, which is 5 full months, that there were only 19 cases of fraudulent claims right across the insurance sector. That's public liability, motor insurance and all the rest. Now, either the insurance companies aren't reporting what they are saying, or they're over-exaggerating the amount of fraudulent claims to justify the price gouging that's going on, or there's something wrong. Now, that doesn't take away from the point that there needs to be a Garda insurance fraud unit, and we're very, very strong in relation to that. I think the committee's quite united in relation to that issue, and it should happen without delay. But is the situation in terms of insurance fraud as big as the insurance companies are telling us? Or if it is as big, then why are they only reporting, 3 cases per month across all sectors of insurance? And their suspected fraudulent claims, some of them may not be at all. So I'd like to finish with those 2 questions.
Okay, I'll deal with those in order, if that's okay. The first is in terms of commitments to reductions from the insurance companies. Absolutely, we've made it we have quite a list of reforms that we think are necessary, but we're very conscious of the amount of traffic going through the Oireachtas at the moment, and we want to try and stay very focused. And it is one of the top 3 items on our list, because there is an enormous amount of work going into this at the moment. There is an enormous amount of pain being caused by insurance premiums. And if we thought that we would come out the end of this crisis and that there would be no reductions in insurance premiums to follow, then obviously that would have catastrophic consequences. So it is essential at this stage that we get some clarity from the insurers as to what the benefits of all this work are. Now, I'm conscious that things have moved on since 2002, and in terms of competition law and all the rest, there may be complications. But in our view, that's why we've asked that the Department of Finance address this issue and do it from a state point of view, because the state is inextricably linked with this issue, because we are very often legally obliged to have insurance, whether it's motor or in many cases liability. It is the state and the organs of the state which are obliging us to have insurance, so they cannot give the impression that they're a third party on this issue. And so we're looking for that kind of commitment from the insurers via the state as quickly as possible. On the fraudulent claims, I'm aware of the data that you mentioned. We welcome any clarity or transparency in this whole area. I'm not here to speak on behalf of the insurers, but my understanding from some insurance companies is that when they make what they call Section 19 complaints on suspected insurance fraud, that they are not yet being logged on Pulse. That is what I've been told by somebody anonymously. I cannot verify that one way or the other. I would be surprised at the low levels of fraud as they're reported as yet. And certainly the experience of our members is that it's a good deal more prevalent than that.
I can just clarify that issue for the benefit of the committee, because this is from the Minister for Justice. We've got the information from the Gardaí. He says that in the period of October the 1st of 2018 to the 28th of February 2019, there were 19 incidents of insurance companies reporting insurance claim fraud as per the stated guidelines. And Garda Síochána have advised that crime counting rules have not been applied to this data, and that is the counting in recording this data on pulse. However, while it's not being counted on pulse, which it should be so that we can have ease of access, that is the total number of claims that have been reported by the insurance industry, which is, in my view, a bit concerning. Either they're not taking this seriously enough, or I don't know why.
Yeah.
Yeah, if I jump in there first, Deputy Doherty, and deal with that one first. We've covered that on page 7 of our submission, and there may also be a reluctance of defendants, and by defendants I mean policyholders and insurance companies, to invoke the fraudulent thing under Section 26 of the 2004 Act, and because there is case law on this, and we've quoted it in the middle of page 7, where Mr Justice Kevin Cross said, and I won't read out that whole paragraph, it's in the middle of page 7, but he said that because in his view the 2004 Act is so pro-defendant, which we would have an issue with in the first case, he said, I think aggravated or exemplary damages is the only real deterrent to an irresponsible or indeed over-enthusiastic invocation of such a plea. What that means in simple English is, if a defendant suggests in defending his or her claim that the claimant is making a fraudulent claim and they don't succeed with that assertion, not alone will the plaintiff get damages, they can get aggravated or exemplary damages. So that's crimping a lot of activity in that sector. The other question you raised, Deputy Doherty, was if awards came down, premiums might not. I'll qualify that very slightly for you by saying, in our view, premiums absolutely will tumble, but in a competitive market only. And we actually do have CSO data on that. So when PIAB came in 2003, from peak to trough, the CSO tells us that the cost of motor insurance came down 41% in 4 years after the introduction of PIAB. Now, bearing in mind, PIAB was not reducing awards in that period. PIAB was paying out what the judges were paying out, but they were doing it on payment of €45 through PIAB. But the motor insurance market is a competitive market, number one, and number two, you're legally obliged to have it. Some of the problems you've heard today are from people who have a single underwriter. So I'll qualify this by saying, if we have a robust competitive market, if you reduce awards, premiums will fall, but only where there's more than one underwriter.
Thanks, Chairman. I want to welcome everyone, in particular Linda. It's very compelling. Can I just, on practical measures, and I suppose first take up Mr Boland, and the Judicial Council Bill is going through the Shannon at the moment, and you're probably aware that the Minister is bringing in an amendment at report stage for the Book of Quantum to be reviewed by Judicial Council, right? I'll give an assurance here, along with my other Shannon colleagues, that we'll be looking to get that in as quickly as possible. Once that goes through, obviously then it goes to the Dáil to be put through. And the question I suppose I want to ask there is a couple of things that I need to understand. We were told that, the Court of Appeal, that you said, what makes the delay? My understanding is, with the Court of Appeal, the awards are actually coming down, right? Am I correct?
On appeal, that's correct.
Okay. So, with the Court of Appeal, should that not be acting as a kind of quasi-Book of Quantum? in terms of the we'll say, the other courts. So if I'm awarding something in the High Court, surely I'm required to take reference with the Court of Appeal. That becomes the precedent case. It becomes a quasi-book of quantum, updated book of quantum.
Yep. The issue is, and it's been referred to in a number of High Court cases, is that there is a cap at 450,000 for catastrophic injury. There is the principle of proportionality and of common sense as given by the Court of Appeal, but there is no scale on this.
No, and I have a more straightforward question. If I have a case before the Court of Appeal, and let's say for argument's sake that was whiplash, I don't know the figure, let's say it's a whiplash, and that whiplash gets you, we'll say in the High Court that you were getting, what would a typical whiplash be getting?
For very minor, it's averaging at about €17,500.
Okay. Now, some of those must have come in before the Court of Appeal and giving lower awards. Am I correct, Mr. Boland?
I'd be very surprised if an award at that level went to the Court of Appeal.
Okay.
So particularly given that the current waiting list is 2 years.
For the Court of Appeal?
For the Court of Appeal, yeah.
So, at the moment, have you taken the matter up in terms of why it's taking 2 years in terms of the Court of Appeal?
Well, I gather that that's been addressed by the Department of Justice at the moment. But it's important to make this point, and you're absolutely right to raise it, Senator. The bulk of the issue, as we see it, and has constantly been the bulk of the issue, is the level of very minor awards, the awards for very minor injuries, or paracetamol injuries, as they've been called quite regularly over the last while. So the kind of case that goes to the Court of Appeal is typically for quite substantial injuries. And I don't think anyone in this room would question the right of somebody who's been seriously injured to get sufficient general damages to cover their pain and suffering. That is not the issue. The issue is at the bottom end of the scale for minor soft tissue injuries, and it's important to note that it's not just whiplash, but it extends right across the scale. So, for example, in the Book of Quantum at the moment, if I bruise my thumb with no ligament damage, no breakage, and a certain amount of swelling, fully recovered in a short period of time, the Book of Quantum entitles me to up to €21,200 for that injury. That is what is driving this issue from...
Can I understand the question? The Book of Quantum, right, is that based on cases that have precedent cases that have come up before the High Court?
As it stands, that's exactly what it's based on.
So when we're being told that the Court of Appeal, and we are hearing that the Court of Appeal will bring down, many solicitors have said it to me, the cases, the awards of cases are coming on the Court of Appeal. That relates to a very minor number of actual type of, it's very much at the upper end, major injury, and there's a 2-year delay. So in essence, the Court of Appeal is not influencing the awards, mainstream awards.
I'm afraid that by the time the Court of Appeal had an influence on minor damages, neither yourself nor myself will be part of the equation, Senator.
We talk, and I've said this before, I'm utterly frustrated because there's a déjà vu here. I want to know precisely what we have to do to make the changes, right? This Court of Appeal, right, which we were told about, isn't actually the panacea for the problems, right? But we need to understand, with the Book of Quantum, right, is that based on precedence awards within the High Court?
Within the courts?
Yes.
That's correct.
So the Book of Quantum, so is that updated in terms of the awards that would have happened in any particular period?
Over a period of about 2 to 3 years.
It's a moving document.
It was renewed last in November 2016 and is due for renewal at the end of this year. But it will not, slow reform of this area will not work for us, because for the likes of Linda and Jerry's clients, that's not going to cut it at all. And this is why, after all of the analysis that's been done, the reporting that's been done, the solution that was put forward by the Personal Injuries Commission was a judicial council. We have to accept that there is solid advice behind that. and so we've chosen to back it. Now, many of our members would suggest that asking a Judicial Council to reform quantum is like putting a fox in charge of the chicken coop. But we are well aware that there are a lot of very wise heads within the judiciary, particularly at the Court of Appeal and Supreme Court level, and we're relying on them. First of all, we're relying on the Oireachtas to move quickly to get this bill through.
That's fair
it's
comment
absolutely
on your
essential
part,
from
yeah.
our point of view, with the amendment which you mentioned. And secondly, that when that happens, it is up to the Judicial Council to step up to the mark on behalf of society and address this.
So, and before I bring in Mr. MacDonald, the next de facto review of Book of Quantum is taking place what date?
It's scheduled as it stands according to the PIAB Amendment Act, which was passed last month. It's scheduled for November of this year.
Okay, and is that adequate time in the north? Like, if they go ahead and that review is done, and it's done by the Judicial Council with whatever changes are required under the Judicial the bill that's going through at the moment will come through a report stage on the review of Book of Quantum. Is that adequate time?
I would suggest it's very tight. I'm not an expert in this area, but it sounds very tight to me, and it will require an enormous amount of effort from both houses here and from the judiciary to hit that deadline.
Mr. MacDonald.
So, first of all, you're absolutely right that there has been an element of sanity brought into proceedings by the Court of Appeal and before them the Supreme Court, and they have introduced effective caps on what they would call catastrophic damages. And funnily enough, some of the figures, now there aren't a lot of figures out there on catastrophic, but what they do suggest is, interestingly, Ireland's payouts in terms of those really serious injuries actually are not out of line internationally and may even be below international comparison. But that's not where the damages get.
That's the point.
And I'm going to, our former chairman will give you a good example in a second of where this happens. Where the damage has been done to small businesses is at the lower end of quantum. The whiplash stuff is all below, effectively it's all below, all the action is below €21,000. The circuit court jurisdiction is 60,000, and interestingly enough, you see all the plaintiffs coming into the circuit court looking for €60,000. So you have to start understanding what's driving the behaviours here. They don't want to risk it in the High Court, even though the High Court jurisdiction is unlimited. So we have a circuit court with a cap of 60 where all the action is happening. Very few of them go to the High Court, although there are a few in...
What's the level of district? Is it 15 at this
15 at the moment. And then the sky's the limit after that. But the difficulty is no business, not alone are they not going to be able to afford to appeal a circuit to the High Court. No insurer is going to even let you exercise an appeal to the circuit, to the Court of Appeal. It's not going to happen. Not alone that, and this is where I'd like our former chairman to jump in. The issue of costs is being used to blackmail you into early settlement, and if he's happy to discuss a couple of cases.
Okay. Thanks, Neil. I suppose to illustrate the point, Senator, if you look at, for example, the ISME submission, if you go to page 7, and if you look at the bottom there, and again, you know, Neil hasn't written this report sort of off the top of his head. He has, you know, he has worked closely with members, and that paragraph, there's a short paragraph that reads, "Our members advise us that one of the most important considerations before they defend a case in court is the name of the trial judge. It is one of a small number of judges. If it is one of a small number of judges with a pro-plaintiff renown, they will instruct their counsel to settle, or counsel will instruct them to settle, irrespective of the merits and strength of their defence." Now, my experience as an operator is that, again, going back to the circuit court limit of 60k, I've had an experience where, having won decisively a case in the circuit court, where the judge was scathing with respect to the plaintiff in summing up the case and in awarding, not just awarding us costs and the case effectively, within a matter of days, we get a phone call from the solicitor acting for the plaintiff. And effectively, you know what I'm going to say, and his words were, you know, I need to earn my fees out of this, so I'm going to appeal this to the High Court unless you pay me X amount of money. That cost me my excess. Now, why would I not want to go to the High Court to defend the case which I've clearly won hands down? I go back to the paragraph just read out.
Did you pay out in that? Did
Yes.
your insurance company pay
Yes.
out? And,
And they asked me my opinion on it,
yeah.
which is unusual. And I said, look, what's the downside? The downside is you go to the High Court, and I refer you again back to the paragraph I've just read. If you get a certain kind of judge,
But
it'll go the other way.
In your case, if you had said to the insurance company, I want to go to the High Court, would they have gone to the High Court?
I think that's why they tend to settle, because they know that they take a huge risk. They've just had a success, and are they going to risk that success by going to a higher court where the cost implications
If
are
the
massive?
reform of the Book of Quantum takes place,
Yeah.
right, will it make that difference? And what reform should it take? And I know you can talk. I think Minister Michael Darcy, I think he genuinely wants to get the Book of Quantum reformed, right? He was hounding us in terms of making sure it was coming in before the Shannon. I've spoken to Minister Charlie Flanagan. It will be in report stage. We will get it through as quickly as possible. But it's not just about getting it through. It's precisely the contents of what we get through. I'm not an authority in the Book of Quantum, but I know that the problem at the moment here is, and I want to then deal with Linda and Jerry about people being able to get insurance, right? Like we've had a myriad of these meetings. Will the Book of Quantum make that significant difference in terms of the awards? And could it have an indirect impact, positive impact, in allowing the likes of Linda and Jerry's clients being able to get insurance cover? Not only get cover, but get cover at a realistic rate.
If I might respectfully suggest that this committee will need to ask that question of insurers. Now, I'm well aware that you have FBD coming in later this morning, but the question needs to be asked of the broader insurance industry. We have been told by everyone with expertise in this area that the pivotal part of this is getting quantum for minor, fully recovered injuries down quickly.
And the benchmark for that Book of Quantum will be what? It can't be what's come in the courts in previous years, because that's going to reflect the continuing higher rates. So what will have to be their terms of reference?
Well,
in
essentially,
terms of reviewing the Book of Quantum?
As it stands, and if I had a flip chart, I'd do an illustration of it, but essentially the chart in Ireland in terms of the level of awards for injuries, I'll start with the rest of the world. Essentially for the rest of the world, the level of awards is a straight line. So as the level of injury increases, the level of award increases. And it's a straight line from zero to the maximum. In Ireland, it shoots up.
It's a bell shape.
Right from the start, you're into serious money.
Yeah, but you see, I want to know, Mr. Boland, when this legislation is going through the Shannon, right? I want to know, in terms of the review of the Book of Quantum, what form that would have to take. Was there a recommendation from the committee that recommended it going to the Judicial Council? The terms of reference will be key here. So what's their benchmark? Is it international benchmark? What's the benchmark to get the Book of Quantum, Mr. MacDonald? Yeah. I just want to deal in facts.
That's an absolutely fair question. So bearing in mind what I said earlier, at catastrophic, people in wheelchairs, we don't pay.
Fine.
That's also an area where we need real interaction with our health system. So you shouldn't need to win the lotto if you get put in a wheelchair. You know, that's where the health system and a thing called PPOs, payment orders, need to take over. So it's at the lower end. So again, back to my comments on what Nicholas Kern said in his second and final report. We're at 4.4 times payout in the nearest jurisdiction, which is already an international outlier. So by comparison with, if we're not in it, the UK is the worst. So at the lower end, to put it in very simple English, if we are to equate ourselves to one of the worst jurisdictions in the world, the UK, in terms of generosity, at the lower end, our awards need to be an absolute maximum of 23%.
I don't. So in essence, up to now, the Book of Quantum has been a review of what would have gone through the courts over the previous number of years in Ireland. The latest Book of Quantum, the next review, will have to be about benchmarking that to international norms.
Take it down by 80% at the lower end.
Well, then can I take it on another step, right? Because I'm conscious, we have people coming to us that can't get insurance. The likes of Linda, with people paying crazy rates. I met a man recently, he's in a recovery business for vehicles. His insurance has gone up threefold in the last 3 years. So the question I suppose I want to ask is, what is required, and Mr Monks, I'll go to you first because that's your business. What do you believe is required to ensure the likes of Linda Murray can get, and her other play schools and creches, that they will be able to not only get insurance, but get insurance at a reasonable cost? And what's the game changer in terms of providing insurance, both in terms of providing the cover, availability, and also at a reasonable rate? What's the game changer for you?
Well, I think a little earlier, Deputy Doherty was referring to the fraudulent claims. That's the very tip of the iceberg. The real problem that goes way, way, way deeper is the exaggeration, the amount being awarded for minor injuries. The simple fact is that accidents do and will happen, but how we reward them in this country will encourage people to make formal claims and go legal.
So the Book of Quantum is key?
Book of Quantum is absolute key.
So is that if the Book of Quantum is reformed to international norms, will that be the game changer, not only in terms of awards, but in terms of underwriting and providing insurance across a range of areas with a number of competitors at a reasonable rate? Because that's what we need to, like, we're talking about a myriad of things, and you're saying it's not one thing or the other.
I think you have to understand that these are desperation stakes for our members now at this stage.
I accept that.
And so when we drafted our presentation,
positive here.
Yeah, absolutely. And when we drafted this presentation initially, there were a list of 9 different actions that we were asking for, and an appendix including quite a few more, because it is a complex industry. But then we were very cognizant of the fact that the Oireachtas is very busy at the moment with a lot of major priorities, and so we whittled it down to the 3 that are absolutely essential, and the Book of Quantum is top of that list because it drives so many other aspects of the issue, most of which we've outlined at this stage, and I would add an additional one to it in that it tends to muddy the water in an area which has so little data available. And it probably goes back to a point that Deputy Doherty raised already. It does tend to muddy the water in terms of proper analysis, because the absolute sense of injustice that people feel when a fraudulent or exaggerated claim is made against them is palpable. So that's the driver of it, Quantum, and it needs to be resolved.
And finally, Linda.
Yeah.
Finally, Linda.
If I could just add to all of this, we're talking a good bit about Court of Appeals and High Courts and courts and all that type of thing. I wish our cases got to court. Ours don't get to court. We're being put out of business because of the settling culture. And it's because of the costs surrounding all of that. So, for example, my latest one, I spoke to the loss adjuster there a couple of weeks ago, and I said, you know, I'm coming up to a month before my insurance is going to run out, and she said, Linda, it's very simple. Settle this now. Settle this case, and you've probably a chance of getting insurance. And I said, but that's not right. This is a fraudulent a highly exaggerated, possibly fraudulent case. It's not right to settle it. All I'm doing there is just letting the cycle continue. We have to fight it, and
well, we'll work to bring the Book of Quantum reforms through as quickly as possible.
Yeah.
Thank you.
Thank you.
Good. And thank you all, and Linda, thank you very much for sharing with us, because I really think it brings it home to us that there's absolutely no doubt whatsoever that we have a complete and entire market failure in relation to insurance. So we've had report after report, substantial reports which we worked on here ourselves, and it hasn't happened. We don't have the transparency that we need. I was just going through, as you were talking there, the 8th progress update report on it, and the impression is that we are making progress. And in relation to motor claims, we have the CSO figures, which I cannot at all get my head around, because it doesn't relate to my experiences on the ground or my experiences in the research that I have done, that motor insurance has gone down 23%. Everybody has asked. I have done surveys, I have done everything, and that doesn't reflect that. And maybe that's just something I want to ask any of you. The CSO figures that we're getting on insurance, are you confident that all of the information is being gathered by the CSO to reflect what's actually happening?
I think we've looked at that in quite a bit of detail, Senator, and basically what happens with the CSO figures is that the CSO contact the insurers are aware that it's the CSO contacting them, and they give a set of quotes related to the type of policies that the CSO measure. It's not an ideal approach to putting together data in an area like insurance, which is so fraught with difficulties. It's better than on liability, where there's no data at all, but certainly on the motor, as we understand it, the data that they're generating is for a very specific type of premium. And so if you're asking people around the country about whether it reflects their experience or not, very often they may not be in whatever the category is that the CSO pick. And certainly our experience would be that younger drivers, drivers of older cars, drivers of commercial vehicles are still getting hammered and are not experiencing reductions.
Yeah.
But for a very specific area, which I suspect is a standard family based somewhere outside of Dublin, I think you would expect to see their premiums reducing at the moment, but we're not at all convinced that that's widespread. Now, you have to take the good with the bad. So everybody was quite willing to use that plus 70 over the last few years to act as a prompt for action, and I think that was entirely valid at the time. So there is some validity in the figures and in the response to them, but we're not at all convinced that the model that they're using covers a wide area.
Yeah, that's interesting. And I think that's important to point that out, because I think we are being lulled into a sense that, something is happening and something is moving, and all these reports have brought about the impact that we wanted to have brought out when they don't.
And on that very point, the report that you held in your hand there has in total 100 actions, as they're called. And we did quite a detailed analysis of them, and 71 of those 100 are process actions. They're meetings, reviews, reports, consultations, liaisons, etc. But not in any way, shape or form would you call them actions that might actually get some sort of reform in place.
Yeah.
So there's only 29 in that which are important, and over half of them are still delayed.
Yes. That's the problem. Did you just want to talk?
Yes, if I may, and Peter has just commented there from a motor perspective in terms of the way that data is collected and how it appears with regards to, say, for example, liability data that the CSO may or may not collect. Typically, and I just happen to be one of the random companies chosen, so I get asked to fill in this form on an annual basis, which is the CSO Annual Services Inquiry Form. It's the form 2808B. Now, in that form, and I've tried to put this on the agenda before, but I've failed so far, they ask for your stats, your costs. And one of the questions that's asked is, what is your insurance cost as a global number? So let's say your insurance premium is 10,000. Now, within that, you're going to have a premium that's for motor, for assets, for property, a premium for employer liability, for public liability, for consequential loss, etc., etc. Now, what the CSO should ask for is a breakdown of the insurance figure. Otherwise, the question is meaningless.
Yeah.
So, if, for example, people were asked to break down just to go after the key numbers, liability is the key number. That's your biggest cost. In any premium, it's your biggest cost. And if you're a manufacturing company, employer liability is going to be the more significant of the two numbers. If you're a business where people are on your premises, public liability is the key number, okay? So if I were to be asked to give a breakdown of my insurance premium, if that were to be, say, 10,000, I should be asked, what's your public liability premium? And then at another level, at another part of the form, the denominator for measuring the rate from an insurance perspective for public liability is you divide the premium into the sales number, your sales figure, and that's the rate. Internationally, then you can compare to see, are we outliers or not? We are. For employer liability, the formula from a loss adjust from an actuarial point of view is you divide your premium into wages, because it's employer liability insurance. So premium divided by wages equals the rate. They're not collecting the data. They don't understand. Either they don't understand it or they don't want to collect it for whatever reason. They don't feel it's important. It is vitally important that we have data. If you go back to the ISME submission, Neil's submission, and the very first page, Peter does it differently. He's talking about, he asks, ISME has brought it back to, and again it goes back to Senator O'Donnell's question. There are three key issues here. Item number one, quantum. We've talked about that. The next 4 or 5 points that Neil mentions are to do with legal reform, courts reform, procedural reform. The final piece is transparent, granular data.
Yeah.
So there is no one thing that will solve this problem. Those three things combined, when you go at them all at the same time, will solve this problem.
Yeah.
That's the answer.
You're right.
Yeah, I need to answer both of you when I say that, because Senator O'Donnell asked a very simple question which we didn't actually answer. Is quantum the silver bullet? It's about 70 or 80% of the bullet. What I also need you, though, as a committee to bear in mind is I'm not going to talk about any of Linda's individual businesses or James's business, but just bear in mind, at the moment, liability, the way our courts, and this is where we need reform of how liability is assessed. At the moment, if something occurs on your premises, that is effectively, there isn't even a consideration these days of negligence. Your insurer will effectively ask you, did this happen on your premises, yes or no? Last week there was a report in the paper of a 30,000 award, a settlement, not an award, to a child in a city centre crash, where one child went into another with a trike. Now, you might say that child, and this happened a number of years ago, 30,000 for a 1 millimetre scar, fully recovered. Okay, now we may decide that that's a good idea or not, and that's a subjective assessment. But the question is, if that happened in your kitchen and one child banged into another and gave a scar, do you think at that point a payment of €30,000 should arise? And if the answer to that question is no, well then it shouldn't happen in a creche or a play facility either. And we have to get our head around the fact that simply because something happens on a premises does not mean that the owner of that premises is liable for it. And we have a bonkers concept of what constitutes negligence and duty of care. And we have spent a long time arguing that in there. And at the moment, if you own a premises or operate a premises and you go before a court, most especially where children are concerned, you've lost before you go in there, irrespective of the merits of your case. So you're also going to have to take that one on.
Okay, thanks. Yeah, sorry.
Closing from our perspective, and I'm conscious as well that Linda wants to make a quick point on this from hers, but from an alliance point of view, I would ask that as individually, as TDs and senators, that you ask as a matter of urgency what's going to be necessary to get the Judicial Council bill through quickly. We've received commitments from the Department of Finance that it'll be by the summer. That seems a fairly onerous ask, but if the political will is there, we have no doubt that that's possible. And where is the Garda Insurance Fraud Unit? They're the two key. But as a committee, I'm conscious of the fact that you don't have a direct in-line to the Law Society, so I'm going to concentrate on the insurance industry, whom you do have a direct line into. We are well aware of the profits that have been declared over the last few weeks. We would forecast that given that it looks like they were over-reserved for the last period of time, and that may have had quite an influence on the losses that they declared, that we would suspect that they are going into a period of very substantial profitability as those reserves are released back into the P&L. So I would ask them a direct question: what are you going to do in the light of your improving financial situation to help the policyholders of Ireland?
Yeah, and I think that comes back. We started off looking at this insurance. We started off looking at it because we had suspicions that there was a cartel in operation, and that there was going-ons within the insurance industry that was putting huge premiums on people, and that basically they were robbing people. Because it comes back to what you're saying, Linda, and it backs up what Dorothea Dowling has been saying in terms of the black hole and the amount of claims, the amount of claims versus what's taken in. And I think it was something like a 2 billion black hole that she had identified. So they're running rings around this government, and they're running rings around citizens, and they will continue to do that until we force through the situation. And your 25 days keep coming into my head, and I absolutely think the legislation that we have spoken about earlier, we need emergency legislation. We can pass through legislation on many other things. We had the whole weeks of Brexit. But to me, for the job losses, for the impact on society, on communities and everything else, this needs to be treated as emergency legislation.
Just in our group alone, Senator, we've 2 closures this month.
Yes.
If something isn't sorted.
Yeah.
One in Cork and myself.
Yeah. And before you said that, you see, as well, there's situations in Mayo as well, and I know I was first contacted by a pet farm, and they were getting their insurance from the UK.
Yeah.
And the letter just arrived in the post to say, we are no longer going to insure you, goodbye. And they have no insurance.
And just on that point, Senator, and actually we haven't brought up in the whole thing here, is I actually am extremely unusual and lucky that I know that I can't get insurance. You actually don't get told until about 24 to 48 hours before your premium is due what your premium is going to be. They actually don't even allow you to try and shop around, even though there isn't any really shopping around to do. You don't get told until 24. No matter how much you're told, you can't look at your new insurance premium until 4 weeks before the due date. But I've yet to come across anybody who has been told at least a week before what their premium is going to be. And just to take up your point about, Neil, when you mentioned about, this is probably laughable, about, that wouldn't happen in someone's home. My own daughter was invited to a play date. She's 4, but she was 3 last year. And she was invited to a play date in a house, and we were delighted to go. But just the day before we went, on WhatsApp, a disclaimer came through to say that if anything happens in the house, that we will not be taking responsibility. I said it was laughable. But that's the society that we're in.
Yeah, it is, and it has to. I just want to ask you to comment on what happened earlier this week in terms of IPB and the court case. You're familiar with that, where IPB issued the High Court proceedings, and they wanted to be held in secret. It sounds all very strange.
This comes under the heading of transparency.
Yes.
I'm loath, and particularly in this committee, to suggest that the banking industry is a shining light in this area. But from my understanding, if there is a crisis within the banking sector, you will be able to get data to verify what's going on, and that is absolutely not the case within the insurance industry. There is no transparency, and if anything, the insurance industry is more systemically important because we just cannot function without insurance, and we are legally obliged to have a relationship with the insurance industry, and yet we cannot get the data, and that absolutely falls under that heading.
Just that we have a FBD coming in.
Oh yes,
and at 11:30, and we're going past that time now.
I think we'll
maybe the remaining Senator or Deputy Burton, Harkin, and Deputy Murphy. If you'd like to, just 1 second, if you want to ask some questions, but bear in mind the time is ticking away. that we'll have less time with FBD then.
Well, I do want to ask a question.
Deputy Burton was next,
That's
then
fine.
Senator, and then Deputy Burton.
Well, just listening to the disaster, I suppose, that's fallen on your business. I mean, essentially you're saying, and a lot of the testimony is saying, that insurance is strangling SMEs because it's unpredictable, it's extremely expensive, and who knows what's going to happen tomorrow, whether it'll be there at all. One thing I was wondering about was, first of all, have you any comparison of what happens in the north versus what happens in the Republic? And are there things that they do there that, for instance, we might look at in sense of an all-Ireland approach that might make it easier? And the second question I wanted to ask was, it struck me as somebody who goes, you know, occasionally to play centres with children, and as you said, they're so popular now for parties for kids. Could it be made clearer to people at the beginning so that people, in effect, get effectively a disclaimer notice unless something very serious happens? Leaving aside the question of responsibility, I mean, as you said and others said, accidents do happen, that's what you're paying the insurance for. But could there be, for instance, clear information generally on behalf of insurance companies, not the business, but the insurance companies, that this is how we approach it, and you are here effectively at your own risk unless something very serious happens. And the second thing is, which I think is often a contributory issue, if there are relatively minor injuries, we have a series of, if you like, 24-hour kind of accident centres on a small scale, certainly in the Dublin area, where you can go and get treatment. I mean, would it be possible to develop some kind of a system where if somebody gets a bad bang or a suspected fracture or something like that, that can be addressed quite quickly? Obviously, that does require disclosure. I think disclosure is absolutely essential as soon as possible. But do you think there are ways and means in which, you know, we have at a local level, local employment, local enterprise offices, could there actually be a package of information put together for SMEs, but also for the customer, because what a previous speaker said, a lot of people don't make claims because they feel an empathy with the business owner. They don't want to make a claim, but sometimes because of a lack of attention at the time, it develops into a bigger thing, and then resentments and so on and expectations set in, and it's a difficult road.
I think those questions maybe, and we'll ask the, that's okay with Deputy, and we'll ask the Senator to...
Yeah, I mean, I hope, Chair, we can maybe extend this a little bit because...
Yeah, go ahead.
Yeah, I'll just make the points. I mean, like, everyone else got about 20, 25 minutes, so I'd like to make a few points, but I'll try and be as brief as I can. I accept that. But, you know, it is a very important topic, and certainly, Linda, thank you for your contribution. Thank you, Peter, and your association for all you're doing. I think your three big asks that I'm taking from today are to get the Garda fraud unit set up as quickly as possible, and the question I have there is, where are you with Minister Flanagan or Minister Darcy, or are they all passing it past the parcel between each other? It's not a matter for me, it's a matter for justice, it's not a matter for justice, or it's all a matter for the Garda Commissioner. In terms of the Book of Quantum, and I think I've discussed this with you before, Peter, like, asking for the Book of Quantum to be changed is, the Book of Quantum is a statistical, historical database of what's actually happened. And the only way it can change over time is by claims actually changing. I don't think legislation can change the Book of Quantum, but legislation can, as you suggest, cap the injuries or do whatever, and over time. The Book of Quantum is historical, it's statistical, it's prepared. I think you agree with me on this, is that it is what it is, it's compiled from what's there. It's unfortunately as high as it is because the payouts from the judges and from the insurance system generally have been as high as they have been, but we just need to focus on how we get those claims down. I don't doubt that everybody in their business is doing everything they can to minimise. I was going to ask Linda, have you, over the 10 or 12 years of your existence, physically changed the design of your premises, taken out certain climbing frames or slides or whatever the insurance? Because I know this 20 years ago, I remember being involved with summer camps and things where people, oh no, we can't have step-ups, we can't have this, we can't have the other. And people have, you know, like children not being able to play in playgrounds or run in playgrounds and so on. I saw a claim yesterday where a table flipped up in the wind and they broke their nose, very unfortunate, 3-year-old, 30 grand, even though the nose healed perfectly. And I'm sure there was some level of trauma for a 3-year-old, but I'm not sure it was 30 grand or where those figures come from. Linda, I was going to ask you, have you comparative figures for insurance premiums of similar play centres in the UK? Obviously based on a different claims environment. And I suppose, again, Peter, to you and again to Ismie, most people have said Michael Darcy is doing his bit, but he's a lone voice in it. I met the Connacht publicans yesterday, and I'm very conscious the LVA are doing a huge amount of work, and indeed the VFI are helping out as well. But the Connacht publicans yesterday, the biggest bone of contention they had was, bar the issue, I suppose, recently in terms of the limits, is insurance generally, and you know it's destroying the cost of insurance, but also rates. But insurance was destroying their business. They're getting 1 and 2 customers a night in some venues, and they're still paying huge insurance premiums for very little. We have FPD coming in next whenever we get to them. Have you any questions you'd like us to put to FPD in terms of how we get an awful lot of the lawyers blaming the insurance industry and the insurance industry blaming the lawyers? I'd like your thoughts on who's more at fault. I'm sure they're all at fault, but it's, you know, what, and again, I'm trying to throw out the questions because we don't have an awful lot of time for engagement. And then the last, I suppose, big ask was your schedule about the reductions and the data availability. We've been crying out since I joined this committee in 2016 for visibility on claims. You're saying that the CSO and the central bank have more or less thrown out the idea of visibility on that. Maybe just a few thoughts on that. Thanks.
Yeah, I respect, Chairman, you know, the time constraints, and I keep this as short as possible. Linda, I just watched you from my office when I was doing something else, and it's really sad for a person that was so full of enthusiasm and built up a business, and, you know, the emotion struck me, and all I'd say to you today is keep going. Don't let somebody put you down. Keep going. And I think that's important to say on the basis people become frustrated and opt out of business. It's happened in my own area. But, you know, Peter spoke about the slow pace of reform. Chairman, I remember when I came into this Dáil elected first in 2016, you making a very strong case for your own constituency in relation to small businesses and insurance costs gone up by 100%. RG data last year told us that shop insurance increased in a lot of cases from 10,000 to 100,000. Restaurant insurance has gone up by almost 50%. And, Chairman, you've heard me before talk about the case of a hotel in my own constituency of Roscommon, Galway, that was facing closure, and a very innovative family took it over, employing 25 people. And they decided to have a look at the insurance cover, which was, I have to accept at the time, very low, you know, 12,500. And they had a review about 4 years ago, and they were advised that the proper cover would bring their costs up to about 25,000. Now, their costs are almost at 50,000 per annum. But here's the important point for me, because this really frustrates me. There was only 2 small claims that hotel had to deal with. One was 2,500, one was 1,500. And can somebody in the insurance business, you know, explain to me today as to how that could happen? Because I'm only an ordinary 5/8, but I can assure you, if you had 2 small claims, I think there is no justification for that type of increase. Remember, Chairman, that the government's competitive watchdog, the NCC, as far back as 2016, were saying that this was the most, you know, this was the biggest issue with small business. This was the NCC telling us that. We're 3 years on now, and since that, so many more businesses are holding on, barely holding on, and it will crucify a number of businesses if we don't move on quickly. I want to go back to Senator Donnan just before I conclude, because you asked a number of pertinent questions in relation to Buca Quantum, and I'm going to ask it again. If the reform that is taking place, and I acknowledge, as Senator Harkin said, Minister Darcy is pushing this, but it's slow pace, but if the reform takes place in relation to the Buca Quantum, can you say here clearly today that insurance costs will come down? Because again, I'll give you one example again, for hauliers, for example, who are now doing their insurance abroad, and I wonder, is that totally safe? But one haulier had to take out insurance abroad. I think it's 15 trucks he has. It was costing 70,000, and in the space of 1 year it went to 130,000. That man had no claim. That man had no claim on that business. So almost 100% increase there. You know, one small business person put it to me recently saying, you know, usually in terms of cost for a small business, your wages, your raw materials, your energies outstripped other costs. Now, in many cases where 2 or 3 or 4 people are employed, insurance is outstripping even wages, energy costs and raw materials. That is not sustainable. Thank you.
Thanks, Deputy Senator Burke.
Very briefly, and thanks, Chairman. I welcome the delegations as well. We had everybody in here from road hauliers, insurance companies, the legal people in here when we were doing our report in relation to insurance costs, and nobody was to blame, according to themselves. That was the answer that we got from the benches in June today, that none of them were to blame. You put a lot of, ISME puts a lot of blame on the judiciary. And here, a substantial minority of our judiciary is excessively, unfairly and unjustly pro-plaintiff. And you go on to say as well that ISME were not surprised to see the same High Court Justice who ironically oversees the personal injury list in the High Court mount a stout defence of the current personal injury system, in the press suggesting that awards for general damages have fallen in real terms since the 1970s. Committee members will hopefully understand our view that while we do not expect the law to be on our side, we do expect it to be blind. Our members advise us that one of the most important considerations before they defend a case in court is the name of the trial judge. If it is one of a small number of judges with a pro-plaintiff renown, they will instruct their counsel to settle irrespective of the merits and strengths of their defence. And you want to say that this is an appalling indictment of our judiciary. And it is, and you stand over those. And I think it is, it's an unbelievable statement from ISME, and they stand over that. It's a sad state of affairs, in my view, I have to say. So we have all come across everything that has been said here by all of the members, and both quantum and everything. But yeah, the question is to Peter. It is clear to us that the dead hand of vested interests and a lack of sufficient political will are grinding the response to the crisis to a halt. So you're kind of blaming the political system as well as judiciary, vested interests and all of that. So you might explain to us what we can do. We think there's very little more that we can do. We're putting the pressure on all the places that we can.
I'll ask each one of you for the comment just to sum it up, because, as I said, we have FBD waiting outside. And just try to add to the question, what lobbying have you done directly with the Minister, other ministers or the government? So we'll take it from yourself.
Okay, so I might wheel through them in reverse order if that's okay. So Deputy Burke, the pace of reform in this area is not moving fast enough. And I used the example of the last time we had a crisis in this area back in 2002, 2003, where all of the main legislation and the major actions to address the issue were done and dusted within 2.5 years, and we're nowhere near that time frame this time around. And so in very practical terms, what you can do to speed things up is get the Judicial Council bill through as quickly as possible, put political pressure on to get the Garda Insurance Fraud Unit up, and then as a committee to hold the insurers to account in terms of what they are going to do in this situation to make sure that premiums go down. Deputy Murphy, I would summarise the the response to your question on the Buca Quantum, by going back to what the Minister and the insurance industry have said constantly on this, that claims drive costs. That is the insurance industry's analysis of this. So if the Book of Quantum can be resolved, that sorts the claims issue. And certainly from our point of view, we would then regard the insurance industry as being under an obligation to respond with reduced insurance costs. Your story on the hotel is a very familiar story. It happens all over. And in terms of why it happens, we're mystified. And it is absolutely a question for the insurers. Senator Horkin, the Garda Insurance Fraud Unit, as we understand, we're waiting for an announcement. It is imminent. We would query why it has taken so long to get to this point, because our understanding is that An Garda Síochána have been ready internally for this for quite some time. So we're awaiting a decision, but there is there is an opportunity to apply pressure from a political point of view. We're told that it is a decision for An Garda Síochána, but surely the government of this country have a role to play in terms of expressing the desire of the state to have a Garda insurance unit in place. In terms of the Book of Quantum, as the legislation currently stands, it can only be revised through the history of awards over the previous 2 to 3 years. But the Judicial Council Bill will give the power to reduce downwards regardless of history. And that's what we're expecting the judiciary to do. And we need them, as I've said, to step up to the mark on behalf of society. In terms of health and safety, I would suggest that this country is health and safety nation, and our colleagues from around Europe and abroad are gobsmacked at the level to which health and safety is acknowledged and enforced in this country. And it is time for the insurers to respect that in terms of the premiums that we're paying. The National Claims Information Database is a partial solution to transparency. When you see the first report coming out towards the end of this year, it will be, I suspect, very unsatisfactory because it's a first look. It will only refer to motor insurance, and there are no firm plans to have a look at liability. Finally, you asked in terms of insurers, the question, and I would go back to what I said already in terms of FBD and the insurance industry in the broader sense, in the light of the improvement in your financial situation and a forecast additional improvement in it, what are you now going to do for policyholders? And Deputy Burton, the Northern Ireland reference, I would suspect that the UK and Northern Ireland in particular have their own problems in this area. And they are by no means the ideal. As Neil MacDonald of ISME has already said, the UK is regarded as an outlier by the rest of Europe in terms of insurance and the kind of situation they have in place. So I wouldn't necessarily look at Northern Ireland as being a role model in this area. And additionally, we have potential complications coming up with Brexit. I'd prefer that we got our own house in order at this stage, and there is a fairly defined roadmap in that area to do it. With regard to the healthcare side of things and early intervention on injuries, I think a lot has been done to try and do that, but the damage is being caused right now by general damages which are for pain and suffering, and not special damages which are to cover medical care and loss of earnings. So it's the general damage for the pain and suffering of the original incident which is the problem. And that's why the solutions we've proposed are in place.
Thank you, Minister Burton. Just to mention a couple of points that you mentioned, disclaimer coming into our businesses. I think, with the exception of maybe one or two, every single one of our businesses would actually have a disclaimer now for people to sign coming in. But unfortunately, what you're told is when an accident does happen, is that when it comes to a minor, disclaimers just aren't really worth the paper that they're written on. And we would welcome the duty of care to change. So, you know, when people come into your business and where you aren't negligent, that a disclaimer does stand. Nobody is questioning anything where you've been negligent, where you haven't. It would just be ideal if it did stand for something, but unfortunately it doesn't. In terms of the 24-hour accident care, I think we'd all really welcome this, but you're afraid of your life to actually suggest paying for that or paying for anything, or even paying to give the child a Smith's voucher where they've injured themselves, because insurance companies would say, you're admitting liability if you try to offer something. And to be honest, we do offer, I think a lot of us do offer something. We do try and give vouchers where something happens, where it hasn't been your fault. But still, you can still end up being sued even after you've given something like that. But being able to pay for medical expenses like they do in Scandinavia, I think would be great. Minister Horkin, you're talking about similar premiums in the UK. Sorry, Senator Horkin, apologies.
He doesn't like it.
If you can get the pay slip, get the pay slip to go with them, even better.
Sorry. I mentioned earlier on, I'm not sure if you're here, but one of our members was paying £1,500 through the same insurance company in the UK to have his trains insured over there, and through the same insurance company in the UK to have them insured in Ireland was €33,000. So there's the difference there on that one. My question for FPD is, I challenge you to insure us as a group. I've said we've 5 million in premiums and 1 million in claims and reserves. So I'd love if you asked FPD the question why they wouldn't insure us. And finally, Minister Murphy, thank you for your very kind words. And no, I'm not giving up without a fight. Thank you.
Mr. Monks, want to comment on anything?
No, I just would like to thank everybody here today and urge them to please stop kicking the can down the road.
Mr. McDonald?
Very quickly then, rapid fire, what can you ask them later on? We'd ask them very specifically, is Solvency II requirements, is that driving higher reserves, higher profits and then higher premiums, yes or no? Senator Burke, yes, we do stand over, not alone do we stand over what we said on page 3. We're saying to you about, for instance, our legal system, the dogs in the street, the EU Commission, the OECD, our ODCE and our Competition and Consumer Protection Commissioner have said the LSRA is a waste of time and it hasn't delivered for consumers. And she's gone now, Deputy Burton, this notion of having clinics, it's making not alone would that not make a difference. I'm in receipt of reports now from industry that are suggesting that a number of GPs, for instance, will on the spot produce for €150 a report for you to go to PIAB. So unfortunately there's a number of medical professionals that are now part of the problem.
Mr. Coughlin?
I think most of the points have been covered, but just maybe one that wasn't. I think it was Senator Horkin asked the question about health and safety. And if you look at the ISME document, and if you go to Appendix 4 on page 15, you will actually see, if there's any doubt about where we are, where the rates of accident per thousand are concerned, it shows that in 1997, the rate per thousand was 6.63. We're now down at 2.58. So that is not, there's no causality between anything we're doing wrong in health and safety. There's been massive, massive improvement.
I want to thank all of you for joining us this morning and for giving us your view on the market and what needs to be done, and particularly Linda, because you put I think a human face and a business face on the issues. And this committee cannot be accused of kicking the can down the road. We have prioritised this, we have debated this, we have written a report on this, and I would say to you that none of you addressed the question that I asked you. What did you do in terms of lobbying the Minister or the Government on a continuous basis? And I would suggest to you that if there is any change going to come about in relation to this, it is through government action. We will keep the government on notice of the action that is required and that is contained in our report. I won't single out Mr. Darcy, Minister Darcy, but I will say that the government, in my opinion, is the driver in this, and it is the government that is required to implement the 60 or 70 recommendations that we put before them. And if there was action on those, you wouldn't be here today. The other thing I wanted to mention is the fact that the hauliers, the co-ops and many other sectors in business have been before us. I have met all of them and the vintners up and down the country. and every single one of them are complaining. And I reject some of the commentary that's made in relation to the reduction in motor insurance, for example. I've yet to meet anyone whose premium was reduced. So it is important for you, given what's going on here and how government functions, that you engage directly with government in a very robust way. And Mr. Boland, they're never too busy in here. That's what they're getting paid to do, to be busy. But it's one thing being busy, it's another thing making that business work for the people that we represent. And it's not working. So we need to cut through the fog and deal directly with the people that are obstructing the course of the reform that's needed in the insurance business. And that lies at the feet of government. Now, you mentioned the judiciary and you mentioned the lawyers, and I have to say that because they've been mentioned here, they're quite welcome to come here arising from the commentary and make any submission that they wish. Because of the fact that you've mentioned them, they might like to come and defend that position or to comment on what you said. Up to now, the description has been used of there being a cartel in operation. And I would say that other than that, there is a hard-nosed, these are hard-nosed business people in the insurance world. And in the insurance world encompasses judiciary, lawyers, the whole lot. And they're taking advantage of the complete shambles that this is. That's what's happening. And as a result of that, small businesses up and down the country and individuals like yourself, Linda, are being penalised and are being made paid more and more, and for what, we don't know. So, Deputy Murphy asked you not to give up. I can assure all of you here that we won't give up. And our work will be to ensure that that can is kicked no further down that road. And thanks again for coming along. We'll suspend for 5 minutes. Again, the insurance issues. And we're joined by...
3 o'clock, is that right?
3 o'clock, yeah.
Okay.
We're joined by FBD. I want to welcome you both to the meeting. I understand that you have an opening statement, if you'd like to proceed.
Thank you very much, Mr. Chairman. Briefly, FBD is the only Indigenous Irish insurer. We are part of and embedded in the community with 34 branches in cities and towns throughout the country. Insuring farms and small businesses is our business. They are critically important to us and they represent 85% of our premium. It's our job to be there when things go wrong. We in FBD have a proud and long tradition, spanning more than 50 years of paying claims and of being there when things go wrong. From 2014 to 2016, FBD was making a loss. It's in our customers' interest that we have stabilised and returned to making a profit. To stand by our customers and pay our claims, we must be stable and profitable. And we stabilised through taking a raft of measures, including charging more to our customers. The cost of insurance is too high. It is affecting our customers' ability to do business, and that affects us. A lot has happened in the attempt to address the cost of insurance, but not enough has actually changed. And with the permission of this committee, I would like to share with you FBD's insights into why this is the case and what we need to do. Firstly, I'd like to summarise what is causing the high cost of insurance, and at its essence, Ireland has too many claims, and those claims are costing too much. People are too willing to make a claim, and advisors are too willing to encourage them. Then compensation payouts are simply too generous, and the cost of getting to a payout decision is too high. To address the root cause of high-cost insurance, all roads lead to our legal system. The legal system dictates the level of award. It sets the market price that determines the level of our awards both in court and out of court, and the system creates a vicious cycle. High payouts with no downside encourage claimants, and high legal fees encourage certain solicitors and barristers to take and make the case. The legal system is difficult to reform and resistant to change, and practitioners have little to gain and perhaps a lot to lose. But I would go further and I would say that I believe, and FBD we believe, that firstly, we do not recognise our legal system as the root cause of the problem. And secondly, we do not have the capability, at least we have not demonstrated the capability, to fundamentally reform the system. Litigation is always expensive, and allow me, please, to share with you how costs spiral as a consequence of this system. So take an example of a soft tissue injury from a low-impact collision, meaning there was little or no damage to the car, the occupant has a sore neck, and remembering that soft tissue injuries comprise about 80% of our motor claims. As the kind of injury that some jurisdictions do not recognise, or at least do not pay or pay very little for. So normally it will take 3 years and up to 5 years from the date of accident until the case is heard. The Injuries Board will assess the injury 12 to 18 months after the accident based on a medical report that gives a 6-month forward prognosis. But the majority of claimants will continue to report pain right up to their day in court, 3 to 5 years after the accident. The judge will make an award for the same injury based on 3 to 5 years of reported pain. Court awards, determined later than the Injuries Board, are higher and costs are significantly higher. And the key insight is that the level of award is based on the length of time the complainant is complaining of the pain as opposed to the amount of pain they actually feel. Compensation is more a function of time than of suffering. And there is major incentive, therefore, to bring a claim to litigation. So FBD has previously stated what we believe must be prioritised, and FBD's key recommendations remain outstanding or work in progress. We need to lower the level of award. Why do we pay 4 to 5 times more than what the UK is already trying to reduce? We need to recalibrate claimants' expectations. The proposed Judicial Council and its proposed redrafting of the Book of Quantum can be the vehicle, but awards, and soft tissue awards in particular, need to be significantly and consistently lower. FBD also believes that we must cap awards, implement what one might call a front stop on the legal system's generosity. We need a standardised objective approach to assessing whiplash, a measure of pain that is not linked to the time it takes to settle the claim. We need a more efficient process up to and in litigation. The vast majority of soft tissue injuries should be finalised in the Injuries Board. Insurance companies need to be more transparent and publish premium levels, and insurance companies need to work harder on fraud, and we need help to be allowed to share data. Finally, we need to establish a dedicated insurance fraud investigation unit within Garda Síochána. In a nutshell, members of the committee, we need to build momentum and drive home meaningful reform of the legal system. And in conclusion, FBD CEO Fiona Muldoon has said, Irish society can have either high injury awards or cheap insurance. We cannot have both. And as a legislator, you have the sole ability to help deliver what is to the greater benefit for most in our society. Thank you.
Thanks very much, Mr. McMahon. Senator Harkin.
Thanks, Cearlach. I suppose a few points. It's a very, robust presentation, very outlining your own presence in the market, and I think it is welcome that we have at least one Indigenous motor insurer in the country, and indeed, I think it's a reflection maybe on the Irish insurance market that we only have one surviving Indigenous operator and a number of multinationals, and probably a lot less participants in the market now than we used to have. And a lot of that goes back to, and I'm sure other members will cover this as well, the transparency, and we've had Insurance Ireland in here in terms of the databases and the data that's out there, and it's certainly, from our point of view, very difficult to see what's going on. We see a lot of claims being settled. I mean, you're talking about fighting fraud, and I suppose one of the questions I would have amongst a number of questions is what percentage of claims that you get in all categories, but particularly motor insurance and indeed in public liability, of the claims that come in, how many get rejected, how many are fought and maybe lost, and then how many, obviously some cases, and I'm sure many cases, are legitimate and they are what they are, there is fault. We had, I don't know if you were able to see the session earlier we had with members of the Alliance for Insurance Reform and ISME. We had various different people in. Obviously, the Alliance for Insurance Reform represents many people, restaurants, publicans, small businesses, very many people. I'm sure you're engaged with them. But there was a particular focus this morning on play centres. This play centre type industry, the broader play centre activity park, all that kind of thing, reckons that their industry has paid in to insurers. I don't particularly think it was yourselves, because I think they were saying that most of the business they have to refer to the UK because no one here will insure them. They've paid in 5 million. There are reserves of 800,000 against claims, and I think only 200,000 has actually been paid out in the last 5 years. So by any measure, it looks like a fairly profitable industry. And another question I have for you is, why won't you, or maybe you will, why won't you consider that as something to, because we have play centres, activity centres, places for people to go for birthday parties and all those kind of children's activities that are closing down. And many towns maybe have, the lady in question is in Navan, she's the only one left, and she is effectively going to have to close after 12 years in business, and has seen her insurance premiums rocket. Sean O'Rourke had a discussion yesterday morning, you may have heard it, about play centres. Other people saying they've gone from very, very small amounts to multiples, from like I think it was 6,000 to over 200,000. There was phenomenal increases were being mentioned yesterday, and I only caught a little bit of the interview. You know, there's an absolute existential crisis here for many industries. And we had Marts in here before, and I'm sure you're very familiar with Marts. We are the most, it appears, health and safety conscious country in the world, certainly in the EU. You go to other countries, Brussels, Paris, there's holes in the ground and there's no fencing around them, and people don't, if they fall into them, it's their own fault or whatever. We seem to have put great presence in doing what we do. I know of a school that had no claims and its insurance bill went from 27 to 34. On the basis of, oh, you were in a scheme has ended, but you're still part of this, and we're going to just more or less, you were getting it on the cheap for the last years, we're going to ramp it up at the end of the term that was agreed. So we have a problem with insurance. I don't think you're doing enough fighting of fraud as an industry, not particularly yourselves. I'd like to hear what that's the figures I'm looking for. I have a question about Solvency II. Is it leading to higher reserves? Are the higher reserves causing higher premiums, higher profits, higher payouts? And again, if you were us, what would you do in terms of, it's all very well saying we want lower premiums, we want lower this, we want more. What are the three things, if you were here, you would do in terms of legislation, in terms of requests? If you were sitting in our seats, what would you do?
Thank you very much. I think you're touching on a lot of what are the issues fundamentally, and certainly we as an insurer who are in the community and insuring businesses, we certainly want to be there for our businesses. Businesses are important to us, they're important to our own business ourselves. So we want to write that premium. We need to write that business at a profit, and we need to be profitable. And I think that while there's lots of various different adjuncts to what is quite a complex issue, when it all boils down to it, too many people are making claims. And they're making claims, and I put it into two brackets of claims, and I might leave fraud even at one side. But there is people who have genuinely suffered loss, and that's absolutely what we're in the business for. That's why they pay the premium. We are there for them, and that is what our business is about. And again, we have a long tradition of being there for them. There's another group of claimants who I would argue have very little, have suffered very little, and in cases, if any, what a reasonable person would say loss or injury. And the problem is, that group, which is not insignificant, in fact is quite significant, has and can easily make a claim and receive very high compensation payouts with no risk to them, and at the same time generating significant fees and incomes for the people who are bringing those claims in their behalf.
In terms of percentages, have you percentages on to what, I mean, you're saying a very significant number. Is that 10% or is it 45%? I mean, where, in terms of, you have genuine payouts to people who have suffered loss that are legitimate to claim for, you have a crowd, and we're not even talking about, you know, there's a percentage of fraud, there's a percentage of exaggeration, there's a percentage of people getting payouts just because they, you know, broke their fingernail or whatever it happens to be, and then there's real claims. Have you a breakdown of what you suspect it to be?
Well, there's also, within that kind of breakdown, okay, is, you know, what is the, how severe was the injury and loss, and what the compensation of that severity be. So we could argue a subjective point here that, oh, well, I have pain in my neck because I say I've got pain in my neck, and I tell my doctor I have pain in my neck, so he says I've got pain in my neck. Then I bring it to the court and I have a doctor's medical that says I've got pain in my neck. And then we value that in Ireland starting at around 15,000, on average 20,000, compared to the UK at about, between £300 and £3,000. So, it's a question of the magnitude of and severity of the injury and what we reward it for. Now, if you're getting that, and you can go on today and look at, and it's well publicised by lots of different quarters, and put it on the website, and you'll see all a kind of a table of rates by various different firms for what you'll get for various different types of injury. And I think they're well out of step with our international benchmarking, which we went with. The Personal Injuries Commission has proven that, way out of step with international norms. And the problem is then, with that case to go to litigation, because it will be higher, you're also generating very significant costs. So for every €10,000 that we're paying out in litigation, we're paying another €4,000 in legal expenses. And again, it's higher than what they're getting pre-litigation.
So you mean the 10 you're paying out not in litigation but in compensation?
In compensation,
yeah.
10 grand in compensation, and on top, but once the case is in litigation, 10,000 for every 10,000 in compensation, we're giving you an additional 4,000 in legal fees.
Okay, but that doesn't answer the question. Went back to it. You get 100 claims in. How many are legit? How many are subjectively legit or exaggerated? And then how many are fraudulent?
Well, I suppose I'll answer it in two ways. Let's take the fraudulent first. So we would estimate that probably about 20% of our cases are fraudulent, and of which maybe about half of those we would expose as fraud. The rest we probably can't expose.
So that's a combination of staged accidents and people just saying staged accidents, effectively, is it?
Staged accidents. Staged accidents, or staged accidents.
And you reckon you catch about half of them?
We catch about half of them. Now, we're putting a huge amount of effort and resources into this, including investing in very sophisticated artificial intelligence, in entity analytics, and a whole range of defences against fraud. We're working very hard to try.
And does the industry share that information? I mean, if you identify people who have multiple claims, and maybe they're just very awkward or very accident-prone, but there must be people in the industry who would suspect it of. Everybody's seen them, and are you sharing that information, those names, with other insurers?
Well, it's one of the difficulties actually that we certainly would like some help on. And in the protocols that we've established around the sharing of data, there's very strict criteria of when we can share data with other insurers. So, for example, if a person has previously made a claim and is claiming a similar injury in the same class, let's say that a previous accident with a sore neck, we can't actually share the previous medical reports with each other. We'd have to go to court. We'd have to.
Now, that's if it was a different insurer. If it was the same insurer, presumably you can have the history of the claimant.
Yes.
From previous, but you can't share, even though you know somebody's made 3 claims with you, and then they've gone off to another insurer, and you know they're in litigation, but you can't tell the other crowd. Well,
we might know they have a previous claim. But we can't share the details of the medicals, for example.
Okay, so.
But again, it's like, so the fraud part of it, and I know I'm kind of a little bit repeating, but the significant issue here is just how high the compensation awards are.
I accept that. I mean, I met the car rental people last week, and I'm a senator. We passed in one night the entire committee stage, 79 amendments of the Judicial Council bill, which I think is hopefully going to be some way towards something. Other bills have taken a lot longer in the Shannon, but certainly this one, it was all done in one session, and we extended on Tuesday night, and there was only 2 votes on 79 amendments, and it was all passed. So it's gone from committee stage. It's only report and final to do, and then it'll go to the Dáil, and I don't know how long. I hope they can be as quick, and I'm sure they can be as quick in terms of delivering something there. But
Senator, sorry, and just I suppose for the context of FBD. When we look at our small businesses, S in FBD means small. So we typically insure businesses that are adjacent to our farm business, so small pubs, restaurants and the like. And I suppose us differently than our competitors. We have 34 branches right across the country. So we're kind of small micro businesses ourselves in the business community. So we're very aware as to the consequences of small businesses not getting insurance. Also, in FBD, we've actually grown our small business book. So customers like dealing with us. So I suppose we welcome anything that will help the small business seek the right level of cover in the marketplace. And I think that's it's an important point from an FBD perspective to put that out there.
Look, the point I think one of the points you're making, Mr. McMahon, is that there's an incentive there. If the whiplash claims were generally 1,500, you mightn't get as many people applying as if they're 15,000 or 25,000, because we've made the points been made before that if you go into a bank and you try and rob it and you get caught, you'll possibly go to jail and you certainly have a criminal record. If you make a fraudulent claim and you're found out, what do you do with the fraudulent claims? Do you send them all to the guards? Do you send them all to the fraud squad? Or do you just say, tough lads, you didn't get this one, but come back next week and try again?
Well, you see, the difficulty is that, of course, where we've got a strong case and evidence, we will send it to the guards for investigation, and hopefully they'll bring it to the DPP, who hopefully will bring it to prosecutions.
There's a lot of hope there, though.
There is a lot of hope there, and not alone that, the bar is very high on the evidence that we need to prove fraud, and so. It is very often a difficult case to have, and that can be very difficult for our customers as well, who would feel that sometimes there's cases that are absolutely fraudulent against them, and then knowing it's fraudulent and proving it's fraudulent, and proving it to the standards of the court, and as I say, getting to a stage where the Gardaí will investigate it, and then to a stage where the DPP will prosecute. There are a number of steps there.
Just to try and understand your motor insurance book, you have 100% premiums out there. You have a book of whatever it is, customers. How many typically in a year are making claims? Is it 6%? Is it 8%? Is it 20%?
About 11%.
About 11% are making claims. And of those claims, you reckon 10% are fraudulent that you catch, 10% are fraudulent you don't catch. And of the 80% that's left, what's really hardcore legitimate, the kind of things that every other country pays out on? 40, 50?
You probably aren't far off on that. I'd say 80% of the count of the number of claims we get in are soft tissue injuries. We do have then balanced against that. We have some, pretty very serious and horrific injuries that, frankly, that's what we're in the business for. They are extremely expensive, and people are in very difficult situations after them. And
that's what insurance is for. And I think nobody in this committee is trying to dispute that if somebody's in a car accident, often not to, there's two sides to every car accident, and usually one side's more at fault than the other. And nobody's disputing proper claims. But I suppose you have a certain amount of people who are coming along and saying, oh yeah, my car got a tip, and now I've got mental trauma, I've got anxiety, my children are not able to sleep, and we had months of this into us before, Insurance Ireland and others telling us this. But in terms of the motor insurance market, what can be done? Are you using it? We can blame whiplash, and I would prefer if it was to European norms or less. But in terms of technology and telemetry and so on, there's lots of technology. You could have black boxes in cars, you could have technology, you could have dash cams and you could have information about speed limits, speed performance going into the cloud and so on. It's all there. I mean, what efforts are you doing to monitor your premium holders' behaviour in their car, so that they know that if they're on their mobile phone, if they're texting, if they're whatever, they're going to get caught by a camera in the car? Have you explored any of those options?
So I suppose there's a couple of things there, Senator. Just in relation to our overall, what we call our combined ratio in insurance. So we're making approximately a 10% margin when you look at all our claims, all our expenses over premium. And we're a business, and we feel that's a modest return, a fair return for what the service we give. You mentioned dash cams. The current legislation around GDPR doesn't actually allow us to use some of the data that dash cams actually can track, unless we have the explicit authorisation from the other person where that dash cam was actually taking footage from. So I think legislation could help us improve our ability to get the correct data to allow us to proactively challenge or pay out fairly on claims. So I think
that goes somewhere towards answering the question I was asked about, if you were us, what would you do? But in terms of the behaviour of the person who's paying the premium to you guys, a camera within the car monitoring the driver's behaviour, seeing whether they're texting, seeing whether they're taking calls, keeping in track on their speed limit and so on. Is any of that technology in place?
Again, like I'm not saying it's not a good example, and I see that in Italy, for example.
20 minutes.
For example, in Italy, they're moving to a situation where telematics is fitted in all cars, and they don't allow soft tissue injury outside of a certain G-force collision in the car. So it's an example of what you're saying. But again, fundamentally, we're just too generous in our court awards, and it's a very subjective decision then to say, well, actually, what is the real cost of the pain and suffering when somebody says they've got pain and suffering, and particularly around and I'm talking about really the soft tissue type injuries. I mean, I'll give you just maybe sometimes to colour just one example here from a couple of weeks ago, where the two cars, driver's door, wing mirrors on both vehicles were damaged. So the wing mirrors hit each other going by each other. The claimant alleged that well, there was first of all, there was no lost. He lost no time from work, but his overall complaints were anxiety, sleep disturbance, and he was getting palpitations. Our cardiologist gave him a clean bill of health, and we ran the case on the basis of minimal impact, no complaints made at the scene. Continued to work normally since. Didn't seek any medical attention until 6 weeks afterwards, and we thought his complaints were unreasonable on the basis of the facts of the accident. It ran before the courts. A psychiatrist was called by the plaintiff, who supported his evidence, and he got an award for $22,500.
And the legal fees on top of that, another 40%?
Fees on top of that, another 40%. Now, I have reams of the type of example.
Well, keep going, because actually this is the only time we're going to see them. Give me 2 or 3 more, because...
Okay, well, I'll give 2 or 3 more around the point, which is a key one, around the length of time. The length of time is determined of the costs, not the severity of the pain. Okay, so that's the key kind of insight, I suppose, that I'm bringing. So, for example, we had a claimant who suffered neck and upper back injuries. The Injuries Board awarded €14,700 12 months after the accident, and based on a medical examination that the plaintiff would recover within 16 months of the accident. The case went to trial. 4.8 years later, the claimant alleging ongoing complaint, the judge awarded him $33,000, and costs were at $16,700. 2 other quick ones then. The soft tissue injury neck and shoulder, PIAB awarded $9,900 1 year and 10 months after the accident. The claimant's own GP expressed the view in his report that she was 100% recovered 6 months after the accident. The case went to court, and the judge awarded $33,700. The claimant was alleging ongoing complaints and stated she didn't agree with her own GP's first report. One last one, just that it's not all soft tissue injury. Claimant suffered scarring to the lower leg and post-traumatic stress after being bitten by a dog. PIAB made an award 1 year and 11 months after the accident for €78,600. The case went to trial in the High Court 2 years and 8 months after the accident, and the claimant was awarded $103,000 and legal costs of $41,000. Now, the key point is we can talk a lot around a lot of the stuff on the margins and the periphery. The fundamental issue here is the legal system is too generous. It's too generous by a factor of 5 times, particularly on soft tissue injuries, where the real problem is. And it's incentivised because drag it out, a long, slow process generates significant legal costs. And at the end of the day, the claimant wins because they get a higher award. The lawyers win because they get significant fees. Businesses, consumers, people paying insurance lose, and ultimately society loses. And to me, everything else is helping. It helps at the margins. That's the significant issue that needs to be addressed. Okay. And we need to use that to change what's fundamentally a very high claims culture in this in this country.
Okay, thank you very much. And just to make the point on Solvency II, you might come back in someone else's response about Solvency II. Thanks.
Thank you. I'm really glad to see you here today. Thanks for your opening statement. I think it's extremely useful to have you here to ask some of the questions that we need answered. So I have a number of questions, and the first one is, how much did FBD pay out last year on claims?
Our claims last year were of the order of 190 million.
190 million. And how much did you take in premiums?
We took in 371 million.
371, right. So that's a fair profit. Your profits are up 41%, is that right?
After losses in 14 and 16.
Yes, that's right.
2014 and 15.
Yeah.
Profit
so they're up
16.
41%.
Yeah.
So when you said earlier in the earlier years that, or you said that we must follow the money, and that's another reason for increased premiums. So in light of that massive increase, is that going to be reflected in the costs of the premiums for FBD for your customers now?
Yeah. I suppose we have to be very careful in terms of commenting in any way on premiums and prices because of we don't want to be price signalling, and we can't. I do think that premiums are beginning to stabilise.
But do you think it would be a reasonable expectation of people looking at those profits to expect a fairly drastic decrease in premiums?
Okay, maybe.
And looking at any company, say.
Okay, well, looking at any company, I suppose the first round is that FBD is very proud of its turnaround. We took, we do a massive amount to
No, really, we have to get to the crux. We really have to get to the crux.
Okay, so
we are running out of patience in this, and we need insurance prices to come down. We have talked for the last 3 years about it. And I'm sorry, you're the insurance company that happened to be here. And really, I'm kind of running out of patience with all of this, and I do think we need emergency legislation. You're telling us what we need to do. If you were sitting in our shoes, what we need to do. We are listening, we are hearing what you're saying. I am now going into your shoes, and I am telling you what you need to do as well.
Our current year combined ratio is running at about 90%. So what that means, for every euro we underwrite, we're getting a return of 10 cents. We are a business, and we don't think that that's an unreasonable return.
Yeah, you're a business, and you're a very profitable business, and we just want fairness for citizens, and I'm sure you will share that you want fairness and transparency for your customers as well.
Absolutely, and just specifically for small businesses, as I mentioned, our book is growing, so we're getting more customers now than we had before. So I think that's important. I also feel that it's in our interests to try and attract as many customers as we want, but we have to make a return as a business, and a 10% return, in our view, is not an excessive return.
Okay, let's go on to the risk management practices. So you stated that risk management practices were to be put in place and that this would reduce premiums. Risk management practices are now in place in most of the marts for the last 2 years.
Yeah,
when are the marts going to see the decreases reflected in those actions that they have taken in terms of risk management?
I've actually, Senator, I've had some very good conversations with ICOS and ALM, the MART representative bodies, and I've met with both of them, and we've shared our numbers with them. The fact of the matter is that the MARTs at the moment are loss-making for us, and our combined ratio in that sector is in and around 160%. So for every euro, it's costing us €1.60. We are committed to working with the marts. We are committed to insuring the marts. And I suppose a frustration for me is that we're insuring them, but then we have our competitors who won't insure them because of the losses.
Okay. Have the claims gone down in the marts over the last 2 years because of the risk management measures that they've put in?
We haven't seen them go down at the rate that we would like to see them going down.
How much have they gone down?
I don't have that to hand at the moment. All I can say is that last year the combined ratio on marts was in the order of 160%. They were loss-making. We are the only insurer in this market that will insure marts, and we're committed to doing so because that's where our farm customers trade.
So you have a monopoly on it in terms of marts insurance, is it?
Absolutely not. Nobody else wants to come into the market because it's loss-making.
Right. So one mart manager set about trying to gather the information on the premiums and the costs and the claims, and every roadblock, we're being told, was put in place to prevent it happening. And when she organised a meeting with all of the marts, you wouldn't go.
No, actually, Senator, I personally attended the ICOS. We bought all the ICOS mart managers.
You did, 3 days beforehand.
Sorry, and I also attended with the AML, and I believe that person is associated with the AML, and we deal with the representative bodies.
So you won't meet with the mart managers, just the representative bodies? Right.
Sorry, excuse me,
No.
the mart managers were actually all there at the ICOS meeting.
Okay. Now, in a lot of claims, the claims that are being paid out, there is little or no evidence that there were actually any injuries caused or sustained on the mart premises, but you have settled. And mart managers are very unhappy about 80% of those claims that are settled. Why are you doing that? Why are you settling?
Well, we certainly, in the first instance, we put a lot of time and effort into investigating the claim, and in that we want to understand: are we on cover? Is the customer on cover? And is liability an issue? In other words, are we at fault within the claim? Mm. And if the investigations show that yes, they're on cover and yes, liability is at fault, then we're in a situation of trying to value the scale of the injury. And again, back to my core point there is those scales are essentially set by the market rate for those is set by the courts. What we're trying to do, which is absolutely in our customers' interests and favour, is to pay the claim and without having to pay the significant costs to the to bring it to the legal system, which has twofold impact on it. One is that the length of time the injury is suffered is greater, so the compensation may be significantly higher, and we're also incurring costs. So it's absolutely in our interest to settle the claim at a fair price, and it's also in the customer's or the claimant's interest to settle that in a speedily way. If it's in that zone, we will try to settle it. But if it's not, we'll fight it. Absolutely.
You see, and I think that you're right in that sense. But you see, if the mart isn't negligent and there is no evidence to back up the claim, why are the claims being paid out in the name of the marts? And then is it not just too easy to then pile on whatever amount is claimed out, pile it on to the premium holder? Because that just seems to be what's happening.
I have a lot of sympathy for the marts. I have a lot of sympathy with that perspective on liability. The difficulty is that your interpretation or my interpretation of where liability is at fault, what constitutes an injury, and what the courts will ultimately declare as liability and as injury could be worlds apart. And there are certainly balanced with that. We've had some horrific accidents within the mart, and we know, and we're working hard with the mart owners to try and address this. But fundamentally, because the patrons are in the gantries with the animals, there's a lot of potential for them to get caught in gantries, and we've had a lot of examples where that's the case. And I certainly would like to leave you in absolute no doubt, and it costs us significantly. We'll pay where we think it's right at what we think is a market rate. Taking the market rate is way too high. But if we're not, and if we've got a strong case, we will absolutely fight that case. And I wouldn't like you to have any doubt about that. Certainly at FBD, and that's why I'm speaking from here, we will fight the cases.
And I mean, now that is there CCTV in all of the marts, so you can, you have the photographic evidence there, you have the evidence of what's happening. Surely that must reduce the number of fraudulent claims.
It certainly help. Unfortunately, it wouldn't be in all the marts across the country.
How many fraudulent claims have you reported to the Gardaí?
Again, just on fraudulent, see, the issue is very often just the severity of the injury and what the payout for that injury might be. So in a lot of the cases, there may have been an accident or an incident, and some injury may have been suffered. It is the cost of that payout, and it's the cost for us to getting to a payout decision through the legal system that is really driving the lion's share of our cost of claims.
Do you check back with the premium holder, with the mart, in term before you settle a case? Do you discuss it with?
We certainly have our like in terms of our detailed investigations, we would talk to all parties.
But before you settle, so say you're coming near the end of a claim, before you settle, do you go back and say this is the amount we're looking at paying out for that incident?
We give a settlement letter to our policyholders, telling them what we're settling for.
So you do it first. I mean, you make the deal with whoever is claiming, and then you go back to
a lot of
the
the time
person
we'll
with
do
the
it. A
premium.
lot of the time we'll do it in advance, and it's interesting. Sometimes in that part of conversation, you're saying, well, that's and I can understand it, because I feel it a lot of the time in my job that the payouts are just too high, and they are too high. I'm absolutely making that clear from the start, and it's driving the cost of insurance. So, if you say to the customer in that situation, well, we're paying out 25,000 basis of this injury, and they're saying, no way, that's ridiculous. And we say, okay, well, if you were to have a hypothetical, offer them, the 25,000 plus 40% of that in cost to run it, would they accept it? Of course they wouldn't, because it's just too much risk that running that case, with the cost that bills, with the size of the compensation that can increase, and with the actual courts or the law of our land's interpretation of what is fault and what is severity of injury.
Yeah, I mean, I leave it at that. I mean, I've heard 2016, one small mart, one claim, and their insurance in 2017, 12,200. It's just been piled onto the premium holder all of the time.
All I can kind of finish on it is saying that, we're losing money on marts. We're possibly the only insurer that's willing to insure marts, and there is a reason for that. They're loss-making.
Senator O'Donnell.
Yeah. Thanks, Chairman. There's a perception out there that up to a couple of years ago, insurance companies were effectively gone head-to-head in terms of the competitive market, and in fact they were underpricing and they weren't putting in proper provisions and so forth. Then we got to a point where suddenly the wheels came off the wagon for the insurance industry, and they suddenly started up. The rates went up. We're now at a point where the insurance companies, and we were asked to put this direct question to you, the insurance companies are now beginning to show significant profits. And yet the rates are not dropping in any way in the same level as the reserves, and the profits are going up. The premiums are not dropping accordingly. We're now being told anecdotally that you're provisioning to put a reserve bank in place. The insurance companies blame the legal profession and blame the legal costs. The legal side and solicitors and barristers blame the insurance companies. And the only person that appears to be getting a raw deal is the consumer. And the question is that we are here as public representatives. We have the legal profession coming into us, and we have the insurance coming into us. And it's déjà vu. And really, at the end of the day, we never seem to get to what is really going on. So first thing is, if you're making all these profits at the moment, why aren't the premiums dropping accordingly?
Well, could I just put the profits in context? Okay, 50 million, 43 million after tax sounds like, you know, a lot of money, okay? We target, and for our company, the level of risk that our investors are taking in it, we target low double-digit return on equity. Okay, so we target 50 million equates to 15% return. It's a little bit above what we would target in 2018. But in terms of, we need our profits first of all for the providers of capital who demand and are entitled to a return on their capital. It is people who are investing in the company. And low double digits for the type of risk that they're taking is not exorbitant. It's what the market expects and it's what we're expected to deliver on their behalf. So there's no question here of FBDs or, in fact, insurance companies. It's a highly competitive industry. Certainly no question of FBD making any kind of, you know, supernormal profits. We're making an adequate return, and we need that return to pay our claims into the future, to remain financially sound and stable, and to continue to invest in the customer and to give stability to our customers through the cycles. That's the very first point I would make, that the profits are not exorbitant from an FBD's perspective.
If the Book of Quantum is revised, it's going through, the Judicial Council bill is going through, and we're saying the Book of Quantum is revised, and the Book of Quantum is revised on the basis of international benchmarks in terms of payout of claims. Will premiums drop?
Premiums will, if the cost of claims drops, premiums will absolutely drop.
And will they drop proportionately?
They will drop proportionately, yes.
So you're saying to me, if I have, we'll say I'm paying €1,000 a year in motor insurance, and we'll say claims drop overall by 50%, you're telling me my motor insurance will come down to €500?
You should see a commensurate drop in your motor insurance. Yes.
And how will you do it? Will it be based on the overall claims across a range of areas, or will it just in relation to the claims on motor insurance?
Well, we basically look at we price our book by product, by channel, and by sector. So broadly, what we're saying there is that we bundle risk, and the very principle of insurance is the premiums of the many pay for the premiums of the few.
So therefore, is it across all areas? So will it be claims across all business areas?
If injury claims reduce across all areas, the premiums for injury claims will reduce across all areas, yes.
But that's the point I want to do here is, so for instance, you've a lot of claims, we'll say, on car. I presume your highest number of claims you have would be in car insurance.
Of injury claims, is it? Yeah, it's about, yes, it would be.
What proportion of, the question I'm trying to really...
Roughly, there would be 50% in motor, 25% in employees' liability, and 25% in public liability.
Okay, so 50% in motor, 25% in employers' liability, and 25% in public liability. Now, and that's the proportionate. In terms of value terms, what would they equate to under those headings? So if 50% is motor, what percentage of the actual payout in claims would relate to motor? Is there a correlation between the amount of, when you give me the 50, 25, is that the number of claims as distinct from the value of claims?
Value.
And if I was to look at just the number of claims, what ratio would I get there?
Won't be far off that.
Okay. Now, if we come along and we'll say, and would the claims, insurance claims, would the personal injury be of a common nature? Like, would it be whiplash? Would it be of a common variety in terms of motor? Like, what's the percentage of claims? Is there any particular area where, or sorry, I'm putting another way to you, are the bulk of those claims at the lower end? You've probably heard the discussion this morning that the Court of Appeal is dealing with very much the upper end of, serious injury. But are the bulk of the payouts in routine areas?
The bulk of claims are in the lower end, yes.
Okay. So if we see a situation whereby...
But lower end is high.
No, Richard, that's what we need to find out, right? If we come along and we'll say you suddenly find that so if you can guess, they were speaking this morning, we'll say the minimum payout income whiplash is around €21,000, I think, if I'm sorry from memory. Maybe the chairman will correct me, but I think that was the figure. And that suddenly goes down, we'll say, to 10,000. And you see a fall off, we'll say 50% reduction in what's the book of quantum across a range of areas. Will I see a 50% reduction in the premiums?
And I'm actually quite happy that...
Will you give that commitment publicly?
And in the revised book of quantum, of what it's revised to, we will take that and we'll analyse that and we'll tell you what impact that will have on the price, if it's adhered to.
But adhere?
If it's adhered to.
Adhered to, right.
I mean, part of the difficulty in the book of quantum is that if it's open to discretion, and that discretion is exercised liberally, well, the book of quantum will be meaningless.
So you're willing to say here that there's a direct correlation in the premiums that you charge from the insurance claims under headings?
And without doing kind of back-the-envelope calculations, I'm quite happy that the revisions to the book of quantum, if you give that to me, I'll let our actuaries look at it and we'll tell you what that will impact on in terms of reduced premiums.
And we'll say, have FBD as an entity made submissions to the Department of Finance, the Department of Justice, the various ministers, and what they would see in terms of the terms of reference for the drawing up of a new book of quantum by the Judicial Council?
You see, I don't even think that I don't even think that there's a full acceptance that the level of awards are too high within the full legal system. Certainly, you know, even after the last report, some of the commentary coming back was more saying, well, that's they're entitled to it. That's what they should be getting. And you know, there's a fundamental problem there. If people think that what we're paying here is okay at those levels, and the result of it being okay at those levels is simply that premiums are going to stay high.
And the question, it hadn't come up earlier, right? Do you underwrite yourselves, or are you with underwriters for your business?
No, we underwrite ourselves, yes.
Okay. So will Brexit have any impact on your business model?
I think, Senator, it will. 50% of beef consumed in the UK is Irish beef. So the downstream implications will be that, you know, our customer base, our farming base, premiums, money will be tighter in the farms, and that will affect people's ability to pay premiums. So it's, you know, it's very, very worrying. And obviously as well, you know, milk and cheddar consumed hugely in the UK. Again, that impacts on our customer base.
What's the breakdown of your customer base between farming, small business, individually?
Approximately 55% of our book is farm related, 30% small business and 15% consumer.
So you're heavily, 85% of your business is tied into the SME sector, farming.
Yeah.
Okay. Well, then it's very simple, really. Like, Everton today appears to be around the Book of Quantum and the revision, right? I'd ask, Chairman, that once the Book of Quantum, the legislation has gone through and we see on what's the happening with the Book of Quantum, that we would, as a committee, engage actively in seeing the actual terms of reference in terms of the revision of the Book of Quantum. Because I feel that's the key. We can have the review all we want. Terms of reference will be absolutely key. And our view really is, if we have a commitment here from FBD, who are the largest indigenous insurer in Ireland, where do you rank in terms of insurance in Ireland as a company at this stage?
We jostle between first, second and third in terms of scale, yeah.
Okay. Well then, we'll put you in as the premier Irish insurer.
Thank you.
And that if you're willing to give a commitment here, that if the Book of Quantum brings about a reduction in the awards, that you will have a direct correlation, proportional reduction in premiums, then we have something structured to work on. And Chairman, I just ask.
The Book of
quantum is followed is the caveat.
Absolutely. And could I just add one thing to that, just so we keep our eyes as well?
That's about the terms of reference, Chairman, in
Yeah,
the
yeah.
review.
It's absolutely, but the other side is that the actual cost to getting the payout decision. There's an awful lot of money is tied up in the in the legal system and getting to an award. So we need to also focus on trying to make that process. And I know there is.
How long does it? Say I have someone and I have a car crash, and yeah, no, no, and you put it. How long will it take the case?
About 5 years.
Okay, thanks.
Deputy McGrath.
Yeah, thanks, Chair. I'd like to welcome our guests as well. I'll be relatively brief. Just on the issue of the judiciary and how they would interpret and view the Book of Quantum, I think the point that it can't be too loose is fundamental. If there is still a significant degree of discretion, then I'm not sure we'll solve anything. If the judge merely has to have regard to the new guidelines, then it's a waste of time. It has to be much tighter than that in terms of its application, and that's something that in the course of the legislation we'll have to watch very, very carefully. Otherwise we're not going to make the progress that we want. Just on the overall financial performance, Mr. McMahon, I take your point about insurance companies have to be profitable. It is a risk-based business, and so profit before tax, I was looking at the annual results there, so €50 million equates to return of equity, as you said, of 15% on a gross written premium of 372 million. So PBT as a percentage of premium is about 13%. So would that be typical of what the market would expect FBD to deliver as a PLC? You have investors. I'm not sure of the profile of your shareholders. I would assume there's probably significant institutional shareholders among those. So is that typically of the order of what you would expect? And I mean, if it was 20% plus or 30% plus, would you accept then that it's too high? But I mean, it's not there now.
No, certainly that's what they expect. That's what we target for them. It's on that basis that they go through it. And I think I can certainly understand the concern, but I'd just like to say is that, you know, we as an insurance company, and particularly as a PLC, like, our accounts are open, they're published, they're there, they're audited. We're the only company in Ireland that our accounts are available. The rest are branched back into their UK parents or elsewhere. And the idea really, and just to give some comfort to the members of the committee here, is it's a very competitive market we're in. People and investors need a return, but we also need to grow our business as well. And if the profits become, and it's basic economics at one level, if the profits become so great, people want to sell more at that profit. It drives price down, and profits return back to a normal level. And that's the forces of the market within which we operate, and they're sometimes quite brutal, and the competition is brutal. But the free market will ensure that we continue to make what is a normal profit.
Sure. And am I right in saying that your financial report there encompasses the full activity? There are no intra-group transfers, management charges, etc., because it can be very difficult for us to get a true handle on what is the underlying financial performance of some of the larger international groups.
That give very little reporting to Ireland.
Money is flowing in and out, and you know, the performance, the reported performance, can be influenced significantly by management charges flowing in and out. But
no flows.
Your reports are that's FBD, and that's it. There's nothing in and out apart from that. Okay. Just in relation to the farming sector, and I was just looking at the whole area of farm accidents and the tragedy of farm fatalities. The number last year, I think, was 17, down from 24 in 2017, which, you know, is a really high number still of people dying on farms, which is an awful tragedy. And then there are many more accidents that don't involve fatalities, but serious injuries. So what is the picture out there, and what is the trend on Irish farms in relation to farm safety and the number of accidents? Is the trend going in the right direction? With all of the work that Health and Safety Authority and insurers like yourselves and others are doing to raise profile along with the farm organisations of farm safety, is progress being made? Because those figures are worrying still.
I think, Deputy, look, one death is too many deaths, and it's something that we look very closely at. I suppose the life of a farmer is a busy person, heavy machinery, and we certainly invest a lot of money in trying to promote farm safety right across all our books of business through our local branch network. Can we ever do enough? I don't think you can ever do enough. But certainly it's something that we will continue to invest in. We do go to marts, we talk about farm safety. We do go out on farms, we talk about farm safety. We're hugely supportive of any initiative that will help our customer base and reduce fatalities, because for us, one fatality is too many.
But in terms of the trend from the farm sector in the whole claims area, is it improving? As in, is there a reduction in claims? What is the picture?
I think the frequency is broadly in line, and the level of cost is beginning to moderate. Still slightly up, but moderating. And I'd just like to echo your points there in terms of obviously the accidents themselves and the type of cases across my desk. Some of them are absolutely horrific, and the amount of pain, damage and suffering that people inflicted on people. We're working hard with the IFA. We're working hard with our people on the ground to give the best advice possible. And we certainly also, through FBD Trust, we do sponsor and support a number of farm safety initiatives.
Just in the financial report that came out in February, FBD said more moderate inflation is evident across the claims environment, though the cost of claims continues to remain high. And you go on to make criticisms of the lack of urgency in the reforms. So is it that there is still inflation in claims, but the rate of growth is easing? It's not that they're falling. So can you just elaborate on what that means? More moderate inflation evident across the claims environment.
Well, I suppose if I just maybe give you the high-level figures of the average cost of injury settlement, 2016 would have gone up 11% from 2015. 2017 went up 8% on 2016, and 2018 it went up 2%. Okay. So it's certainly moderating, it's levelling it out, and the inflation is but it's still on the increase, not on the decrease.
Okay, and I'm not sure if you heard any of the testimony earlier on from the previous session, but Linda Murray, who owns a play centre in Navan, spoke passionately really about her difficulties. She's, I think, 25 days away from potential closure. At this stage she can't get a quote for renewal, and it's symptomatic of wider problems, particularly in businesses where there's a public footfall, is where there seems to be a major problem. But where do you apportion ultimate responsibility here? So you're saying claims are too high, you're saying that judges are too generous, you've been critical of the role of some in the legal profession as well. Where does responsibility lie? If all of this comes back to claims and awards and the lack of follow-through then for fraudulent claims, there seem to be no prosecutions, no convictions, so there's no deterrent really. There's no consequence if you take a bogus claim and it doesn't work out, or you try again maybe with somebody else. So where does responsibility lie ultimately as you see it as a company, looking at the insurance industry and the payouts at the moment?
I suppose it is a very difficult area, and ultimately I suppose my hopes do, if I'm honest, sit with this committee and the legislator. I do fully appreciate that the legal system as we have it now is insulated by layers and layers of legislation, and I also appreciate that it is protected to some extent around the separation of powers. But fundamentally, and this is not new, we've tried to address legal costs outside of even insurance and injury. We do have a system that has created a culture that is highly litigious and that is very beneficial for claimants and for the people who are litigating those claims. And that needs to be addressed. It's how to address it is the challenge, given those layers of legislation and given that separation of powers.
But is the bottom line that the reward at the end of that is too great? The reward for taking that litigation and taking that claim, perhaps there may not be great foundation to it, but the reward is potentially significant. And the downside of taking a claim, particularly the downside of taking a claim without foundation, is really non-existent in the current climate.
And it's creating extremely high costs, and it's ultimately society is losing. And I want to be very clear here, because we are talking about, to me, there are claims, and people are absolutely entitled to be compensated for their loss. And we've no difficulty. We do it in property, we do it in material damage. It's really when it gets into the soft tissue, smaller end of the injuries and the level of payouts that we're giving and what we are saying is an acceptable compensation for that level of pain. And I think, Ms Walsh, back to your point, it absolutely is too high.
Okay, thank you.
Thanks, Senator Lawler. Just before you come in, there's a vote in the Dáil. The TDs are obliged to go. So I'm going to ask Senator Harkin to chair the remaining part of the meeting, and just to record my thanks that you're coming along, and to say to the judicial system and to the lawyers, because they've been mentioned umpteen times, they're quite welcome to come to the committee and make a case for themselves if they so wish.
First of all, I'm grateful to the Chair for allowing me to speak. I'm not a member of this committee, but I have a fierce interest in it. I also have a bill going through the Shannon at the moment that got through second stage. There are question marks about it, but the purpose of it is to cap awards in the courts. And I've done a fair bit of research. I think, John, I might have been speaking to you or looking to talk to you with regard to this whole area. And I see the problem is fourfold. Levies. Every one of us are paying insurance levies, and up to 7% of your premium is insurance levy. So that could, it's associated with Quins and all those insurance companies that failed. Profits is part of that thing too as well, and people have spoken about excessive profits, and I can understand. I'm not anti-profit, but when it's excessive, then there's a problem with it. Fraudulent claims and over-exaggerated claims is a problem too as well, and I don't feel the insurance companies are doing enough about that to go after fraudulent claims. And the courts, actually, we as legislators have to do something with regard to people who bring fraudulent claims and are thrown out in court, that we should be actually pursuing them through the courts actually for looking at fraudulent claims. But the one that I'm key on is the awards, and I agree with you, there is excessive awards there. We're 4.5 times more than what we are our nearest competitor, with the UK, way out of sync with Europe. And the awards are across the board on particularly soft tissue injuries, as you mentioned beforehand. And people have mentioned about changing the Book of Quantum, and has already been highlighted here. It's not changing the Book of Quantum, it's changing what the judges award. And so I'm not going to go on too much about it, but I'm going to ask you this. 2 questions. One, if you have a claim and you're defending a claim, and you have Judge A in front of you or Judge B, and you know that Judge A is going to make an excessive award, and you know that Judge B is going to give a reasonable award, do you settle before you go into the courts if you know you've got Judge A who's going to make an excessive award? And if you have Judge B who makes a reasonable award, you actually let it go through the courts. Is that a fair assessment?
I think when we have a strong case, we'll absolutely fight that case regardless of what judge is involved in the case. I would say that, yes, there is a certain amount of variability among various different awards, and there's some variability around decisions on liability. And I suppose ultimately, you know, it is down to a set of facts on both sides and cases built on both sides, and it's how somebody interprets both cases. So you're always going to have a level of variability in it.
The second question is, if a claim, two claims, sorry, again going back, are identical, same incident happened, similar incident, and same injuries associated with it. Again, I go back. Is there certain judges make different awards for that similar type injury than other judges?
Again, I would say it's fair to say there's variability in what would be awarded.
So what you're saying is that there's no consistency among the judiciary as to similar types of awards, similar type of claims. The judiciary don't have any consistency in their awards.
I don't know if I wouldn't say that there's no consistency, but it is another interesting point which is worth raising as well, is that there's huge variability particularly in the circuit court, in the level of costs that are awarded by the court registers. And that's not understood why.
Right. And the last point I'm just going to ask you, and irrespective of what we do with the Book of Quantum, the judges don't have to adhere to it. So it's more, I keep going on, it's the awards that the judges are making. Did you ever feel that we should be naming the judges that are making the over excessive awards? So they should be called out there, because if judges make excessive awards, it impacts on all of us who are paying insurance claims. Do you feel that we should be naming judges who make excessive awards over and above the norm for similar type injuries?
I don't think that's for me to comment on. But I would say that, you know, we have more recently had some good judgments by the Court of Appeal, and that and I suppose, you know, ultimately that is one way of calling out. But it is a very expensive and lengthy process for us to appeal something. But we have had some good judgments from the Court of Appeal, and particularly around people taking what would be reasonable care of themselves in particular circumstances.
Yeah, well, the problem is most of the claims are at the lower end of the Book of Quantum.
That's correct.
In excess of 90% of claims going through PIAB are below 50,000. So, and they're the ones that are causing all the problems. But the problem I see is that there's a lack of consistency among the judiciary with regard to similar type claims, that it depends on what judge you get in front of you, whether you get more or less.
You know, there's a certain amount of regard must be for the judiciary. Just in terms of, for your own sake, just in terms of how we make these points, I think you've made the point well, but it's just there's a certain amount of respect must be held for another arm of the state.
Oh, no, I have no problem, and I have great respect for, but there has to be consistency.
No.
As a former referee in rugby, I do understand the problems with adjudicating on games, but I prefer to see consistency rather than inconsistency.
Okay.
Okay. And I just want to reiterate what you've said before, that if the awards are reduced, the premiums will be reduced accordingly. Okay, that's great. Thanks very much. I appreciate that.
Thank you very much, Senator Lawler. Senator Davitt, go ahead.
Deputy Chair, I suppose going back, we would have had quite a lot of experience in the insurance industry, and it's, you know, I suppose they're not it's an easy can to kick at present, kicking the insurance industry, but I suppose if we stand back and have a look, we see PMPAs, Quins. Ireland hasn't had a great track record with insurance companies or Irish-owned insurance companies. So I think we'd have to be, we'd have to be mindful of that. If we didn't have FBD in the insurance market in Ireland, we'd be totally at the mercy of the German and British insurance companies and French. I suppose that's the reality of it. So people might like to come in and bash and whatever else, but you're an Irish-owned, as we know, stock-listed company here, and providing lots of jobs throughout Ireland, which a lot of these other your competition, a lot of them are not. They're totally internet-based and providing very little and no jobs in Ireland in a lot of cases. So it's good to have, an Irish-owned company here that have a face. I know in my own town in Mullingar, you've had quite a large, extensive operation there, and an extensive Irish call centre, which has to be welcomed as well, because as most people would be aware here, a lot of these call centres are not Irish-based, and the staff are not Irish, and trying to get your point across is, it's frustrating, to say the least. So that hasn't been overlooked, and all you might listen here today and whatever else, it certainly hasn't been overlooked in the business community anyway. Do you feel, being the only, Irish entity in the real Irish entity in the insurance business, that you could be very volatile? Do you feel some of these larger European conglomerates can squeeze and really push markets? This was a common abuse of the market, where they would undersell themselves to try and squeeze different operators out of the market. Do you feel that you're still very volatile to that? Is a lot of your book being, underwritten by some of these larger insurers? I'm just curious or not. I think you underwrite most your loss yourselves, as far as I'm aware. I don't know if that has changed or not. But do you feel that you're there to be picked on or bullied or squeezed at the will of some of the bigger British, German, or French operators at any given time? And does that put I'm sure it has a lot of financial constraints on you, the way you have to position your cash flows and whatever else. I'm just curious if you could bring us how you stand in an international market, in a free, open, a trading society like Ireland here as part of the EU, and as an Irish operator, how that affects you.
Thank you, Senator, and thanks for your remarks. Just before I answer that question, we are very proud of the fact we are Irish, and we're 50 years in business. I suppose because we don't have a wealthy parent like our competitors, it's very important that we get our pricing right, because we can't go to London or we can't go to Germany or France and say, give us a bailout. Unfortunately, if you look at the insurance industry over the last 10 to 15 years, we've had new entrants coming into the market, and they've driven prices down. And you know yourself, the companies that had to go to the parent to put huge money back into their reserves. And most recently, we've had Setanta and Kudos.
Yes, yeah.
So I suppose, as an Irish indigenous insurer, it's hugely important that we charge a fair price for our product, because we don't have the comfort of a wealthy parent. So are we being bullied? We feel that we're very agile. We need to be more disruptive because we don't have the budgets of our competitors. But we certainly feel, and obviously being led by a very capable CEO as well, that we're very much up for the fight. And because of our unique distribution model, so we have a branch network, our competitors don't have that. We feel that because we're close to our customer base, that gives us a unique advantage that we just need to make sure we're leveraging as best we can. So, and as Jackie mentioned, it's highly competitive, but maintaining our pricing discipline is hugely important, because we don't have that wealthy parent that can come in and bail us out.
Yeah, I suppose the network, and it'd be remiss of me not to mention Barbara and all the gang in Mullingar anyway. So, keep up the good work. As I say, there are, evidently it's easy to come in and criticise insurance, but if we didn't have ye as an Irish-owned entity, we would be in a really precarious position, I would believe.
Thank you.
I'm just going to come back on a couple of points now that I happen to have the chair. Just in terms of, I had put a question, and I apologise, I had to step out. I had another commitment. Solvency II. Is there any the impact of Solvency II in terms of having to have higher reserves, which is reflected maybe in higher premiums and so on? Has that is that settled down at this stage, or?
Yeah, I think that, look at Solvency II, there's a lot of rules within Solvency II in terms of also the how we can invest, how much capital we have to hold. There's no doubt it has an impact on it, and you know we're absorbing that impact in the same way as all of our competitors are.
But higher premiums are a part of that, or were they in the past a necessary requirement to get to the reserves you needed to hold to a greater extent than maybe before?
It's also related to what we can do with the capital that we are holding, and what kind of assets that we can invest in, and essentially our ability to generate return from those assets is lower because we have to invest in safer assets.
So I suppose
essentially it means that and I think it's more driven by the investment climate at the moment, but certainly, you know, where insurance company would have made money from investing now
in the boom or in a boom.
Well, in a higher interest environment where there's higher returns, so you know, obviously we need to make our money from pure underwriting.
So you've moved more. The balance has shifted from equities towards safer.
To bonds, yes.
Bonds, and the bond interest rate environment is low, so
it's
therefore
lower.
You're getting less.
So the overall return to our shareholders.
So the return to your shareholders then that needs to come back through higher premiums and higher profitability in other sectors, because you're not getting it through the. Or arguably, and you can disagree with me if you want, or either confirm my thoughts, that when interest rates were better from an investment point of view, or when bonds were paying out more, that effectively subsidised the shareholder return to an extent, or subsidised the general insurance business to an extent that you could afford to make less or lose more or whatever.
It puts more pressure on the underwriting result.
Yeah, just in terms of the play centres, and I mean, are you in a position to look at the providing or examining people's businesses like play centres, activity centres and so on, or is that something you just don't do because I took your point earlier that you generally, it's the farm business, and by extension it might be a small pub, or it might be a takeaway business that's attached to the farm or connected to the farmer.
That's not within our current appetite, Senator, no.
Okay.
So,
like, I suppose just...
I mean, it does seem, just from the figures we got this morning, it does seem to be, and I accept that you have a remit and you have a mission statement and you have a core business, and I'm not telling you what to do. It just seems from their figures that if 5 million has been collected in premiums in the last 5 years, that they said about 200,000 have been paid out, about 800,000 is sitting there in reserves against future claims, potential future claims, and I'm sure they're reasonably prudent reserves, that they seem to think that 4 out of the 5 million, and that's money that's leaving the state because there's no one in the state willing to take that risk, including yourselves. I'm not telling you what to do, but I would hope that somebody somewhere would be able to facilitate these businesses in the provision of family activities that may have to close because there's no one doing it. And you know, you have made the point very well that you're embedded with the 34 offices and right across the country, and in marts and in farms and in everything else. I'd something then I'd ask you to consider, not telling you what to do, that's not our role, but it's something that you should, I think, consider. And equally, I think I'm reasonably right in saying that there are almost only one broker, one insurer who deals with the pub industry and the restaurant industry at this stage. I'm not saying it's something you want to get into, but it's something that I prefer Ireland to be making the money.
We're in pubs.
Okay, fair enough. And then just the last point, I suppose, is, I mean, if you were us, the points, we've had a good session of about an hour and a half or thereabouts. Are there 2 or 3 points you'd just like to make in summing up before we wrap it up?
I think that
getting the awards down is obviously crucial.
Thank you very much, Mr. Chairperson. Look, ultimately, there's an awful lot that can be done that will add some piece to improve and lower the cost of insurance, which is the overall aim. But the fundamental and key one is the high level of payout and the high cost it takes to get to that payout. And the more we divert ourselves on other areas, ancillary areas around that, the more we stay away from the core issue that's affecting us. And that is, and I think you'll appreciate the challenges in trying to address that, but that essentially is what needs to be addressed.
And there are some, I mean, if I think it's reasonable to say that there are vested interests at play here. I mean, if somebody's making if typically 40% of your payouts, and you paid out 190 million or something, was it last year? Yeah. That includes the legal costs, I presume. But you paid out 40, 50, 60 million in legal costs last year. Fair assessment?
Sure.
So somebody's doing okay out of it.
And therein lies the challenge.
Yeah. Okay. Well, just to conclude, thank you both very much, Mr. McMahon and Mr. Callan from FPD Insurance, for your contribution today. And we now stand adjourned until 3 p.m, where we recommence with the Bank of Ireland Chief Executive and her team. Thank you
for your time.
I'd like to welcome, this is our engagement with Bank of Ireland. I'd like to welcome Bank of Ireland to the meeting. You're very welcome, Ms. Francesca McDonough, Mr. Gavin Kelly, Mr. John O'Byrne, and Mr. Tony McMahon. And I will now invite the bank to make, well, I need to just read a note on privilege for you all first. I wish to advise the witnesses that by virtue of section 17(2)(I) of the Defamation Act 2009, witnesses are protected by absolute privilege in respect of their evidence to this committee. If you are directed by the committee to cease giving evidence in relation to a particular matter and you continue to so do, you are entitled thereafter only to a qualified privilege in respect of your evidence. You are directed that only evidence connected with the subject matter of these proceedings is to be given, and you are asked to respect the parliamentary practice to the effect that, where possible, you should not criticise nor make charges against any person, persons or entity by name or in such a way as to make him, her or it identifiable. Members are reminded of the long-standing parliamentary practice to the effect that members should not comment on, criticise or make charges against a person outside the Houses or an official, either by name or in such a way as to make them identifiable. So now, Ms McDonough, I'd like to invite you to make your opening presentation.
Thank you. Good afternoon, Chairman. Joining me today are Gavin Kelly, CEO of Bank of Ireland's Retail Ireland Division, John O'Byrne, Head of Products, and Tony McMahon, the Head of Customer Loan Solutions. In your letter of invitation, you highlighted a particular interest in two areas: Brexit readiness and the proposed individual accountability framework for the banking sector. I will address both in my opening remarks, but first I'll provide a brief overview of some developments within Bank of Ireland since our last meeting in July 2018. Bank of Ireland is very focused on the delivery of the multi-year strategy that we announced last year. This strategy sets out the plan that we're following from 2018 to 2021 and seeks to transform our culture, our systems and our business model, improve customer service and grow sustainable profitability. In 2018, we delivered new lending of €15.9 billion group-wide, an increase of 13% year-on-year. 2018 was the first year of net new lending growth that we've seen in 10 years. A core part of our strategy is to strongly support home building and home buying in Ireland. And in 2018, we increased mortgage lending by 17%. We are funding the construction of 5,500 residential units across approximately 140 sites nationwide. We're also the largest provider of new business lending into the Irish economy and support 2 out of every 3 FDI projects coming into Ireland. In addition to lending, since last June, we have taken a number of steps to improve the service we deliver to our customers. With more than 250 branches nationwide, we have the largest network of any Irish bank. In the second half of last year, we expanded cash services at more than 100 of our locations. We opened 2 new branches and we increased the number of frontline staff serving customers directly by more than 200. We're also focused on reducing our non-performing exposures, our NPEs. At 6.3%, we have the lowest level of NPEs of any bank in Ireland, but we must do more. And this is why last week we announced a transaction involving a potential securitisation of a portfolio of non-performing buy-to-let mortgage loans. In common with all banks, our regulators have set out the capital requirements that we must adhere to in respect of any NPEs that we hold. This includes holding up to 10 times more capital against certain impaired mortgages compared with others that are current with their repayments. This represents capital that could otherwise be lent into the economy or capital that could be invested in improving customer service. Brexit is, of course, a topic that dominates the landscape in Ireland, the UK and across the EU. It is also top of mind for many of our customers. Bank of Ireland's Economic Pulse, our monthly index which tracks consumer and business sentiment, has reported weakening sentiment over the recent 12 months. In March, this was down by 1.4 points to 89.4, a reduction of 7.7 compared with a year ago, with Brexit being the key factor. At Bank of Ireland, we look at Brexit in two ways. First, how we can support our customers to navigate it, and second, how we are prepared as a bank to deal with the outcome, whatever that may be. Within our customer base, we see resilient businesses that are adapting to changing circumstances. Nonetheless, particular challenges do arise for some customers. These can include managing their foreign exchange risk, investing in their working capital, or changing their supply chains, their operations, or logistics. In response, Bank of Ireland has launched a €2 billion Brexit fund to support businesses across the island of Ireland. Notwithstanding present issues, many businesses are also identifying opportunities for investment and growth domestically and internationally, and we are keen to support this also. In terms of our own business, Bank of Ireland was subject to 2 European Banking Authority stress tests in 2018, a baseline test and an adverse scenario, assuming a severe economic downturn. We performed considerably better than UK peers, and these tests demonstrated our resilience and showed we have enough capital reserves in the event of a severe financial downturn. The committee also raised in its letter the individual accountability framework for banking. I mentioned earlier that transforming Bank of Ireland's culture is an important element of our strategy. We believe that the individual accountability framework will act as an enabler of cultural change, not just in Bank of Ireland, but across the banking sector. A good corporate culture makes a tangible and positive difference for our customers, colleagues, and for sustainable financial performance. And given this significance, we have made the transformation of our culture a core element of our entire transformation programme, just as important as the transformation of our technology and how we are structured. Bank of Ireland has therefore welcomed the proposals to increase accountability in the sector in Ireland. We believe this will help to further drive the ongoing cultural change in banking, and we look forward to engaging proactively with the central bank on this matter. Banking touches all parts of society. I look at the work underway in culture and in increasing accountability in our sector as core to Bank of Ireland's task of rebuilding trust with our customers and the wider society that we serve. Thank you for your attention. We would be happy to take any questions now.
Thank you very much, Ms McDonough. Deputy Doherty.
Thank you, Gormargat, and welcome before the committee. Can I ask you just to start off in relation to non-performing loans? And Bank of Ireland has reduced their non-performing exposures to the lowest, I think, of any of the other banks. And it's claimed that you have done that without selling any family homes. Can you outline to us just where you are at this point in time? You say that you're now close to the 5% ECB target. However, we hear from the ECB this week that there is no such thing as a hard and fast target. And can you tell the committee in relation to what securitisations that you have entered into in Bank of Ireland over recent years, and whether they were synthetic securitisations or whether they were more like the Project Glen-based securitisation, where the borrower has a new credit servicer and are dealing with a new agent in relation to them. So there's just the first couple of questions, please.
Okay, thank you, Deputy. So I'll take 2 questions, one on our NPE performance and where we are right now, and second on the topic of securitisation. So, as you said, we have made very good progress in reducing our NPEs as a percentage of our total book. We will have the lowest NPEs of any bank in Ireland currently, at €5 billion, which is 6.3% of our total lending book. And that has been going down consistently through working with our customers in finding individual solutions. So we would speak to our customers and find forbearance solutions that would work for them. And when we speak to a customer who's come to us or we've identified as having financial distress, we would find that in 9 out of 10 of those cases, we are able to find a solution. And in 9 out of 10 of those cases, those solutions hold. So that's been very, I think, a positive improvement. Our NPE performance and that reduction is over 4 times better than the industry average. We've talked about getting close to 5% by the end of 2019. You're absolutely correct. We don't have a 5% target. I think some other banks in Europe may have, but 5% has been, if you like, a sort of psychological line to cross to get into a more normalised level. If you look at European banks, the average NPE would be around 3 to 4%. So we would be focusing on getting to 5% and then to continue. Now, to date, we've done that exclusively from working with our customers, but we did signal in the course of 2018 that we are looking at all options on the table, that we are open to all of the resolution strategies that could exist to reduce that further. And that is primarily because the definition of what is impaired and definition of default, but also the capital that is allocated to those non-performing exposures is changing. So there is more and more financial incentive and reason to reduce NPEs because they are becoming more capital intensive. And when we think about capital, it is finite and it comes at an expense, and we can allocate that capital to supporting growth in our lending book and supporting Irish consumers and businesses. We can use that capital to invest in our systems to improve customer service. We can use that capital to meet regulatory requirements, and we can use that capital to make returns to our shareholders, which includes the taxpayer. So we have trade-offs there, and we would find that the amount of capital that is allocated to, for example, a non-performing buy-to-let mortgage would be 10 times the capital that you would need to allocate to a performing PDH-type mortgage. So that just gives you an idea of the quantum. So one of the options that we have articulated last week actually is we announced our intention for a securitisation of part of our non-performing buy-to-let mortgage book. And this is something that a transaction that we're intending to do for about 375 million euros that would create a securitisation of the cash flow from those mortgages. There is no transfer of legal title, nor is there any intention of a transfer or servicing of those mortgages. So from a customer perspective, we would continue to engage with the customer, collect the mortgage. Nothing would change from a customer lens.
Yeah, so the risk would still be with Bank of Ireland in those circumstances, or the majority of the risk would still be with Bank of Ireland. They would continue to service the loan, and the ownership of the loan would be with Bank of Ireland.
The title of the loan would be held within, wouldn't change, and the risk of the relationship, the servicing, the day-to-day management of the mortgage would stay with Bank of Ireland. It would be just the beneficiary ownership would be with whatever securitisation vehicle is there. It would be part of an SPV, a special purpose vehicle, which would generate securities that would be invested in, which would be securitising effectively the cash flow that is generated from customers who would be repaying their principal or interest. So that's very different from the most recent project by Permanent TSB in terms of Project Glen Bay. So how does that model reduce your NPL? So our non-performing exposures would reduce because they wouldn't be they wouldn't be included within the definition of NPEs on our balance sheet. Okay. Okay. So that reduction would we've articulated this would reduce would get us closer to that 5% that we've talked about. And even though that the title is there and that you will continue to service them, and really, and correct me if I'm wrong, it's the beneficial ownership, it's the proceeds from them that will go to the SPV.
So therefore, but there's still a risk with the bank here. The risk is still if these, hypothetically, if everybody defaulted, then there would be a call, the SPV would have a call in relation to the bank, would they not?
Not necessarily, but the risk, it comes off of our balance sheet from an NPE perspective.
Yeah.
So that risk and the capital associated with it wouldn't be directly on the Bank of Ireland balance sheet.
And there will be no differentiation in relation to how you treat those customers and customers who are not securitized through this vehicle in terms of dealing with arrears or interest rates or anything like that there?
The treatment, the ongoing engagement, the servicing, the payment would be the same. Also, the protection from the Consumer Protection Code that is afforded to all customers with a mortgage would be constant.
And can I ask you, why is that the preferred option from Bank of Ireland as opposed to other options that we've seen where there is a transfer of legal title, there is a sale of, we've had in the past direct sales, and now we've had the securitisation stroke sale by permanent TSB. Why does Bank of Ireland feel that this is the best model for them?
So for this particular group of mortgages, we feel it's the best model. That's not to say, and we've talked about having all options on the table, the option of looking to sell mortgage books is still on the table. We're not saying this is the only option that we would take. So up to now, we've been totally focused on working with our customers. This is a securitisation, but we keep all other options on the table. The reason why this particular group of mortgages is particularly relevant and attractive from a securitisation perspective is because they are generating cash flows. So these are reperforming mortgages, but there is still payment, there is still cash flow in terms of repayment of principal and interest every month. So that generation of a cash flow makes it that pool of assets a good candidate from a securitisation perspective.
And on completion of this securitisation, I think you said it was, 365 million or something like that, of that amount. What does that bring your NPL ratio down to?
So our NPE ratio at the end of 2018, we reported our results, was 6.3%. If just this element would reduce our NPEs to 5.8%.
5.8. Okay. In relation to the tracker scandal, I note that you haven't mentioned that in your opening statement, but I understand, Mr. Byrne, that you met with your employees yesterday to discuss their ongoing issues and concerns that the bank hasn't acknowledged that they were entitled to a tracker rate. Can I ask, has anything emerged from that meeting that would have convinced you that they have a legitimate case in relation to being affected by the tracker issue?
If I may, just before John provides a bit more detail about that very important meeting, just to provide context, and we've spoken at this committee before about our commitment to fixing this as a priority, and we are in the final stages of doing that. We've had 9,700 tracker cases in total, which included 1,800 employees. So the group that you were referring to is a smaller group of 200 individuals, and I just wanted to put that into context.
Yeah, and I appreciate that you took up my request to meet, and that happened yesterday, so I appreciate all of that. Yeah.
Thank you, Deputy. Yes, I met three representatives of the group. They're ex-staff of the Bank of Ireland, and I think that predominantly covers a large portion of the group that they represent. Whilst I'm somewhat restricted in what we can say, as the group is part of ongoing analysis and discussion, we have thoroughly examined the additional cases. I certainly welcome the opportunity to sit down and discuss the nuances with them directly yesterday, and they put forward detailed set out of their case, and I think particularly in terms of the impact that it's had on many of those individuals. And I would have met many others who are still current staff over the course of the past 12, 18 months as well. Whilst I haven't yet seen anything that indicates that there is an ongoing entitlement to a tracker yet, as these customers, I think as we said at the last time we were here, they were never on a tracker, and they didn't take up the options of a tracker when the product was available. But I don't want to preempt the findings of that, and what I've undertaken to the group is to take that piece back, to take the additional information that they provided us with under the course of review, and to bring that through a further revisitation in the process, and to keep the Central Bank informed of that as well.
Well, look, as I said, I welcome the fact that you met with the representative group of the 200 staff and former staff who are affected here. I believe that this is an issue that isn't going to go away. Deputy McGrath and others in this committee have raised this issue, and we've gone into great detail in terms of the documentation that is available to us, which the verbal commitments, the emails that they got from Bank of Ireland telling them, yes, you're rolling on to a tracker rate of ECB plus 0.75%, the internal communication which we have, the screenshots of all of that, which leaves a very clear impression, in my view, without a shadow of a doubt, that there was an entitlement there. I don't want to go into in great detail the to and from, because I know that you are engaged, and I hope that that's a meaningful engagement that will go on. But there is a series of questions I would like to put to Bank of Ireland, and I would suggest maybe I put because they're quite specific to this issue, if we put them through the committee, and that the bank respond to the committee in detail on each individual one, I think would be probably the most helpful thing, as opposed to going through this, because some of it is quite detailed, and you may need to look at documentation to answer the questions.
Very happy to come back to the committee on that type of thing.
The final point I want to raise here is the issue of interest rates. The interest rates and the interest of charges, and the question I probably ask you is, how can Bank of Ireland justify charging 10 cents for every transaction on a Visa debit card?
I'm going to ask Gavin to respond, because it's specifically related to our retail customers.
Yeah. What I'd say, Deputy, is we brought in the current pricing on our current accounts about 3 years ago, or 4, and it was looking to look at the cost of the bank of each of our transactions, and then have an appropriate fees that we charge for those transactions. So we charge 1 cent for our contactless transactions, 10, as you said, for a Visa debit transaction at point of sale that's not contactless, and up to a branch transaction, which would cost a teller transaction 60 cents. We believe in the round the service that we provide for those transactions and that mix represents very good value. On average, a current account customer for a year's worth of banking would pay about €60 for that service across the year, and on top of that, through various concessions, about 50% of our personal current account base do not pay those transactional charges at all.
Yeah, but first of all, it's a hidden charge. If I go up to the canteen upstairs and buy a cup of tea, it's 60 cents upstairs. If I put in my chip and pin, it's actually costing me 70 cents, because Bank of Ireland's taken 10 cents of every one of those transactions. Now, if I have €3,000 in my account, I'm not going to be charged at all. So the people who you're charging this 10 cent are those who are less cash rich, those who are more vulnerable in our society, who are being gouged every time they go and buy a newspaper and use their
well, as I said, first of all, we brought in this service 3 or 4 years ago, and the idea behind it at the time was to say, well, look, for transactions that, say, didn't involve, say, a teller interaction, etc., the cost of that transaction would be significantly cheaper than a transaction, say, for example, over, as I said, at a cashier's counter.
Can you clarify this here, just in case I'm wrong? So if I go contactless, because the cashier has to do the same thing,
yes.
They have to type in the 60 cent or the €1, whatever it is. So if I tap it, it's 1 cent.
Yes.
If I put in my card,
you put in your card and use which is 10 cent, which applies for any transaction volume or value after that. So
if I
just
tap
your 60
it's
cents.
1 cent. If I put in my card, it's 10 cents.
And remember, that tap applies up to €30, and what we've seen is a significant increase in those tapping transactions. So from a contactless perspective, we've seen a number of those transactions. So for your example of 60 cents, You know, 90% odd of those transactions are happening via the tap and go, the contactless transaction.
But how can you charge 10 times more for the same transaction, the same Mars bar or the same newspaper that you're buying, just because you've entered your PIN as opposed to tapping it?
If I stand back and look at the transactions and the way the charge is placed, from perspective of the service that we give, say, to the merchant and the charges there, that there's a guarantee there in the payment from both the cardholder and the merchant. So remember that value, you use an example of 60 cents, but it was €60 or €70 or €80, the same, or beyond that, the same transaction charge of 10-cent charges. So in the round, I prefer to look at what I would say is the total cost of banking. We provide a service to our customers that for the price of €60 a year, which is €5 a month, which is very good value for a service that provides 24/7 access through all of our channels and services.
But how do you justify that if I'm wealthy, or somebody's wealthy, that they don't have to pay any charges at all if they have €3,000 in their account, but the person who's on social welfare, the person who's relying on disability benefit, that may not have the ability to have that type of money in their account? And what I would say is, I mean, some of what you're saying is fair in the context of when we brought this in a few years ago. We have this package under review at the moment. I can't give out anything in terms of, because for these fees and charges we have to look at a full application to the central bank for changes to fees and charges. But what I'd be looking for, and you may have seen recently, we launched a whole new initiative under financial wellbeing and looking to simplify what we do in our fees and charges. So where I would say to you is the service that we brought in, I believe, represents very good value for our customers. It was introduced a few years ago. We're now standing back looking at that in the context of what's happening today and the day-to-day banking needs of our customers today. The fees and charges are under review, and we will be looking at something later in the year. It's definitely good value for Bank of Ireland, because you made 431 million on the back of fees and charges last year. It's a huge amount of money. Now, the difference here is it's not just the differentiation of whether you're wealthy or not, that you don't have to pay the charges if you've got €3,000. But if I open an account in Belfast or in London, I don't have to pay any charges at all. Regardless of my income, I'll be told that lodging and withdrawal cash in branches is free, making debit card payments in pounds online on the phone in shops is free, withdrawing cash in pounds from cash machines in post offices is free, withdrawing euros from Bank of Ireland cash machines in Ireland is free. Here, we're charged all 25 cents for every one of those transactions from withdrawals. So you can do this, like a bank that was rescued by the Irish people will offer complete free banking services to people in England, Scotland and Wales and the north. But here, if you buy a Mars bar and use your PIN, then you're charged 10 cents. If you take out your own cash from your ATM machines, you're charged 25 cents. And all of that adds up to a nice profit by the bank of €431 million on the back of predominantly, I would argue, low-income customers of your bank. Like, there's a huge inequality, and like, how can you stand over the fact that you offer these services to those in Manchester and Liverpool, but if you're in Dublin or Donegal, you're being gouged?
Okay, can I answer that more broadly? So, first of all, just for context, and you talked about poorer or more vulnerable customers. Just to be clear, that customers, students or older customers aren't charged. It also reflects the cost between a contactless and a PIN or chip verification. I don't think it's necessarily apples to apples to compare fees and charges, whether it is what you charge for a transaction, what you charge for a mortgage, for example, between the Republic of Ireland proposition that we have and our UK business. There are different dynamics, there are different positionings, different segments, quite distinct set of charges and infrastructure associated with payments that don't make that a like-for-like comparison. In terms of our business income, we do generate business income. It is not all from, you talk about a much larger, our business income in 2018 would have been from a variety of areas. It would have included corporate banking transactions. It would have included, we're the only bank assure in Ireland, it would have included our growing insurance business and other aspects of the bank's overall income. It wouldn't have been the line that is contributed from fees and charges from accounts wouldn't be that into the number that you quoted, Deputy.
Look, finally, and I think we'll revisit this, and I hope you take some of the points that we've made here, or I've made on board as you're reviewing this issue. The last point I want to make is your standard variable rates. It appears that your customers would be better off on a fixed rate as opposed to a variable rate in nearly all circumstances. Obviously, the danger there is that variable rates could go down, however unlikely that may be. But your bank has 47,000 customers on variable interest rates at this point in time. Can I ask you, what are you doing to inform them of better offers within the bank and also the new rules that came into place from January the 1st of better offers in other banks? And are you willing to reconsider the position of the bank, which is that you have a very, very stubbornly high local variable interest rate for loan-to-values above 80%, which is at 4.5% at this point in time? It hasn't changed since 2015. So is that something that is currently under review, and can you give any indication to the committee here today? Thank you.
Okay. So we're very focused on a fixed rate mortgage strategy. We have been for many years. 9 out of 10 of all of our new mortgage business that's done with customers is fixed rate, and actually we've led the market on that. So the market fixed rate for first-time buyers and movers has been growing and has gone up to nearly 2/3 of the market, up from just over half a year ago. So that is a market trend. That is customers voting with their feet and having a strong preference for the security and clarity that a fixed rate mortgage would provide. So they know how much is going out of their salary each month to pay for their mortgage. We keep our fixed rate under review. We're actually now offering the lowest rate that we've ever offered on a fixed rate mortgage at 2.9% for 1- and 2-year mortgages. It's very competitive. We have been reducing our fixed rate mortgage over a period of time. Historically, we've reduced our fixed rate mortgage by a third in the past 3 years. So it is a competitive proposition that we offer. We do write to our customers, as well as the annual requirement. In addition to that, we have written to our customers who are on higher variable rates and reminded them of the opportunity to switch to a fix. That is good business, because if you're on a variable and you can get a better deal, that risk of attrition and losing that relationship or that mortgage is obviously a negative for us. And we've had 8,000 customers in 2018. These are existing customers who've moved from a variable to a lower fixed rate. It was about 7,500 customers in 2017, and I would be keen to continue increasing that number as we engage with our customers to avail of what we believe to be our best offer in fixed rate mortgages. Variable rate SVR is not the area that we necessarily compete in. It's fixed rate. That has been our strategy for a number of years.
Thank you, Deputy Doherty. Okay. Thank you. Deputy McGrath.
Thank you, Chair. I'd like to welcome Ms McDonagh and her team today, and thank you for completing the detailed questionnaire and for the opening statement as well. Maybe if I just pick up on where Deputy Doherty left off there on mortgage pricing. And so he spoke about the variable rate, which is up to 4.5%. And you tell us in response to one of the questions, I think, that 47,387 customer mortgage accounts are on a variable rate. So that's 25% of the total number of mortgage accounts that you have. Do you know of that 47,000, how many are actually on the 4.5%? I assume some of them are on the 4.2 and some on the 3.9. Do you know the breakdown of that?
I'll ask John to respond on that level of detail.
Thanks.
Yeah, Deputy, thank you. Of the 47,000, I think just over 38,000 are owner-occupier, and the balance then of about just over 9,000 are buy-to-let. I don't have the breakdown between the different tiers, at 3.9, 4.2, 4.5% on the standard variable rate. But I'll respond back to the committee on that afterwards, if that's okay.
Okay, thank you. So, notwithstanding everything that you've said, Ms McDonagh, that this is not the area of the pitch that you're really competing on in terms of variable rates, there is still a quarter of your total mortgage accounts that are on a variable rate, which is high relative to other competitors in the market and so on. And the number is falling. You've given us some statistics there about the number that have moved to a fixed rate offering. But is there any more that the bank can do to accelerate that? Because, you know, somebody paying 4.5% today on their mortgage is really bordering on criminal. I mean, it's way out of line with where the market is now, considering you're offering a fixed rate of 2.9%. Ulster Bank are as low as 2.3%. Finance Ireland, a new entry, and non-bank lenders coming in even cheaper than your own rates as well. So to have a quarter of your book in account number-wise on a variable rate, it's not a pretty picture.
I think it's important to you make the point about in terms of account number. So many customers will choose to split their mortgage. So they may take out a mortgage that is 2/3 fixed because they want that certainty, and 1/3 variable because they want the flexibility to maybe pay additional payments, or they are confident that they don't want to, they can pay it off in the shorter term. So many customers will split between a fixed and a variable, and I think that is a customer's choice, and I think choice comes out of competition, and competitive markets result in different choice and differentiation in terms of products. We would the 4.5% that you refer is only in the 80 to 90% loan to value bracket. Customers below 50% will be on 3.9. But like I said, we write to customers. We not just the sort of the minimum requirement, but we go beyond that. We write to customers. We go the extra mile to let customers know that they can avail of a very attractive fixed rate. We have marketing campaigns. We have recently reset what our brand is in the market, and we have some very active campaigning about our lowest ever rate of 2.9%. And with the cashback, which our customers do like, we feel that we've been very active, very transparent, and very engaged with our customer base. If you walk into any one of our 250 branches, you will see marketing materials and campaigns. A significant part of the colleague growth that we've seen, where we've created new roles, are in the front line. We've put over 200 people in the front line. Any of them will be able to talk about our mortgage pricing. So we're being proactive. We're being responsive, and we're being very transparent and competitive in our fixed rate pricing. That is the area that we compete in, and we certainly encourage any customer on a variable rate, whether that is at Bank of Ireland or with a competitor, to have a conversation with us about what we think is a very compelling product.
Yeah, I mean, just to come back to you there on one or two of the points. So you say that people with a loan to value of less than 60% who are on a variable rate are on a 3.9% rate. That's if they have been proactive and have responded to your letters and have sent in an up-to-date valuation. I bet you that you have thousands of customers who have a low loan-to-value in actual fact, but who are still on the interest rate of greater than 80% loan-to-value, because they've never gone about sending in that up-to-date valuation, and so they've never moved down that loan-to-value band. So it would be very interesting to see a breakdown of that 47,000 customers, and that would tell us some of the story, I think, in that respect. Because I appreciate you write out to them, you set out what they need to do, and I think if any message comes out of today's meeting, I'm not sure it's one that you'll want to hear, but it is that those customers, they should certainly contact your bank.
Yes.
They should see if they can get a better rate. Either move, if they want to stick on a variable, then submit an up-to-date valuation and avail of a reduction of up to 6.6%, or else move to a fixed rate and go on 2.9, or else shop around and switch their mortgage elsewhere and get an even lower rate. That's what they should be doing. But I would be very interested if you drill down into that data. There are long-standing Bank of Ireland customers whose mortgage is probably less than 50% of the value of their home, and they're paying 4.5%, and it's just crazy.
Well, the average LTV of our mortgage book is 63%, so we would actually see customers that would be, and that's the average, would be at or below that range anyway. Plus, exactly what you've said is what we do, being proactive. So we would have seen 8,000 customers last year, and I imagine that trend will only continue, and it has been escalating, increasing because of our proactive engagement approach, switching from higher variable rates to lower fixed rates. So we continue to have that engagement, and I would echo your sentiment that they should be contacting us, if we haven't contacted them already, to avail of a better market fixed rate offer.
Yeah, and I think the public debate on this issue is actually helpful. One thing that has surprised me is the number of people who don't know what interest rate they're paying on their mortgage, and it's the first thing that people should check, because there are tens and tens of thousands of customers across all the banks who are paying too much. And it's just an overall message, I think, that we all need to continue to convey.
Yeah.
Can I just...
would you mind giving me the opportunity just to respond on that point about customers, many Irish consumers not necessarily knowing what interest rate they're on a mortgage? That would apply to personal lending as well. And that point, I mean, Gavin touched on it about financial well-being. So we have launched a major financial well-being initiative. We've committed €5 million to an investment over multi-years to improve the financial well-being of consumers in Ireland, not just our customers. And we launched that because financial literacy in Ireland, despite the relatively high levels of education and GDP per capita growth that has come through post-crisis, the level of financial literacy at 45% of people feeling confident about what is their interest rate they're charging is actually very low. So we are engaging, our target is to engage with 200,000 of our customers or non-customers in Ireland to offer them a financial wellbeing health check, where that's exactly the sort of question about meeting their financial commitments each month and being aware that we're asking, and people can see how they rate or rank in their own versus the rest of the population, and that should open a conversation about helping with their financial well-being. We've also committed to entering every single primary and secondary school in Ireland as part of our youth financial literacy programme, and we're also doing some innovation looking at international best-in-class practices in our financial well-being lab. So the broader point about not just sending another letter to a customer on SVR about about a fixed rate offer, but the broader issue about making people more aware, from education to all stages in their lives. And this isn't just for people who are financially not well off. It's for for all customers to look at how healthy their finances are, and that's something that we've committed a €5 million investment to, Deputy. So it's something that we do take incredibly seriously.
Yeah, I welcome that commitment, and I think it's an area where we all need to be doing more as a country. Just in relation to pricing generally, and I've had this debate with you before, even your fixed rate offers, it's not risk-based. You don't do risk-based mortgage pricing. We were always told that the price of the mortgage is commensurate with the risk, and yet you've gone with a flat 2.9% across the board, even if I've only a 30% loan to value, or I have one that is 90%, 95%. Why is that? I thought that was a cornerstone of banking, that the price of the product is relative to the risk.
So the price is flat at 1, 2 and 3 years, independent of loan to value. It varies on the longer term mortgages, and that is...
It varies by the length of the fixed term, but not by the LTV.
Yeah, it does. For 5 or 10 year mortgages, you would see that depending on LTV, the pricing would vary. So a 10 year below 60% LTV would be 3.5. Over 80% would be 3.7. So there is.
Yeah, but that's the only differentiation in the whole fixed rate offering.
And in a competitive market, we can have a lot of differentiation, but we also want to have simplicity. And if the point you make, which I totally agree with, a lot of people don't know what their interest rate is, by varying it and having a proliferation of different pricing mechanisms, that can actually cause complexity, which isn't necessarily helpful either. We have gone for more simplicity in our mortgage offering, so the 2.9%, which is the lowest rate we offer, is regardless of LTV. And what we see, particularly because the growth in first-time buyers in Ireland and the demand for first-time buyer property is so high, that actually that is very attractive, because for first-time buyers whose LTV would typically be a bit higher, that is actually a more attractive proposition.
So just, on a related point then, when it comes to the bank making decisions in its operations, and putting the consumer first, and it's a great slogan, but when it runs counter to profit maximisation goal, getting the best possible return for your investors, and you're part of this bank culture board, and they'll be reporting I think in the next 10 or 11 days or so, and we'll see what they come up with. And Bank of Ireland has contributed and has helped to pay for that initiative. But what is Bank of Ireland going to do to put the customer voice at the centre of your operations and at the centre of what you do? And how can you square that circle, that what is in the best interest of the consumer is often not in the best interest of the bank, certainly in the short term?
Okay, so customer focus is one of our 4 key values. We set our values at the end of 2017, and we've gone through a very detailed programme of embedding what those behaviours are and what our culture means, and we want to see it as a differentiator for our customers and also for our employees, but also for our shareholders, because a good culture ultimately results in more sustainable results. We define customer focus as increasing the volume, if you like, of the voice of the customer, so listening more. And we have many examples where we've listened. We've put more colleagues back into the front line to serve our customers, and we've put cash services back into branches. We have a welcome advisor in each of our branches, and that is specifically in response to customer feedback. We also define customer focus as achieving minimum standards and service levels. And we've seen, in terms of the way that we've improved our journeys, contact centre service levels, a very extensive programme of process improvements. There's more to go, but we have been improving and raising above the minimum standards. And thirdly, we define customer focus as offering tangibly different customer propositions. So our offering and financial wellbeing is one, but others would be in terms of the growth that we're doing in protection and insurance, or indeed in our fixed rate mortgage offering. I don't think of it as you either a customer focused or shareholder focused. I think it's not one or the other, and that sort of ultimatum trade-off I think is not helpful. We see that good, engaged, satisfied customers is good for business. Being customer focused, however, doesn't necessarily mean that we're always going to have the cheapest type of lending in the market. We look at the overall proposition and the sustainability of that proposition, and we believe that we're offering very good value mortgage or personal lending offers, as well as the broader relationship. Do we have more to do to improve customer satisfaction and focus? Absolutely, yes. But I feel that we have made some improvement. And certainly since the last time that I was at this committee, the improvement in our frontline branch and contact centre service levels is tangible. We've got further to go, though.
Just in relation to NPEs, non-performing exposures, and in addition to the securitisation project that you have announced, so you believe that will get you to about 5.8%. Are you saying that the bank is not working to any particular target? So, or have you been given a target? And in addition, then, do you expect any further initiatives apart from working through each individual loan? Do you expect any further initiatives around securitisations, actual portfolio sales, and so on, to reduce it further?
Thank you, Deputy. So the 5% isn't a target that's been set by the regulator. It is I think, become, as I mentioned earlier, sort of a psychological line to cross in terms of getting into a more normalised NPE quantum. So we have talked about 5% as being a number that we want to be very close to by the end of 2019. But it doesn't mean that once that's been achieved, we stop, and we would look to continue improving the quality of our overall portfolio. And that isn't to hit a certain number, that is to be capital efficient. That is so that the capital density that is associated with NPEs, if we have fewer NPEs, it releases more capital to lend, to invest, to meet regulatory requirements, or to return to the shareholder. Beyond the securitisation transaction that we currently we're in the process of, we are looking at all other options to continue to reduce our NPE.
And what is the bank's current policy on the sale of owner-occupier mortgages?
We don't necessarily have a policy. It's not something that we have done, but we are certainly looking at all options, and that could include sale of portfolios of different types.
So you're not ruling it out?
I'm not ruling that out, Deputy.
In relation to the pay review that Minister Donoghue commissioned, Corn Ferry consultants are undertaking that. I think it was due to be completed a few months ago, but presumably it's not too far away. Has Bank of Ireland been involved in that process? Have you been consulted? Did you make a submission? Have you any observations to make to the committee on that issue? We know AIB has lost a CEO. They've lost a chief financial officer as well. What is the labour market like for your bank? Are you dealing with similar retention issues? The entrance into Ireland in a significant way of Bank of America, Merrill Lynch, Barclays Bank in the context of Brexit, has that changed the landscape, the competition for talent? If you could talk us through that issue from your perspective and in the context of remuneration policy.
Sure. Thank you, Deputy. So there's quite a few questions in there, and I would just say from the outset that I know that bankers' pay, particularly in Ireland, is a highly emotive issue. So I appreciate that, but I'm also, and as a bank, we are supportive of normalisation of bankers' pay, aligned with European Banking Authority guidelines. We have participated, we have responded
You
to...
might maybe explain what that means,
Okay.
normalisation of bankers' pay
So
in the European guidelines.
at the moment there are restrictions around variable pay, not being able to make variable payments, to differentiate in terms of people's performance at any level. And we're not talking necessarily at the most senior level, but we have over 10,000 employees, and the ability to recognise, for example, a fantastic colleague at the bank who goes the extra mile for a customer versus someone who meets standard. There isn't the opportunity to necessarily differentiate financially. There's other ways to differentiate, and we do. We recognise, and we promote, and we develop. But there's no way to vary pay under the current restrictions, and if those were lifted, there would be a large tax associated with any variable payment. There is also, within the Minister's letter, a restriction on total payment of €500,000 for any individual. When I talk about the normalisation of pay, it is to be more aligned to other banks in Ireland. So at the moment, those restrictions would only apply to Irish banks, including Bank of Ireland, but other banks that are competing in Ireland, or other financial services companies, indeed any other industry, any other private industry is not restricted in the same way. So what that results in, and we know the historic reasons why, and I'm very mindful of them, but at the current point in time, we would encourage normalisation because for three considerations. One, this isn't just about a couple of senior people at the top of the organisation. Variable pay can help drive accountability and reward the right behaviours and performance that are customer-focused at all levels of the organisation. I made the example of someone that works in a branch. Secondly, for more senior, but also maybe not so senior, but highly specialised roles, these are the ones that it's very difficult to compete. So we will see people who've got specialist roles being offered much larger packages by non-Irish banks in Ireland, but also increasingly we're competing with Silicon Dock in terms of people with very strong IT or transformation skills. And thirdly, it is making the Irish banks and the Irish banking sector not able to compete on a level footing with other banks in Ireland and also with other sectors. So this is obviously a matter, it's a political matter, it's a matter for the government, but when we were asked to provide input to that review that was done by a third party, we shared that perspective and also detailed information on where we are seeing salaries that are all variable pay packages or other benefits that we are just simply not able to provide being offered by other non-Irish banks within Ireland. And as a result of Brexit, we are seeing that really increase quite significantly, and it can represent a risk to the Irish banks in their ability to retain and develop our talent.
But for your bank, for Bank of Ireland, operationally, what impact has it made? Have you had real retention problems as a result of the pay cap? What are the issues that you're facing?
So there will be certain areas within the organisation, whether it is in finance or risk, where there are certain of those skill sets that will be very attractive to other banks in Ireland or to other companies in Ireland, and we have seen more attrition in those more specialist areas. That's one area. It's taken us longer to recruit. So when we do recruit at different levels, it's a longer process that leaves vacancies open for longer, which can challenge our ability to serve our customers, but also to execute against our strategy. And in terms of embedding the sort of culture and values that we want, I would really like to be able to vary people's pay based on their performance and driving of customer outcomes and values. At the moment, we incorporate that into their appraisal. So we have every year we will give someone a rating, and we will differentiate it not just based on what they did, but how they did it. But we aren't able to vary their reward to reflect that. And as we transform the bank, improve service, and embed culture, normalised pay within European Banking Authority guidelines would actually enable better outcome culturally and for the customers. I know that is divisive, and I appreciate there may be some challenge to that position, but that is my view around normalisation of pay in Ireland.
Yeah, Chair, I'll come back in later, but maybe one final question in this round. Deputy Doherty's private members' bill, no consent, no sale. This committee has started the scrutiny phase of that bill. We invited submissions. We got submissions from BPFI and others in the industry, and also from some debtor advocacy groups who are in favour of the bill, which essentially provides that prior to the sale of a mortgage, that the borrower must give their consent before their loan can be sold on to a so-called vulture fund or to anyone else. What is the position of Bank of Ireland in respect of that bill? I think you've commented on it publicly, so if you could share that with the committee, what your views are, and have you carried out any initial assessment of what that bill, if enacted in its current form, would mean for your bank and for your customers?
Okay, so with regards to the no consent, no sale bill, the Bank of Ireland's view is that it would ultimately be bad for the consumer in terms of reducing availability of capital to support borrowing, not just for mortgage people that want a mortgage, but also for Irish SMEs. It would be bad for the Irish sector, and it would be bad for the Irish economy.
Why?
So,
you've given us your conclusion
sure.
there, but you haven't
Sure.
given us how you arrived at it and why.
In the interest of brevity, I wanted to be concise, but I'm happy to expand. So, it directly conflicts with the guidelines that the European Central Bank has in place, which is encouraging banks to reduce its NPEs to get towards more European norms. And the capital that is allocated to non-performing exposures is much higher than to performing. So I said at the beginning, for example, a non-performing buy-to-let mortgage, we would require 10 times more capital associated with that loan than a performing PDH, an owner-occupied mortgage. So by having inflated NPEs and having fewer options to reduce those NPEs, it would result in trapping capital associated with those NPEs, essentially land-locking capital. And that is capital, like I explained earlier, that we would want to be using to increase lending into the Irish economy, to Irish consumers and businesses, investing in our systems to improve service, meeting regulatory capital requirements, or providing a return to shareholders, which includes the Irish taxpayer. That's the only way that we can allocate capital. I also would argue that it would, and this is, this means coming from a banker where obviously competition can represent challenges, but it is ultimately good for the consumer and for the sector. Is that bill would actually disincentivise competition within the sector. It would mean that for new entrants coming in, it would make mortgage lending less attractive or less profitable, and that would actually reduce the competition that many politicians or stakeholders would certainly like to see within the Irish banking market. And the last point is that if the ultimate objective is to increase consumer protection, the bill would not increase consumer protection, and that's not just my perspective. I know that you would have heard from the BPFI represents the sector, but also the central bank were here, and I don't need to quote what they said on record, but the same CPC protections exist independently of who owns the assets. So it would increase costs whilst for the consumer, while affording them no additional protection, and actually would reduce the availability of capital in the market. So for those reasons, we would think it wouldn't make sense and it would be bad for the Irish consumer, the sector and the economy.
Thank you, Chair. I'll come back in after my
Thank you,
colleagues have
Deputy
come in.
McGrath. Deputy Burke, go ahead.
Thank you, and once again, you're very welcome here. There are just a number of issues I wanted to raise. First of all, just to go back to the issue of the desirability of people in Ireland being able to buy homes, particularly younger people on moderate level wages. Can I just ask you first, you're probably aware that the government has had a scheme to give people on lower wages 75,000 in the case of a couple and 50,000 in the case of a single individual access to some government sponsored funds. And I'd just like to ask you, one of the conditions of that is that people should have gone, individuals or couples should have gone to a financial provider and been refused on a couple of occasions. So I just wanted to know, in the case of Bank of Ireland, of the people who come to you, and I know you probably can't be absolutely accurate because people come, explore, go away, come back and so on, so it's a lengthy period. But how many people would you turn down, and could you share with us why you turned them down? Because I do take on board what you've said about wanting to be able to lend into the housing market, but I'm just wondering, as you know, one of the biggest banks in Ireland, how many people would you get in inquiring about entering into a mortgage? What proportion of them, having entered into an application process, would be turned down? I know in some cases the bank might just say, sorry, you just don't qualify, come back when you've done this, that and the other. But could you just share that with us?
I'll say a couple of words very briefly, then I'll pass to John to talk a bit more detail. So part of our strategy is to be the leading supporter of home building and home buying in Ireland. We increased our lending, our new mortgage lending, by 17%. Which is €2.3 billion during 2018. So we've done that by engaging constructively with customers and trying to enable them to get the home that they want. Obviously, we don't do that if it doesn't make sense or it's not sustainable for them from a personal debt perspective. But let me ask John to talk a bit more about the Help to Buy scheme.
Thank you, Deputy. Yes, in terms of, maybe if I break the question into two parts, one just around how the bank looks and assesses individuals and borrowers as they come in to make sure we can provide a sustainable mortgage. And then I think it's the Help to Buy scheme is being referred to, and I'll talk about that then laterally. In terms of the affordability side, as you say, like the key for us, and we've seen this over the course of mortgage lending in Ireland, the absolute key is making sure that what we're providing is an affordable and a sustainable mortgage. And what we do when people come in is work through, what position people are in, what income do they have, what's sustainable, what expenses do they have, and what does that lead to in terms of an affordable mortgage. In terms of those that progress to a full application, we approve 9 out of 10 mortgage applicants. And we see out of that...
Sorry, can I just ask
yes.
you on that, Mr. Byrne? Is that people who have entered fully into the application process, been given forms by the bank, been accepted as an applicant?
Absolutely,
yeah.
Yes.
Okay.
And
so it's 9 out of 10, yeah?
Yeah, once they're in that process. And obviously then there's an element before that where it's a more discursive process or more engaging process with people. And, sometimes we do find people, they want to buy a home, but they may not have saved a deposit, or they may need to, look to manage either their income or outgoings in a slightly different way. And we call that into the getting mortgage ready process. And we have other elements outside of mortgages to help for that. We have a mortgage saver product, which is as people are saving towards that deposit, we then pay a good rate of interest and a bonus on top of that to try and help narrow that journey. And again, when I look through all the customer research we have, the two things that consistently come back from all customers are, one, will I be able to get a mortgage? And two, will I be able to manage those mortgage repayments as they come through? I think turning to maybe the second part of the question in terms of the Help to Buy scheme, Help to Buy was launched in October 2016. I think it's had a very positive impact on the market. I think when you look at the mix of housing and what's been seen coming through, the number of first-time buyers making up the proportion of the mortgage market has started to increase dramatically. It's now just over 50%. And within that, the proportion of new homes where the Help to Buy scheme plays a very viable part has also started to grow and expand. I think it's due for completion later this year, and certainly from a Bank of Ireland perspective, we'd welcome any extension to that. We think it's helpful for borrowers, and it helps them to meet that deposit requirement by way of a tax rebate.
And can I just ask you, perhaps a couple of urban myths in relation to the scheme, because I get a lot of people who ask me about the scheme, and I try to give them some advice. One of the urban myths is that if you take out a PCP, you can forget about being treated favourably, perhaps by your bank, but pretty much by any other bank, that if you're talking about either a fairly, somebody in their late 20s or 30s, and it turns out that they have a very large car loan and maybe a more modest credit union loan, that certainly a significant car loan, like car loan maybe for 30,000, would really doesn't rate that high, and credit union debts, if they go over, what about 5,000 or 6,000?
No, Deputy, I think you've absolutely nailed it in terms of the description. Urban myths, they're good for fiction. In practice, what we see is it's looking through to what impact does that have on a customer's ability to repay all of their debts and their mortgages. So when we look through to things like whether it's PCP or a car loan or a credit union loan, if that in proportion to their income, to their disposable income, is sustainable and is understood by the bank in terms of why they have it, then it has, it is a factor in the decision, but it is absolutely not a binary issue that, if you're over X, Y, or Z amount, that you can't get a mortgage. So again, we look and we try and work with customers depending on their circumstances, but it is very much, and sometimes it's a difficult phrase to use, but this kind of case-by-case element. But if a customer has debt elsewhere, that's absolutely fine. People take loans for many reasons, and they use credit unions for many reasons. We also provide personal lending ourselves, for a variety of issues. And we look to that in terms of what does this mean for that customer's ability to be able to repay the mortgage. And once we are comfortable in terms of their net disposable income, and it also looks then towards the macroprudential lending rules in terms of loan to income, there's absolutely no issue with that.
So you're saying that if somebody is preparing to look to acquire a mortgage, are you saying it doesn't matter what other debts, like on a I'm saying that there's a lot of advertising at the moment. There's competition obviously in the lending market, and one of the competition areas is in relation to buying new cars, and there are very attractive options available there. But what I'm concerned about, can somebody on a modest enough income, say 100,000 for a couple, so in other words above, I think for a couple on 75,000, it would be difficult to manage something like, say, a 20,000 to 30,000 car loan, and to manage to get a new mortgage as well. A first-time mortgage.
I think exactly as you've characterised it, it's unique to their circumstances. So if somebody, with that income profile has a substantial personal loan that is taking a large amount of their net disposable income, that means that we couldn't find a way to see a sustainable ability to repay the mortgage, then absolutely that would be a factor in the decision. Depending on their income and the level of debt that they have, we bring it all in. But it is critical for us and critical for the borrower to make sure that any new debts they're taking on are sustainable in the context of their total financial well-being or their total financial perspective.
I just think that in the context of the comments that were made earlier about financial education and financial information and how well up people are, that I think this is something that maybe either yourselves or banks collectively could tell people, because when people say in their late 20s, perhaps having the wherewithal in the current market to be able to acquire a house, they then may feel, look, it's okay if I go for a car, but in fact, the consequences of that may be that their debt level relative to their income is rather higher than it ought to be. And I just think of talking about financial education, that maybe, you know, people should perhaps go for a second-hand car and a lesser car loan if they have their eye also on potentially buying a house. I'm interested in that 10% refusal rate, because my impression would be that the refusal rate is in practice, and I'm not saying in relation to the Bank of Ireland, my impression would be that it's a lot higher. And I know you've been involved in the development of the bank culture initiative. And again, I think for people who are tremendously interested in the potential either of a direct loan with yourselves or a loan through the Rebuilding Ireland loan scheme, I think I wonder if you'd agree that an awful lot more customer information or potential customer information could be put out there that would essentially give people a pathway. For instance, you may well have data which say organising a loan, if you're on a fairly tight income, really takes, would you say, a year and a half, and you have to plan for it over and beyond getting your deposit together. I just think, you know, in terms of consumer education, I'm not sure people understand that clearly enough.
I would agree that the need for increased financial literacy is very high in Ireland, and that's exactly what our financial wellbeing programme is about. I don't know if Gavin, you want to expand a bit more on addressing those specific issues, some of which are individual and do require, and we would encourage the customers to join one of our financial wellbeing clinics or come and speak one-to-one with one of our advisors. But maybe Gavin can give more.
I think when we looked at the research out of the financial wellbeing, because I think you're touched on a number of things there, Deputy. The research we looked at using some kind of international benchmarks. When people go into the financial health check and they look at their financial circumstances, you can come out with a score, and the score generally puts you into a category of struggling or stretched, and then managing or thriving. And about 40% of the population in our research are coming out into struggling and stretched. And what we mean by those are the type of things that you're talking about, people that struggle day to day to from paycheck to paycheck around managing their finances, and don't think about things like savings or, you know, the impact, of loans into their borrowings or planning for the future. When you move up the categories to kind of into the stretch category, you have a bit more breathing space. You're thinking about saving, but crucially, you're not doing it. And when you move into managing and thriving, managing is people that have, say, surplus income on a monthly basis, understand that they need to save, start putting some money away, but don't necessarily plan for the future. We know from other research that only 50% of the Irish population, for example, have a pension plan today. So when you move up into the thriving category on the health check, you then are planning for the future. You're thinking about your long-term future. You're thinking about rainy day fund savings, etc. So what we're trying to do is build awareness. You've seen it in other aspects of life where people look at, physical well-being, and we believe financial well-being is a really important and crucial part of one's overall well-being. And what we're trying to do with this is build that awareness. Like, we've launched this health check. Within 2 weeks, we've had 20,000 people already take the health check. You can attend one of our seminars. You can, come in for a needs review with an advisor. You don't have to be a customer of Bank of Ireland to do this. You can just go and check this online and just get a sense of where you stand. And I think that's what's really important, because the type of points you're talking about for younger people, that, how do I save for a mortgage? How do I prove repayment capacity? So another area that's very interesting that you see a lot of debate on is the rental market, and the cost of rent versus a mortgage, and that in a lot of ways is looking at some of that disposable income that a customer has, and that's going into rent, that could be going into savings, and just helping customers to plan and to save as they go forward. What I would say, Joe, before I close, over the last few years, what I've certainly seen from, and John touched on it, from a lot of our clients and customers, they have become a lot more serious and resilient around this. They're more aware of it. They are planning, they are savings. I think the days of, I'm going to come in and what will I do this weekend? I think I'll buy a house. They're long gone, and I think people are now really planning, planning this out for the future, being very serious about that planning. And I think there's the other awareness that I've seen from a lot of our younger customers is that full awareness that they don't want to take on too much debt, to your point. So, you know, looking at their car loan, looking at other debt, and that's why I think, you know, looking at your finances in the round, planning your finances, whether you have a plan to buy a house, whether you want to go on a holiday, whatever it might be, or for the future, long-term future. You know, that awareness around that, and then you're looking at various little tools and services that can help customers in that, is a really important part of what we're trying to do and we stand for as an organisation going forward.
In terms of future trends in the market at the moment in Ireland, and also in the context of Brexit, it's obvious that a lot of funds are coming to Ireland now, and many of them are already here. They seem to see our level of rents now as being so high that they seem to be pitching in fairly heavily into the buy-to-rent market. Have you any concerns that they're going into the buy-to-rent market will significantly reduce the supply of mortgage, the traditional mortgage-type purchasers? Do you see any way in which people who would have traditionally bought a mortgage, they're now effectively been outbid by funds, and some of them, you know, have very significant resources because they're looking at rent levels, particularly in the Greater Dublin market, which are probably very, very high by international standards. And what's the bank's take on that from a social perspective as well as from an economic perspective?
I think there's a number of items. First of all, I actually welcome that some of these landlords coming into the market who are buying up, say, some of the schemes. We've announced one ourselves recently where we're funding one of these funds coming in to build a 300 apartment block in Dublin. We've got to have a long-term rental sector, a thriving rental sector, and what a lot of these landlords do, Deputy, is bring that kind of certainty to tenants, to bring a quality of management of these blocks. I think really, from our perspective, the key is the supply overall. So what's really putting pressure on rent is supply and the lack of it. So we need to get more property built. We need to get property built for renting, and we also need to get property built for purchase. So clearly, as a bank, we'd like if everyone was buying a house with a mortgage, because then we can see that opportunity from our perspective. But we touched on it earlier. If you look at if you were to buy an apartment today for, say, €350,000 in Dublin, you could be renting that for maybe €2,000 plus. The mortgage on that same apartment would be about €1,100 or €1,200. So that gap, and obviously there's costs being picked up by the landlord, but if we say in the round there's about an €800 difference after you pay your maintenance, etc., that's €800 that could be used to save for a mortgage for us. So from our perspective, the mix is what's important. So Francesca touched on it earlier where we talked about like we're funding the development of 5,500 units throughout 2018. Even in the last couple of months, that's increased further. When we were with you last as a committee, that number was 3,000. We are seeing a lot more development and building. We need a mix. Some of those developments will be for buy-to-rent in the market, like where there are funds coming in. Other developments will be for purchases for our mortgage customers and for people to buy a house. But ultimately, we need to see those rents easing off and coming down so that we can have customers can either choose to live rental, and I think we'll have to see a bit of that coming into Ireland, particularly into Dublin, where you see it in a lot of other European cities, you know, longer term renters coming in. In order to do that, you have to have the right quality there from the landlord's perspective. So I think there's a room in this market for each of these stakeholders. But ultimately, at an overall level, what that will do and needs to do is push up those developments and numbers. Now, welcome numbers last year. We saw 18,000 units built in Ireland. We reckon that will be 22,000, 23,000 this year and will continue to grow over the next 2 or 3 years. We do need to see that continue to grow. We need to see those numbers coming up because ultimately all of these pressures are being driven by that supply issue, and we need to make sure that we manage that in a right way going forward over the next couple of years.
And do you have a sense of roughly what the percentage of a household income should be in terms of mortgage purchase? You know, in other words, if you saw somebody paying, say, 35% of their income on
if you actually look at the macroprudential rules, it's 3.5 times. Roughly, that sets it the mortgage debt and the debt for a customer around 30-35% of their take-home pay.
Yeah.
To me, that feels about right. I think if you have scenarios where that's going higher, there are exceptions there for customers who, you know, are in different circumstances, could probably afford to go a little bit higher. But I think that feels right, and it's a right price point.
In some cases, rents, of course, are higher than 35%.
Yes. So that 30% would be a good guide. That would be a reasonable amount of income to spend on housing. But the fact that the average rental price in Dublin is $1,620 per month.
It's higher than that.
That's there will be examples, but the average in Dublin, according to our data, is that obviously it's a bit lower outside of Dublin, but that is to earn the sort of income where that is a third of your post-tax take home. Would suggest that is unaffordable for your average teacher or nurse or many people, young people, getting their first job. Deputy, the question you asked around are the larger funds or more larger institutions who are buying up properties, is it pushing out other regular individuals, private home buyers from the market? There were 57,000 homes purchased during 2018. So we talk a lot about the number of new builds, new homes, which was 18,000. But in terms of actual homes that were purchased, so the secondary market was 57,000. We would estimate around 15% of that were from the larger big investors that you referred to. In terms of the supply and demand, we are seeing the supply come through, even though it's not keeping up with the demand. So the demand for new homes in Ireland is around 35 to 40,000 per annum. We've seen the supply of that increase from 15 last year, like Gavin said, or 2017, 18 last year. This year, expected market consensus view would be around 23,000, next year 27,000. That increased supply is seeing price increases reduce or soften slightly. So we would have seen at the beginning of last year, you would have had sort of double-digit price increase in terms of the property market, the residential property market. That is beginning, even though it's still in the positive space, it is beginning to come down as the supply is coming on stream. But also there are some macroprudential rules which are doing the intended effect of slowing down some of the demand as well. So we would see that the outlook for the property, the price market this year being around 4 to 5%, and that would be of an increase. That has been more subdued than it has in previous period as supply increases.
Okay, thank you. The last time you were here, we had a conversation about staff and staff remuneration. I've been approached by quite a number of staff in the bank, both in my own area but nationally as well, who have an outstanding difficulty with yourselves in relation to the settlement of mortgage issues and mortgage price issues. People who took out 2-year fixed rate products just before the crash in 2005, 2006 and 2007. My understanding is that there were several thousand people in this category, and the people who have been making inquiries with me about, as I understand it, 1,800 cases have been sorted, but that there are about 200 cases which remain outstanding. And as with all of the, if you like, the difficulties from the time of the crash, a lot of these are very difficult for the individual people and families involved. So I just wanted to know, do you propose to address this? Because certainly people have not had the advantage that the people who got, the 1,800 or so who got the settlement versus the 200, I think, to summarise it, they can't understand why they've been excluded from the settlement. And secondly, having been excluded from the settlement, I'd like to know, do you propose to review their cases so that they can avail of similar settlements to their other colleagues? Because you talked there about the difficulty of staff retention. As I know the Bank of Ireland fairly well, I think a lot of your staff are excellent, and it's certainly a running sore that some staff just don't seem to have been included where huge numbers of others were. Can you explain that?
Before I pass to John to talk more about that particular group of customers, we treat staff as we would customers in the context of the tracker examination. I've personally made this, been committed to fixing this issue, and we have, as you said, Deputy, there's been, of the total number of customers that have been included in the redress and compensation, 1,800 were existing or ex-employees. There is a group where there is a difference of opinion, and I'll pass to John just to expand on that.
Thank you, Deputy. So this, in terms of the tracker piece overall, as Francesca said, we've continued to try and make that a priority to bring that to a conclusion under the full extent of the examination and the framework. In terms of the group that you're referring to, I met a set of the representatives of that group earlier this week, and I've also met many of the parties individually over the past 12, 18 months or so. Whilst we're restricted in what we can say here because they're still part of an ongoing analysis and discussion, I did go through in depth with the representatives the reasons why there's a difference of inclusion or exclusion, and fundamentally, whilst we haven't seen anything yet that indicates there is an entitlement to a tracker, I do understand the impact that it's had on these people and the way that they are framing it, and just right down at that human level in terms of what it means to have seen some colleagues returned onto a tracker and then not. And from our perspective, currently, we sought to be as expansive as possible. It is a group of staff where, in terms of the mortgages, they never actually were on a tracker, and they didn't take up the offer of a tracker when it was given at the time. But I don't want to preempt that. What I've given them is an undertaking to look at it again, to look very closely at the specifics in terms of some of the additional points that they've brought to bear. And I've also given an undertaking to have that discussion with the Central Bank as well.
Well, could I ask, Chairman, perhaps that the bank might come back to us on this, because it's a really significant issue for the people who are affected. And, in the context of the earlier discussion about, I suppose, the bonus culture, I know the word bonus wasn't mentioned, but we are aware that there's been a lot of pressure on the government to jettison, the caps on senior executive staff payments. And we understand the arguments that you have made about the difficulty of recruiting staff. But to be perfectly honest, if you look at that conversation and even your own comments there now, one has to kind of smile that the people who probably are in a more middle position in the bank or even lower position in the bank, they have a real dilemma. They're not receiving 500,000 or 600,000 in annual remuneration, and they are struggling like lots of people are still in the aftermath of the crash.
Back to us in relation to, or keep us informed in relation to developments on that cohort of staff. Many are involved, just for the deputies to answer. Many are involved.
I think the number quoted is 200, and that's something we just need to make sure as to what that final figure actually is.
Okay. Senator Conway Welch.
Here, look. Just following on from that a bit, do you accept that those staff, those 200 staff, are right in stating that they were told verbally and by the bank's internal information system that they would have a right to roll onto a tracker mortgage?
Yeah, I think what we have seen as we've gone through the documentation is that after the tracker product was withdrawn, and we went through this, I think, in a lot of depth.
Do you accept that they're right? I suppose
I accept that they view that there is a very strong entitlement from their perspective to have a tracker. What we're trying to ascertain is how do we manage that expectation in terms of what we...
And we can talk about that again, but do you accept that they are right that they were told verbally by the bank's internal information system that they had the right to roll onto a tracker?
No, what I accept is that when the mortgages were taken out, the way that the mortgage system was put together was that when a fixed rate expired, all options available at that time would be given to the customers, be they staff or otherwise. And anyone who did roll in that period would have been offered a tracker. And after trackers were withdrawn, and this is effectively what comes back to at the centre of the tracker piece, is that because that product was no longer there and there was no contractual element, because typically they would have drawn down on a standard variable rate, or in terms of that, then because they never had a tracker, it's difficult to return them to it. But I do understand from having met with the group and having spoken to people individually on it, their view and expectation that there was no difference for them in terms of what they felt they would return to.
Okay. Can you rule out the sale of performing restructured loans, future sale?
So we spoke earlier in the committee about the progress we've made in reducing our NPEs with the best and the lowest NPE we're currently going through a process of securitisation of some non-performing buy-to-let. We've previously said we put all options on the table, so I'm not ruling anything out at this point, Senator. We're looking at all options to optimise the management of our capital and reduce our NPEs.
So you can't rule out the sale of performing restructured loans at this stage, that's correct?
When you say performing restructured, from an EBA and from an ECB perspective, mortgages that were restructured in certain ways would be regarded from a regulatory perspective as non-performing.
So once they're restructured, they're vulnerable to be...
No, what I've said is that we are looking at all options, and at the moment that's securitisation. Historically, when we continue to work out with individual customers as well. Other options could include a sale also, and at the moment our focus is on the securitisation of a non-performing buy-to-let book. But we have said that all options are on the table. We need that optionality to be able to manage our capital efficiently. Okay.
I think we get the picture in that. In question 28, you tell us that you completed a review of the tracker issue at the bank at the end of 2018, and you've shared that with the central bank. Did this review name the people responsible for, in the bank's view?
No, it didn't assign blame to any specific individual. Obviously, there is the work of the central bank around the tracker mortgage examination is ongoing, and I wouldn't want to preempt or opine, obviously on their behalf. That would be inappropriate. But in terms of our own internal review about what happened and what are the learnings, the observations are the same as I've shared previously at this committee. One is that the operational processes that were applied to tracker mortgage customers were inconsistent and incorrect for some cases. Hence, those that we've included in the redress and compensation programme. We've apologised for the impact that's caused them. We've also observed that...
And I take all that and I commend all that. I'm just trying to see around individual accountability. Did you pass that report on to the Gardaí, for instance, to...
No, we wouldn't. We have not identified or named any single individual. I think the read across here is to how there is no individual accountability regime currently established in the banking sector in Ireland. It is being absolutely considered or recommended to the department. I was very explicit in the opening that I actually think it would be positive to have an individual accountability regime or individual accountability framework in place in the Irish banking sector. And I'm happy to expand on reasons why. But there was no specific name that was held or blamed for the tracker issue.
So nobody's going to be held accountable?
Well, the bank is being held accountable, and that's why we've worked very hard to try and address this as quickly as possible for the benefit, for the satisfaction of our customers. So we had,
and I accept that. So the banks, no individual is going to be held accountable.
Like I said, the central bank is doing a review and hasn't completed that review. So that accountability from a regulatory perspective is for the central bank and the regulator to opine on. In terms of our internal review, and our primary focus was to resolve the issue, but in terms of identifying what caused it, there is no individual person that we've said it was because of that individual. Obviously, the regulator may come out with a different perspective.
Picture. Okay, thanks. So, following on from the 935 million profit in 2018, can you just update us as to the extent of your corporation tax credits and how many years, based on current profits, it will be before you pay corporation tax?
Okay, so we are already paying Irish corporation tax. We would have, across all the various tax headings in 2018, we would have paid total tax of €247 million, of which €21 million was Irish corporation tax.
Sorry, how much Irish corporation tax?
€21 million. That would have been from companies that never had a tax loss or where no deferred tax allowance had either been utilised or didn't exist.
Okay, so if we look at the situation say, in Britain, where you made a profit of 173 million, you paid 22 million, it's about 13% in corporation tax, and you make 935 million in this state, and you pay 21 million. Is that correct?
So the profit that would be from our subsidiaries would be attributed to the group, and the group profitability before tax was 935 million. The total tax that we paid from a corporation tax perspective was 21. We also paid 29 million euros in a bank levy. We're fully compliant with tax legislation and requirements in all the markets that we operate.
I just think it's interesting to compare the two, where you pay 21 million here on 935 million, and you pay 22 million on 173 million in Britain.
Like I said, we fully comply with all the tax legislation and rules in the markets we operate. I mean, there's no special treatment. There's no rules that apply to us or banking that wouldn't apply to any other organisation in Ireland.
When will the tax credits that you have at the moment run out? Is it 2030?
In our annual accounts, we don't provide profit projections, but based on and sort of normalised profit in the annual accounts, we would estimate that the deferred tax assets would run until 2030. In terms of those will be within individual subsidiaries. It doesn't mean that we're not paying Irish corporation tax until 2030. Like I said, we paid 21 million in 2018.
Okay. Just in terms of the ownership of the bank, is it your strategy to 100% have that private?
So
in the coming years?
At the moment, we're held by a number of institution investors or individual investors. The government holds for the state 14% shareholding. It is not our strategy for necessarily that to change. That is a matter for the Department of Finance and for the Minister for Finance. It's not part of our strategy. We set out a very clear strategy, but that doesn't relate to which of our shareholders should buy or sell our shares.
I think all my other questions have been answered. Asked before.
Senator.
Thanks, Caroline, and thank you, Ms McDonough and your team for being here. And I know a lot of the points, certainly from the questionnaire from sections 1 to 6, I think nearly all the points have been discussed, with maybe the exception of the central bank lending rules. And I know you've outlined your kind of opinions and thoughts on them. Do you want to maybe just share or give us a summary of where you think they are? I think we're happy enough with. I think you seem to be happy enough with them. What their effect on the property market is.
Yeah, Senator. These are the macroprudential rules. We comply with the regulations and rules as they are set. I think they are doing what they intended to do to moderate demand for higher LTV or higher loan-to-income borrowing, particularly in the Dublin area. We meet and comply with those regulations. I don't know if you want to add any more, John, to that comment.
Yes, thank you, Francesca. I think, Senator, as we said out at the beginning, overall we're supportive of the rules. I think they have helped to put a break in terms of property price inflation. Certainly we seek at all times to make sure we comply with them. And I think in many cases they overlap with the bank's own credit and lending policies. 3.5 times income, 80% loan to value with a slightly higher allowance for first-time buyers, typically because first-time buyers tend to be younger, and maybe have more earning potential over the rest of their career. Certainly I think as we come through this year, with no changes to the macroprudential rules, we're certainly hoping to be in a position to be able to make sure that we maintain that allowance and ability to provide those throughout the course of the year to individuals where they're required.
So is it fair to say that when you're looking at all these people, you're lending them, new entrants coming in, getting borrowing, that the likelihood you're putting far greater stress testing, looking at the resilience in terms of a downturn? Nobody can predict the future totally, and people can lose jobs and companies can go wallop and so on, but certainly what happened 10, 12 years ago at this stage, 10 years ago plus, is much less likely to happen now based on what you're allowing people to borrow relative to their current circumstances.
I think there's a wide range of factors there, Senator. I think certainly in terms of the bank's approach to it, there have been many lessons learned from the crash in terms of how we've tightened the credit policies that we have. In your words, a lot more stress testing in terms of the durability and the sustainability of the type of income that people have. We think ahead in terms of where might interest rates go, and it's been one of the reasons that we've been very forthright around looking to bring more fixed rate mortgages into play, because it gives that bit more certainty in terms of repayment. I think at a macro level, certainly Ireland and Irish banks retain that legacy in terms of the level of capital that must be set aside for mortgage lending. It's extensively higher in terms of an Irish context than elsewhere. And then I think you have other factors that are brought in terms of things like the macroprudential lending rules. And you would look out over the next 10 years, as we get to maybe 2027, 2028, nearly all of the mortgage lending in the Irish market will effectively be done under the guise of the macroprudential rules since their introduction a couple of years ago.
And if I may just, if you allow me, Senator, just to sort of maybe broaden the perspective about the bank's resilience. I think there's no other time when resilience of businesses, whether you're an SME and you're your own one employee company or one of the large banks, resilience at a time of uncertainty is particularly relevant. And given the Brexit situation, there has been a lot of uncertainty, and our focus during that time, obviously, to be there for our customers when they are uncertain, but also to be ready as an organisation, as an institution, in terms of our own resilience for whatever Brexit outcome. And specific to that, one of the sort of areas that should provide reassurance, so it's not just about macroprudential rules and one specific proof point, but more broadly, our capital resilience, our liquidity resilience will be regularly stress tested from a regulatory perspective. So the EBA conducted stress tests in 2018. One was a baseline and one was under a very sort of severe macroeconomic situation in the event of a quite severe downturn. And what we demonstrated in those stress tests is that we had enough capital reserves in the event of a financial shock. We actually fared better than some of our UK peers. So that broader question around resilience of Irish banking, whether it is through lending to mortgage customers or responding to a broader macroeconomic situation, I think that stress testing has given some reassurance.
I suppose that my initial point was about the resilience of your customers, but I take the point that it's very important we have a resilient banking sector. We certainly don't want to see what happened before. And I suppose it brings it on in terms of the questioning I had anyway, in terms of you talked about in your opening statement, particularly Brexit.
Yes.
And you obviously have your economic pulse that comes out every month. You have a team of economists in your network looking at Ireland. You have the largest branch network all over the country looking at, picking up signals from every part of Ireland, no different maybe than a political party does, but you see customers, you're seeing people under pressure, you're presumably the sectors we all worry about in terms of Brexit, agri-food, tourism and so on. What are your thoughts in terms of where Brexit is heading? I don't want you to predict Westminster, but just in terms of the areas that are more vulnerable, we all have our own opinions on that, but from a bank's perspective.
As you suggested, so I leave the politics to the politicians. But in terms of what our customers are saying, so we think about Brexit in two ways. One, we need to make sure that we're resilient and ready as an institution. But the majority of our energy and day-to-day activity is in supporting our customers. So we do a monthly economic pulse. We would have seen the March results be at a low ebb, and consumer confidence as well, not just business confidence. So consumer confidence would be at the lowest level it's been since we started measuring it in the pulse over the last 4 years, and we would see businesses, some rebound, but businesses are still, particularly SMEs, are very concerned around the uncertainty that Brexit represents. And that is manifesting itself in many ways. Many SMEs are deferring, not necessarily cancelling, but deferring investment decisions. So they're not buying the extra, capacity in their warehouse, or employing more people, or replacing machinery, because they want to see what Brexit will mean to them. And depends on which sector you're in and which part of the supply chain you're in. So the sectors that you mentioned that would be most exposed to Brexit would be sectors that are highly dependent on import-export, where there's FX volatility or lower margins, and where they are lower down in the supply chain, that their ability to respond to that threat is quite limited. What we see, what we're doing is speaking to our customers. So we would have held over 250 events across the country, across the island of Ireland actually, in 2018. We have a team of sector specialists who are focused on the sectors, whether it is agri, retail, healthcare, hospitality, manufacturing, that could be more exposed, particularly businesses that are closer to the border in the Republic or in Northern Ireland. We've also launched a €2 billion Brexit fund, and that's to sort of put our money where our mouth is in terms of supporting customers at times when maybe developing a plan or a contingency requires money. And to help them take on sort of sustainable borrowing to support them during the uncertain times. But also there'll be opportunities. So Brexit may represent opportunities to develop into new continental markets, moving away from the UK, or acquiring manufacturing or production capacity in the UK as a hedge. We've also have a €50 million unsecured FX fund for customers SMEs who are exposed to foreign currency exchange, to help them at least reduce that volatility that can eat into their margins. We continue to have point-in-time commentary. We have on our website, on the Bank of Ireland website, we will have regular videos, information. We've recently set out a guide, particularly for people who are importing and exporting, about what to do. So I think being there for our customers, and not just in the public sense, but one-to-one conversations. We have the leading market share of SME, we're the largest lender into corporate Ireland. Having our relationship managers and our people in the front line speaking to customers during this uncertain time is a key priority.
Okay, thank you. Just in terms of your opening statement, you made the point that new lending was up 13% on the previous year, and 2018 was the first year of net new lending growth. Yes. So clearly that's a very positive statement. In terms of 2019, I mean, as Brexit becomes, I think with every hour, I've been in this room since 9:30 this morning, so I don't actually know what's happened really in terms of Brexit all day today, and it could have entirely changed by the time I finally get it to see daylight. But I think it's becoming more uncertain by the hour and by the day and by the hour. Does that mean that in 2019, I know it's only just after the end of the first quarter, are the figures for lending that little bit lower, a little bit softer than they were maybe for last year?
So we set last year a strategy to grow our lending, our total lending across all of our businesses by 20% to 90 billion. And 2018 was the first year, as you mentioned, and I said in my opening, that we had a net lending book growth, which is positive. The total strategy from now until 2021 is that 2/3 of that growth will come from our Irish business and 1/3 will come from our UK and international. What we're seeing at the moment is it's more 50-50. So half the growth that we experienced actually came from our UK and international businesses, and half came from Retail Ireland, so SMEs and mortgages or consumer lending. We believe that when there is more clarity on Brexit, whether it's good or bad, that there'll be a more certainty, particularly for Irish SMEs, to activate that deferred business decision. It doesn't necessarily impact, in the first order, the mortgage lending. Can impact consumer confidence, but I think the supply and demand dynamics are much more prevalent in the Irish mortgage growth. But for Irish SMEs, we would see that there's some overhang from the crisis. They're generally cash generative, so they can invest some out of their cash reserves. But there has been a reticence amongst Irish SMEs to take on new borrowing until they have clarity over Brexit. And that will represent, when clarity hopefully does come, that will provide, I think, some more direction for SMEs in terms of, do they broaden their manufacturing in Northern Ireland, or do they partner with a supplier in continental Europe? Some of these considerations, I think, are awaiting Brexit uncertainty. So we remain committed to our growth strategy, our 20% loan book growth strategy. It does depend on external factors as well, and it is our strategy is predicated on some type of deal being done in Brexit with a reasonable transition period.
Okay, thanks for that. In terms of, it's been covered before, or covered already to a certain extent, the non-performing exposures at 6.3, you've acknowledged it's the lowest level of any of the Irish banks, and you're saying that although the ECB haven't, or the central bank haven't given you a target, it's a kind of 5%, is a psychological target, or a kind of a place you'd like to get to.
Yes.
Once you get to 5%, is it kind of, are you willing to tolerate the 5%, or would you like to be at 1%, and that you'll keep, I suppose, disposing of or restructuring in such a way that, because I mean you've outlined the reasons why you don't want NPEs. From your perspective, from the bank's perspective, obviously there's a challenge there for people who are affected by that. Yeah. But that you would, is it your aim to get to 5, or is it your aim to get to 1? Because clearly there's about 6.3% of your loan book there sitting there, tying up capital from your perspective, but equally these are people who are vulnerable customers who, I'm sure in every case, went into that loan with the full expectation that their lives would be very different than they have ended up. And what is, I suppose, your game plan for that 6.3?
Sure. So we haven't provided the market, our shareholders, with guidance beyond the end of 2019 in terms of NP reduction. So what we said is we would look to get close to 5% at the end of 2019. We have said, and we continue to say, that we would look to keep on reducing. And if you step back and you look at all of Europe, banks, on average, are around 3.4% NPE. So sort of that would be considered more normalised, and it can vary. A regulator would obviously encourage banks to really minimise as much as possible their NPEs during a sort of benign period of a credit cycle, so that as you go through sort of cyclical change, you're starting from a lower base. Now, obviously, I don't have a hard number that after 5% we're going to go after, but we look to, it goes back to optimisation of our capital. So, we will work with customers, absolutely, and where customers are willing to work with us on a forbearance solution, we find a solution 9 out of 10 times, and 9 out of 10 times of those forbearance solutions hold. So that has always been our preferred option. But where there are other ways to be more optimal in terms of how we manage our capital, and that capital is to lend more to our customers and improve service, then we will certainly explore it. And there is a clear incentive in terms of capital, the intensity of capital attached to those NPEs is increasing, and the definition of what is an NPE is also evolving. So, our priorities.
That's from an ECB perspective, an SSM perspective, is it?
Yeah. we must balance this. We need to be obviously treating our customers fairly, transparently, looking at ways to find a solution that works for them. And we also need to meet our regulatory capital requirements, which mirror or partly are a reflection of MPE levels.
Okay, thank you. Just in terms of your opening statement was particularly focusing on Brexit and I suppose on culture. We've had a number of hearings. I don't know if any of you have had the chance to have somebody look at our meetings. We met with the Banking Payments Federation and Central Bank, various people in terms of the Banking Culture Board and so
Yes.
on. And clearly, most of the banks, I think 4 of the 5 banks in my time on this committee have changed chief executive. I think the cultures, I think it's fair to say, are evolving. Some people might say too slowly, some people would probably say too quickly. In terms of how culture is changing, how you're changing the culture to be more customer focused, more consumer focused, clearly there was a journey for all of the banks. I'd probably say Bank of Ireland may be less of a journey than some of the others, but I think every bank had a journey to go on. Where are you on that journey? Can you describe some of where you're going in terms of the culture of the bank generally?
So we've made this a key priority. So we talk about our 3 priorities, and one of them is transformation. And people often think, that means IT. And it does mean IT and business, but it also means our culture. I would say we're off to an improved start, and I know that because we ask our people and we look at other outcomes related to culture, which I can expand on. But I would say we're on the foothills. I think there is much journey, kind of a slightly overused term, but I think there's much further to go than we've come so far. So really embed it. So what have we done? We articulated our purpose and our 4 key values at the end of 2017, and we embarked on a very big communication activity to increase awareness and understanding of what those purpose and values were amongst all of our employees, and that was a big part of our activity last year. We had over 6,000 colleagues attend 50 roadshows up and down the country, which were led by managers and leaders to talk about culture and what it means, and what does it mean to be customer focused or accountable. We have made changes from a customer focused perspective in terms of how we resource our frontline, and we've made improvements in some of our processes, more to do. We're investing in our technology to be more customer focused and agile. We've also really increased two-way communication, so not just top down but bottoms up and across, and informal communication through skip level meetings. And through greater use of technology and just general openness. We've also improved recognition of our people in terms of when they do exhibit the values that I think we would feel proud of as Bank of Ireland, but a customer would be delighted by. We would recognise and encourage that, and we would celebrate it. We're also investing in developing the skills of our people, so whether they're leaders or people managers. We're embarking on people manager training and investing to help them understand their sort of values and action. So there's a huge amount of activity. I chair a group customer board, which actually Gavin and Tony would join me on, that looks at specific metrics and how does this manifest in terms of how the customer feels. Do they feel the effort of dealing with Bank of Ireland is improving? Would they recommend the brand? How the net promoter scores? And we look at verbatims. I have a live feed of verbatims from customers about good and bad, about how they feel. And we are very responsive and take them very seriously. We contact many of those customers. We have a meeting tomorrow. We will be calling customers that have given us some feedback to understand it better. We spend a lot of time in the front line and meeting. I will spend the majority of next week just with frontline colleagues and our customers and clients. So there's a huge amount of activity. Is it working? We survey our people on a regular basis. We have seen a significant improvement in staff engagement and cultural embedding since we started to measure this about 18 months ago. It is still not where we'd want it to be. There are areas of great progress around understanding of purpose and values and belief. The behaviours that are expected of people is well understood. Our colleagues' understanding of their risk responsibilities is very high. But there's also recognition that there's opportunities to improve our technology and our processes, and that's what we're working on. But there has been a tangible improvement in what our people are saying about our culture over the last 18 months. That's great, but I also want the customers to feel that through improved customer service, and we are seeing that, but there is, I will challenge ourselves in our ambition that there is more to do.
Thank you for that. Just in terms of the individual accountability framework. Now, that's obviously for more senior people, but it obviously trickles back down to, I suppose, everybody in the organisation, because those individuals who are going to be named and held responsible for various parts of the bank will have people under them who are either doing the right things or the wrong things and being measured for doing the right things, or maybe historically were being measured and rewarded for doing the wrong things in terms of lending out money that they shouldn't have been lending. This is all before your time, but this was, I think every bank was guilty of lending out more than they should to people that should never have got it. How are you going to implement that, or just maybe describe to us that process?
So the individual accountability framework is something that has been, I think, sort of recommended by the Central Bank to the Minister for Finance, and we were very pleased to we want to engage proactively with our regulator to see how that would be implemented in Ireland. That doesn't stop us from increasing accountability, and indeed accountability is one of our 4 key values. So we are doing things in advance of that framework being established by the regulator. My own reflections, and many of the team who have worked or work in the UK, and in my before I joined Bank of Ireland, I was part of the senior managers regime when it was established in 2016 in the UK. And what that meant was that senior leaders would have a very clear statement of responsibilities about what they were accountable for. So, so it wasn't there was no nebulous understanding of who was doing what in a bank. It was very, very clear that the SMRs, where their responsibility would end and start and finish, and then where that responsibility was handed over to was written down.
SMR being, sorry?
Senior manager regime. So that would have been like, here it's individual accountability regime or senior executive accountability regime. It's all the same. SEER, IAR, SMR, it's relating to the same concepts of holding individuals to account in banking. So senior bankers in the UK will have a statement of responsibility. They will formally delegate it to their team. So and that is a formal process. It has to be accepted, that delegation. Have to be very considered about people being qualified to accept that, any sort of delegation. And then there would be an expectation that you as an SMR would demonstrate reasonable steps in the execution of your responsibility. And reasonable steps would be the right reporting, the right governance, but also challenging, approving explicitly or not, demonstrating that you've done the checks, that you've challenged yourself, and that you have an assurance that what you're responsible for is happening as it should. And that is a regime that I operated under for before I came to Ireland. It's a regime that our senior team in the UK will operate under. It does ultimately increase clarity and accountability of senior bankers. And I think that is a good thing and absolutely consistent with what we're trying to achieve in our own cultural transformation within Bank of Ireland.
Okay, thank you very much. Just to, thanks, Ciarán. Just a couple more brief points, if you don't mind. I've asked before. I mean, and the questionnaire is very detailed. All 39 pages of it. I've been through all the different sections in it, and clearly the upgrading of the re-upgrading, if you want to call it, of the branches to either full cash and so on, I think is a welcome development. And certainly, I've seen in my own area, the clusters and the community hubs and the ability of people to come in as being a very positive development. And how rolled out is that concept? I mean, I've said my branch is Montrose, and it's transformed in what it was. I think most bank branches are very different than what they were 5 or 10 years ago in terms of the interaction of people either using the facility for all kinds of things they would never have considered before. Obviously, some people are on a journey with technology, but I think most people are getting there. But in terms of just the branch network, I know you're not probably planning to close. In fact, you opened branches recently. In terms of ATM security, we saw 9. I think I think one was Bank of Ireland anyway, at least. But there's diggers going around the border digging out ATMs. Have you a plan to try and make sure that this doesn't happen too often in terms of providing, look, these things I know they can happen, but I think there's been 9 of them either side of the border in the last year. It's a challenge. I know the future of money. I was at a recent talk in the central bank about payments, technology. We're talking about 1 cent for contactless and 10 cent for chip and pin, and probably things none of us really appreciated before today. I suppose the future of the network, the journey we need to bring some people on in terms of technology, cashless, where central bank is dragging money out of the central bank at the end of every month under army escort to bring it to post offices, to secure, to have people under the bed. Where are we in terms of where you see the banking sector? Lots of people have voted with their phone, voted with their online presence and so on. Some people are very challenged by that and maybe need a bit of training or a bit of help to go on that journey. Some people don't want to go on that journey, and that's presumably their own business. Where do you see banking in maybe 5 years at a customer level? Yeah, I have 2 or 3 more. That's one of the last ones anyway.
Thank you, Senator. I'm going to ask Gavin actually to.
You're here till 6 anyway.
To respond. They're very fine questions, and we'll be happy to respond.
I can go back up there.
No.
Sorry, Senator, first of all, thanks for, I know you were saying in terms of some of the upgrades and investments we've made. We've seen an explosion in online transactions, whether it's card transactions, internet transactions, etc. We're now processing 50 million payments a month through our business, which is significantly up on a number of years ago. The more online we get, though, we still believe that the more important the community presence is. So we're going to invest another 11 million in our network this year in upgrading branches around the country. The workbench facility that you talked about in Montrose, which gets a lot of use, we've now seen that rolled out to 12 other locations around the country. Recently opened up a workbench in Letterkenny and in Tralee, in the Quay in Waterford. So we've seen this concept really taking off in communities. Communities love the use of the branch, the layout of it, etc. And we certainly see a very, very strong future. On the ATMs, I'm not going to comment on kind of an ongoing security issue that's there. We had 2 regrettable incidents with some in 2 of our branches in Monaghan and Cavan. And I guess at times like this, it's when we have to stand up and be counted. We are very committed to those communities. In Ballybay, I visited myself a couple of months ago. The ATM was put back in within 2 months, and that ATM is fully operational again. But I think more importantly, when I look at the community up there, that hit them hard before Christmas. This happened 2 weeks in the run into Christmas, and we kept the branch open for 9 consecutive days in the community because it was the only branch in the town. We are the only bank branch in 64 communities in Ireland. We take that very seriously. We're very proud of that. We're committed to staying there. We're committed to providing those ATM services. We work with the relevant authorities, whether it's the Garda Síochána or the PSNI, to help and assist when it comes to incidents like this, and we'll continue to adopt our security measures. But most important is our commitment to our staff, the safety of the staff in our communities, but to continue to provide that service. So I think that's really important as we go forward. In terms of 5 years, I wish I had a crystal ball, but I still believe for us to differentiate what we do as a bank in this market, that online or mix of online and community presence is essential, and we'll continue to invest in both our online channels, our mobile channels, but equally into our branch network.
I just thank you for your contributions today. I think, to be fair, Senator Robbie Gallagher and the Shannon stood up and actually acknowledged the presence of Bank of Ireland over Christmas opening. I think you even opened over the weekend because there was no ATM availability because it had been
we
removed.
Members of staff, and I know a number of your colleagues complimented our staff earlier. It's times like this, we really see the value in our teams and our staff. Members of the Monaghan team pulled together and made sure that branch opened, as I said, for 9 consecutive days while there was no ATM facility in the run-up to Christmas.
Well, I'd certainly echo that. I mean, in terms of on the ground, I find that the staff in all of the branches that I ever deal with are particularly good. But I suppose we're all on a journey. The banking sector is on a journey where, as a finance committee, are here to provide, I suppose, some level of scrutiny of that, and to thank you for your contributions today. Thank you, Chairman.
Your own journey has ended now?
Well, for now.
Okay. Deputy McGrath.
Yeah, thanks, Chair. Just a few further questions, if I may. Just in relation to restructurings or forbearance measures that you enter into in relation to mortgages, so we can see the table for PDHs, for example, that the vast majority of them are term extension or arrears capitalisation. You have done 2,916 PDH split mortgages at the moment. Can I just ask about the bank's policy down the line when that warehouse debt crystallises? So I think it's a good solution for a lot of people. It buys time, debt is parked. Bank of Ireland, as I understand it, continues to charge some interest on the warehoused element of the debt, unlike most other banks. You might clarify maybe what the rate is on that. But what is the bank's policy at the end of the term of the mortgage? A family could have, let's say, for argument's sake, €100,000 parked. The house could be worth 200,000. They're retired from work. They're on fixed incomes, perhaps social welfare or pensions, and can't afford, don't have the 100,000. What happens then is the question that I have. And do you have a figure for the amount of money of mortgage debt that has been warehoused by Bank of Ireland using that solution?
Okay, thank you, Deputy. I'm going to ask Tony to expand on this.
Thank you, Deputy. So specifically in relation to split mortgages, and maybe just, Deputy, if you were referring to the owner-occupier ones rather than buy-to-lets.
Yeah, I was, yeah.
Yeah, so just to clarify, some of those buy-to-let split mortgages are part of the announcement of the securitisation last week in relation to a certain cohort of buy-to-let loans, so that's where some of those would feature. The principle, though, is the same, is that if an example, Deputy, would be that, in those split mortgage for owner-occupier, is that on average about 40 to 50% of the mortgage is on interest only, and about 50 to 60% on average would be paying down capital and interest. So for the remaining duration of the mortgage, the first part of it will pay down to zero, and then there will be a lump sum left at the end of the period, where I suppose it does depend on each individual circumstance, but you would be looking towards, people who have retired, maybe there are lump sums or pension, or other of those dynamics may change over a period of time, but clearly, depending on certain circumstances and children go older, but the sale of the property would be one of the, repayments that was envisaged when those were contracted with those customers.
Sure. So it will be case by case.
It will be case by case.
Yeah. You would hope, as each of those mortgages is reviewed on a periodic basis, that some of the warehoused element will come into the active mortgage and that they'll start making inroads on the capital and interest. But notwithstanding that, there will still likely be a residual warehoused element there when the mortgage term ends. And it's a question that people, I think, are legitimately asking what will happen at that point in time.
Yeah, and they, I suppose, because of that potential dependency on the sale of the property, that's where the classification in terms of those mortgages will be classified as non-performing from an EBA and an ECB guidelines point of view. And I suppose, like all of our non-performing mortgage customers, we have over 200 staff just dealing with mortgage customers in difficulty, and we proactively look to engage on an ongoing basis with those customers to make sure that we're looking towards solutions that work for the customer, obviously, also.
And what is the interest rate on the interest-only part, as you call it, on the warehouse element?
It's the same interest rate on the interest-only as well as on the other piece. Obviously, then the extra piece of the capital payment then is just on the first tranche.
Okay, so on the warehoused element, it's the exact same interest rate as it is on the active part. Yeah. So it could be up to 3, 4, 4.5% potentially.
Potentially, but bear in mind when I suppose some of these mortgages were done, it depends on whether they were on a tracker or I suppose on a variable rate. But for those ones related to tracker, they'd certainly be lower than that. Okay,
and the amount of debt warehoused, do you have about 3,000 PDH mortgages where you have a warehoused element? If that was an average of 50k, then that would be 150 million.
Directionally, that would be directionally, that's the figure. Yes.
Just in relation to mortgage lending and the macroprudential rules and the exceptions policy, does that work well? We read from time to time that the banks have used up their exceptions under loan to income and so on like that, and there'll be no more mortgages approved outside of the macroprudential limits for the remainder of the year. Does that system need to be tweaked in any way, or does it function well as far as the bank is concerned?
John, do you want to? Yes, Deputy, I think from our perspective, we're supportive of the rules. I think it certainly when they were introduced, it was challenging to start to manage that process, because for the first time it introduced a checkpoint after a mortgage was approved and before it drew down. But I think as time has gone on, we've certainly looked to see how can we manage that in as clean a way as possible. And as we look into this year, certainly our intent is how do we make sure that we try and keep available exceptions there throughout the full course of the year. Effectively,
is it based on approvals or drawdown?
It's measured once per year, and it's measured on the drawdown amount through the course of the calendar year. So it's measured on the 31st of December. So effectively, the challenge with managing to it is to make sure that if the market and mortgage lending is lower, or the amount of drawdowns we would expect is lower than normal, then it's one number divided by the other. But we look at that and we look ahead through the course of the year and try and make sure that we keep a level of availability there.
And because not all approvals are drawn down, do you factor that in and provide more approvals to allow for the fact that not all of them will be drawn down?
In a cautious manner, yes, because again we have to. Because what would you expect that if somebody is approved on the basis of an exception, then the likelihood of them drawing down tends to be slightly higher than if they weren't. And so it's just to make sure, and we learn as it's developed over time, and it's just to make sure that we get that
in
right.
general, what is the ratio of approvals to drawdown? Would not in the case of exceptions, but generally where the bank approves a mortgage, would 70–80% of them be drawn down?
No, it tends to be lower than that in the Irish market, for a number of reasons. But I think at the industry overall, it's in around the high 40s, and for Bank of Ireland, it's in the high 50s. So we've tried to work very hard on our process, as Francesca was talking about earlier, in terms of managing the customer process through, and as I was discussing with Deputy Burton earlier, in terms of making sure people are mortgage ready. So we tend to have that higher rate.
Can I ask what proportion of the bank's profitability is attributable to mortgages, the mortgage market? Is it a half? Is it 2/3? What is it?
It would be. I don't have a. We don't break it down in that way. But in terms of the contribution, our mortgage business in Ireland and the UK would be. There would be two of the larger portfolios that would be a key driver of the profitability. I wouldn't assign them an absolute percentage, but they would be a big driver. It's obviously also a very important product from a customer perspective, because it's what most people spend the majority of their disposable income on, and it's their biggest asset, and it's where their family live. But it's a key driver it's one of the key drivers of our revenue.
Can I ask if you have any views on the risk-weighted assets issue, so the amount of capital that has to be put aside for mortgages that are lent out? So the Department of Finance did a very good report recently on the issue, and I think it quoted Bank of Ireland for performing mortgages, it's 29%. Ireland, I think, has the fourth highest across the Eurozone. I think Sweden's did also about 4%. In aggregate terms, I think Ireland was about 38%. Given that non-bank lenders, such as retail credit firms, are not bound by these risk-weighted assets, these capital requirements, are they not a big threat to the mainstream lenders like yourselves? And we've seen Finance Ireland now enter the market in terms of residential mortgages. They're not bound by that risk-weighted asset capital requirement. So to what extent is that a determinant of mortgage pricing? Like we had Mario Draghi before us a few months ago, he described the Irish market as a quasi-monopoly, and yet the Department of Finance really seemed to be attributing a lot of the reason for high Irish rates to the capital requirements.
Okay, so I equally welcome the recent report that the Department of Finance issued about risk-weighted assets in Ireland. What we would see, and this would be something that we would cover in our annual results, is that the density of risk weighting in Ireland, particularly around mortgages, would be a multiple of what we would see as the European average. So there's been some other research in the market that would compare mortgage pricing in Ireland with the European markets, and it's difficult to make direct comparison because there's application fees that are very common in other markets, which we don't have in Ireland, and cashback, as you know, is something that we would also be a differentiator. But mortgage RWAs in Ireland, which vary between, let's say, 35 to 40%, are 3.2 times the average in Europe, which is 11%. So that would translate to, for every €1,000 of mortgage that an Irish bank lends, it would need to hold €50 of capital against that mortgage, whereas for your typical average European bank, it would just be €16.
Yeah.
So that gives you an idea around, that feeds into the conversation around pricing. People will say that the absolute price of a mortgage in Ireland is higher than it is in Europe. We would say that isn't a fair comparison because of the application and cashback element, but also because the amount of capital that is associated that banks must hold against those risk-weighted assets, where the density is much higher, would be very different. And that reflects also the historic losses that you've seen in the Irish mortgage market during the depths of the crisis. It would also reflect the time it takes for the legal process in Ireland to work through, and some other factors. So we welcome that report. That comparison is very vivid and an important one that we will speak to our investors frequently and is reflected in pricing. So it is a key driver of our mortgage pricing.
Yeah, but I accept that, and because of the extent of the look back in the calculation of those RWAs, there isn't going to be any major change anytime soon. So my point to you is that new entrants who are not bound by those rules, of course new bank entrants would be, but new non-bank entities like retail credit firms are not bound by them. Do they not offer the potential to shake up the market and offer a real threat to you and the other mainstream banks? If, as you and others say, that the risk-weighted assets capital requirements is a major factor in mortgage pricing, if they're not bound by that, then they can come in and undercut you.
Well, I can't opine on the capital requirements of potential competitors who are planning to enter the market with mortgage offering, but they will certainly represent increased competition. Their product offering may be one of pricing, it may be one of risk. There is certainly, I think there is a lot of competition in the market today. New entrants would increase that competition. We feel confident about our ability to compete and continue to compete in the Irish market. The changes that we've made, reducing our shorter mortgage pricing, improvements in our service and our processes are part of our differentiation. So, we are confident in an increasingly competitive market.
Okay, just a couple of quick ones, Chair. The number of vacant properties that the bank is in the ownership of or in the possession or control of, do you have a figure for that? I don't think we asked that in the questionnaire.
We do have the number for 2018. Yeah. Tony may want to share.
Houses, apartments, residential units,
we have 79 vacant properties, and the numbers of properties we would have for sale, say via possession, was 95 at the end of 2018.
So 79 are vacant and 95 are 95. In addition to that?
79 will be a subset of the 95, but we've 95 that came via possession, say that are in stock at the end of December.
Okay, so that's, compared to other banks, that's a low number. So you obviously make an effort to turn them around where you do come into the possession of a property. You don't sit on them.
We don't, and I suppose, Deputy, from an overall point of view, prior to possession, we as I said, we have a lot of staff that are regularly engaging with our mortgage customers, and while legal proceedings would always be a last resort, we very proactively engage right through the legal process and with our borrowers and any third parties that are advising them to see can we find alternative arrangements right up until the last moment. And just as an example, we would have discontinued legal proceedings on 164 cases last year, which were very advanced, where we just continue to push and make every effort where we can to obviously avoid repossession.
Sure. I would assume that the voluntary sale numbers are different because they're still in the ownership of the borrower, and the borrower may well remain in those properties until the sale is completed, so they're separate to the numbers that you've outlined there. So you had 288 assisted voluntary sales of owner-occupier properties in 2018.
Yes.
Yeah, okay. Two final quick points, Chair. One is just the issue of returning immigrants to Ireland who are looking to set up a bank account and ultimately to access a mortgage, there can be significant difficulties for them. Obviously, there's criminal justice legislation around anti-money laundering. They need to have a permanent address here and so on. But then when it comes to underwriting and making a decision about a mortgage application for a returning immigrant, how does the bank view that, and how do you consider work history in another jurisdiction, for example, and the weight that you attach to that? And many of the people returning may not be coming back immediately to secure employment, permanent employment. Do you have any observations to share on that issue, because it does come up?
Sure, no, I'll pass to John, but just to say that, I mean, this is increasingly topical, whether it is Irish individuals, people, families coming home for personal, professional reasons, but increasingly non-Irish nationals who are attracted to Ireland, particularly in a post-Brexit environment where there's a huge amount of job creation. John?
Yeah, thank you. But yes, I think once people return to Ireland, we have absolutely no issue with that. You know, we lend to many people who are just returned, whether they're new emigrants to Ireland or Irish people returning on that side. I'd say historically over the last couple of years, we have seen maybe about 1 to 2% of applications are, people returning to Ireland or people who may have worked overseas. And when we were underwriting those, again, we would look, very much, case by case to the individuals involved. Are they returning to? Are they in a type of career or work practice that's going to be suitable in Ireland? What's the kind of common salary that will be payable in Ireland versus what they might have gotten overseas? What we have found over the last number of months is that we have put a pause on some of that activity, because we want to make sure that as we look through to other obligations in other jurisdictions, we have to make sure that we're compliant with all of the various regulations. And whilst we're very comfortable with all the lending that we've done to date, we need to look through to make sure are we up to date with people who are residents, say, in the UK or in other markets.
Thank you. The Chair is very generous at this time. I'll perhaps ask just 2 final questions. One is your investment in technology and the transformation that you promised in that space, and I know it involves a very significant investment by the bank. Can you bring us up to date on where you are in modernising your IT infrastructure?
Sure. So we would have talked about transformation, key priority, including that of our systems, and upgrading our core banking systems is a big part of that. So we have successfully built the foundations of that. We have the functionality for a single customer view, where we can see all of our retail island customers across a range of products, as opposed to having individual systems or views by product. So we now have that functionality. We've also tested and loaded live transactions on a pilot basis for personal lending and savings account products. And this year, our focus is very much on an improvement and a resetting of our channel offering, so that when customers bank with us, and we have 50 million logins a month on our mobile app, there's an opportunity for it to be better, to improve functionality and user experience across, whether it's mobile or iPad or desktop. That is our big focus for 2019.
Final point is, and I won't labour it because it has been raised a couple of times already, the Bank of Ireland Staff Tracker Group. And just to give my own observation on it very briefly, I would encourage the bank not to take a legalistic approach in examining this issue. If you are genuine in your efforts to make the bank customer focused, then I think you will recognise when you read through the documentation, as I have, and we will submit the questions, I would imagine they're the same ones that Deputy Doherty has also, then there is, I think, unarguably a legitimate expectation on behalf of those customers, some of whom are staff, some of whom are now retired staff, that they would have rolled on to a tracker. Now, the fact that they were never on a tracker is actually not directly relevant. There are thousands of customers who have been deemed impacted in the whole tracker examination that were never on a tracker but had a contractual entitlement. I know that in accordance with the letter of the mortgage contract, these customers did not legally have a right, and that would certainly appear to be the case from my reading of it. But it is also, I think, undoubtedly the case that there was lots of communication with those customers that they would have the option of rolling onto a tracker afterwards. And the fact that the tracker product was withdrawn at that point in time, I don't believe is relevant. What I'm saying to you really, and it's just the opportunity we have, is that, you know, if we're talking here about 200 customers, I really think the smart thing for the bank to do would be to come down on their side. They certainly had, I think, a legitimate expectation that they would be in a position to benefit from a tracker. And I'm not aware of any other major outstanding issues in Bank of Ireland's tracker examination. We have others with other institutions. So I would suggest, and I'm sure you've done this, to quantify the extent of this issue. And if it is as insignificant as we think it is, I think you'd be better off deal with it and conclude in that direction.
Thank you, Deputy. Without getting into the details of the case again, and John may wish to add, but I note the encouragement not to be excessively legalistic, and I don't think, and I'm hopefully you reciprocate in noting that we haven't been excessively legalistic in any of our responses on tracker, and we're very mindful of balancing legal contractual obligations and requirements with what we consider to be fair. We must also apply that fairness in equal measure to our own colleagues as we would a customer. We shouldn't be providing unfair advantage nor disadvantage to a colleague than we would to a customer in this tracker mortgage examination approach. We note your comments. I don't know if you want to add any more, John.
No, I think Jeffrey, we've covered it a couple of times during the session, but happy to pick up any specifics. But I've echoed that.
I'm just giving you my take on it.
Thank you.
Can I just support Deputy McGrath in what he has said about the staff and the numbers? And I just want to be sure it's 200 now, is it? You gave that figure earlier on.
No, the figure that was quoted is by the Deputy was 200, and I think that's the number that is being looked at. I just want to make sure in our own figures that is the right number.
But it's 200 odd, that's the extent of it.
Give or take, yes.
Yeah, okay. Your profit for 2017 was how much?
935.
Sorry?
935 million euros profit before tax.
And your 2018?
That would have been the full year 2018 results.
Or 2017?
Oh, sorry, you asked for 2017. I've just come back from 2018. It was slightly above that on a absolute profitability basis. In terms of return on tangible equity, which is another way of measuring profitability, it's increased.
What's the figure?
So I haven't got. Well, so I apologise. Just give me 1 second. I have my 2018 numbers in extensive detail. My 2017.
Well, as you're looking for that.
Okay, I have it here. So 1078 million was our underlying profit before tax in 2017. 935 for 2018.
So 2017 was 1 billion.
Yes. 1.078
okay.
in 2017, 935 million in 2018. Okay. In terms of, I know technical aspect, but it's very important from an investor perspective. We look at return on tangible equity, which is another way of looking at profitability from an investor perspective. That increased from 6.9% in 2017 to 7.2% in 2018.
Then you said to Senator Conwell Welsh that you paid 21 million in Irish corporation tax. What entity paid that money?
I don't have the specific name of the legal entity. That would have been at a total level the 21 million euros of Irish corporation tax. That would have been in companies that never had a tax loss or where tax loss utilisation.
I'm just drawing the distinction between the 2030. So you're free of paying tax in the main entity up to 2030.
so we are required in our annual accounts to give an estimate based on sort of profitability trends of when you would complete or use all of your deferred tax allowance, and that in our accounts is 2030. That doesn't mean that we wouldn't pay any Irish corporation tax from now until 2030. Indeed, we've been paying corporation tax for a number of years, including the 21 million euros in 2018.
Yeah, but where you have that deferred figure,
yes, where I haven't got this.
That goes out to 2030.
It will.
The tax that's being paid is by other entities within the bank.
Yes, there will be some legal entities that will continue to have a DTA, deferred tax allowance, until 2030.
Yeah.
That's correct. Under accounting laws, that's absolutely accurate.
Yeah, because it just gives the impression that you're paying tax.
We are,
I know you're paying tax from those companies, but there is still the deferred figure up to 2030.
Yes, the total deferred tax allowance continues until 2030. At a group level, we paid 21 million euros of Irish corporation tax in 2018.
On the tracker issue then, you've dealt with all the cases, you say. I think I've heard you say. Are all the cases dealt with? Maybe I should just ask directly.
I think the only so we have 9,700 cases in total. We would have made an offer to 98% of those customers. The ones that haven't received an offer are there's about 300 where we have not physically been able to locate them. Many have moved or returned overseas. We've been using tracing agencies. We've been sending contacts to their last known address and details. We would expect by the end of March, around 50 customers would have been to get confirmed this number, but around 50 customers would still be outstanding. So in terms of absolute percentages, we're in the 99+% range of completion of this issue, which was obviously a key priority for us to resolve this for our customers.
So I had a lady that called me this morning who said her family was 40 years with the bank. She had issues, got out of it, but she applied for the tracker. She said she was impacted by the tracker mortgage issue. And she was in tears on the phone because she wasn't prepared to fight with the bank again. And she had heard nothing on it. So that must be a rare case.
I'm obviously very understanding if there's a customer that feels that frustrated and is clearly being emotionally impacted. I would be very keen to understand the details of that customer so that we can proactively contact them and try to resolve it. Right, well, I don't know the details of the case. It would surprise me. We've put a lot of resource into addressing this situation, which never should happen in the first place, but addressing it proactively.
All right. So there's a couple of cases I'm going to give you because they contacted us today.
Please, Chair. I would be. We would absolutely look at those cases.
I will do that. Where, in terms of the figures that you've given the committee about court cases and so on, I was just looking at 2018. There was 1,300 court proceedings initiated, and that would have been on top of presumably what was already in the courts. So there was 411 court judgments at the end of 2018. I mean, as of today, what's the total number of proceedings that are ongoing in the courts?
Okay. Tony, would you like to provide that information?
Thank you, Chairman. And just to clarify, Chairman, the 1,317 is the total court proceedings for owner-occupiers at the 31st of December 2018.
It says they're initiated.
Yes,
so that's the total that are in court.
So that's a total that are in court for owner-occupiers in total.
So as of now, that's same figure, 1,317. And the judgments that you got in 2018, do we take it that we deduct that from 1317, or are these 411 separate judgments?
That's incremental then, Chairman, so that will be where the judgment from the court has already occurred. So that will be classified as, say, an unexecuted possession order, so it's outside of the 1317.
In terms of possession orders then, that you're in charge of, you have gone through the court system, got the repossession order, it's gone to the sheriff.
Yes.
So Is there still room for manoeuvre for the customer when it goes to the sheriff, or are you closed off on that customer?
As I mentioned maybe to the Deputy earlier on, we keep up the engagement at all times, either with borrowers or particularly at the very latter stages. Sometimes it's with third-party advisors. Maybe a new advisor, somebody has come on, and we keep up that engagement. So that's why you get. So for example, last year there was 52 possession orders that had come via the court that were executed last year, and so that's a much smaller subset when you compare it to the 411, and that exhibits maybe the timeline gap that does exist when there's the granting of a possession order versus when it would actually be executed. And through that period we would continue to engage with the customers to see if we could find a solution.
So where you have a standoff between a customer, say, and the sheriff, because the sheriff has the order for repossession, you're still willing to say to the sheriff, look, give us some time here? Just asking.
If a customer is engaging, and bear in mind, Chairman, in some of these situations, obviously they do relate to cases where it will have been 5, 6, 7 or 8 years since a payment was made on the mortgage, but where there are reasonable endeavours or a third party on behalf of the borrower comes to us, seeking to see can they try and, I suppose, bridge some sort of solution, we would always be willing to listen.
Rather than the repossession?
If we can avoid it, yes.
Okay. So do you have contact then with the sheriff?
The sheriff...
Like if the sheriff has the repossession order...
Yes.
Do you then have to say to the sheriff, look, we're continuing to negotiate here, so give us some time?
What would happen is, so the sheriff would schedule the possession date, and if something, obviously bilaterally, a customer or an advisor to a customer contacts us, and if we have, say, written back to say, listen, we would welcome receipt of a proposal or further engagement, we would notify the sheriff at that point that there has been further contact, which may result, obviously, then in that being deferred. And
mediation, do you provide mediation as part of the solution?
Well, we would ask all customers, if given the opportunity for engagement, we'd ask all customers, and we welcome actually where they have third-party advisors, particularly on the borrower side. So we certainly welcome that.
But if there was need for somebody to mediate, a professional, would you go down that road to appoint a mediator to assist to determine if the matter could be resolved?
Well, it's not so much a mediation type role in those contexts. It's I suppose whether the customer can get their own independent advisor, and we welcome situations where the customer gets an advisor to advise them on what they believe they should do.
If they got an independent advisor, they were making the effort to try and conclude matters, would you pay for the advisor?
Well, they can actually get advisors under the Oireachtas scheme, so there actually are advisors available to people in that particular circumstance. There's a state scheme actually that would provide advisors. Would you
ever pay for mediators, professional mediators?
Have we paid for mediators? In the context of mortgage cases, I'm not aware, Chairman, as to whether we've paid for a mediator in any particular case.
I'm just asking because I want to...
I'm just not aware specifically.
I'm not going to give you a particular case or anything. I just want to explore how far do you go in trying to resolve these real difficult cases that have taken independent advice, and maybe they want to turn back from that advice. The courts have ruled, the possession order is issued. Is there room to go back to the bank? Will the bank assist in saying, look, we'll try and provide a mediator, or you get a mediator and we'll participate?
So, it's not. We'd always want to engage with the customer. Legal action is the absolute last resort. We want to keep people in their homes. We would go to legal action where engagement is being refused, where there has been no payment for a number of years, or where solutions that have restructuring just haven't been met for a sustained period of time. We don't typically use a mediation in the way that you would formally define it, nor do we pay it. It's not something that is part of the success we've had in reducing NPEs down to a quarter of the industry average. We work in many other ways, and they've been successful to date.
Can I ask you then, Irish Mortgage Holders Organisation, they tend to give advice to people that are in distress. Do you use that organisation?
you?
Yeah,
David Hall.
Yeah, we interact with David Hall and iCare and lots of other third-party
I've only
advisors.
used that as an example.
Yeah, we do,
Yeah.
and MABs and obviously
So
PIPs and
somebody
people like that.
decided that they were in a standoff with their sheriff in the bank, and they decided that the best route to go was go to David Hall or IMHO or anybody else. You'd engage with them.
Yes.
Okay. In terms of the court cases that are there, and I know you say you engage right along the line. The court cases that I have witnessed, whether it's the county registrar or the other courts, would lead me to believe that there's little contact being made during the course of that court case between the bank or the account manager of the individual concerned and the firm of solicitors. They tend to pursue doggedly the individual, and it may not be an instruction from the bank, and I'm just wondering how much engagement do you have as that process goes along with the firm of solicitors that you have employed in each of the cases, or are they just let loose on the customer?
No, certainly, Chairman, they're not let loose on the customer. I suppose, the legal process, it's complex and it's very elongated. So I would say, I would characterise the process from start to end as that the bank's endeavour and efforts are around trying to reach a solution for the customer, and there's a lot of engagement takes place. And I just can't recall if the chairman was in the room when I mentioned earlier that, the example was that we had 164 cases that were in court proceedings and advanced stages last year that were discontinued, just as an example of where we did reach solutions outside of the court process.
Yeah, I just think that we're down to the real difficult cases now, having dealt with quite a number of others, and my experience has been that I've seen the banks get more aggressive. I'm not singling out the Bank of Ireland, I'm simply saying that generally through the courts they have become more aggressive, and it concerns me because of the number of cases that are still in the courts, and I would urge the bank to get a decent handle on each of those cases, or each of the firms representing you in those cases, to ensure that there is some form of understanding applied to what they're doing in court, particularly where it's a lay litigant or a family trying to retain their homes. It may not always be explained clearly to them that the bank is open to discussions or open to listening to their case, because the opposite happens in the court scene. They get the aggression, they get to, give me the keys, that's it. The paperwork is not usually sound in some of these cases, and there is a lot of angst there with customers. So I think that one of the ways to deal with it would be just to highlight it here and to say to you, I think that there's a need for some guidance to those legal firms when they're dealing with those cases. An independent process in the bank. So you invite somebody into an independent process to look at their case. Would that be normally in-house? Like, is an independent process seen by you as another arm of the bank investigating a case, or is it truly independent that you invite in someone to look at the case?
It would, Chairman, I suppose it would depend on the context. But clearly, if you're in the space of a complaint, for example, it would be independent of the unit that was previously looking after the case. So it would be truly independent, while within the organisation as a whole, it would be independent. Say, if it was a complaint from a customer in my area.
That's not really independent, though, is it? It's like being a member of Fianna Fáil and having an independent Fianna Fáil, that kind of thing. So I'm just saying that for you and the bank dealing with these people, it's a very, very serious thing. Their house is on the line, and they're offered an independent assessment because there is a dispute here. And what they get is another arm or branch of the bank conducting this independent assessment. Now, I've been my experience in one of those cases has been just that, and I'm just wondering, why do you do that? Why not give it to someone that's really independent, outside of the bank, and have them there to say, because not many of these cases, but where they do arise, people expect independence.
So, Tony may want to expand on the detail, but just more broadly, if I may, Chair, we are absolutely committed to working with our customers if they're willing to work with us, and we are absolutely, our desire is to keep people in their homes. We have got a track record that is unrivalled in Ireland in terms of working with our customers to improve those situations. 9 out of 10 times that a customer would have a financial distress around their mortgage, for example, we would find a solution, and 9 out of 10 times those solutions hold. So we have a track record and considerable resource and experience associated with this. We will look at all avenues to find a sustainable solution for the customer, as demonstrated by our improvement, our reduction by 80% of NPEs from their peak to where we are now. And your feedback on particular cases, without knowing those cases, it's difficult to understand the exact context or the situation, and we'll be happy to look at any individual case.
But I'm not asking you to give an answer to the individual case. Okay. I'm asking you to give an answer to the general approach by the bank to such hard cases. Yeah. So that's what I'm getting at here. In the context of, again, we're going back to the independence of these, and it's using examples to look at what's happening, to determine, the processes of the bank. And in one such case, and it's a financial person involved in the financial services industry, where they discovered that the file that the independent appeal within the bank, I think it's Grant Thornton, is it, that they write to him or whatever, that the appeal was looking at a file, or they were looking at a file rather, that was incomplete. So the person had the full file, and the pieces that were missing from the file made a difference to the outcome. And the person appealed to the bank, appealed for an oral hearing. I want to put my case before you. They were very constructive and professional about it, and the answer was no. So I know that that's an individual example, but it goes back to how far will the bank go to ensure that any process teases the issues out right to the end. And in cases that I'm giving you, it doesn't seem to be the case for them that they felt it was worked out to the nth degree, where both parties went away and were at least convinced by the process.
So I think in the context of an independent appeals process, specifically for the tracker, we've set up an independent appeals process. It's absolutely in line with the central bank requirements. It is a very important part of the tracker mortgage examination, where customers have up to 12 months to submit an appeal, and we have had a proportion of our customers who've asked for an appeal pack, and several of them have gone to appeal, and a number of those appeals have been upheld, and they've been typically upheld because of personal situations. So because of the independent nature of the panel, I don't get involved in the individual cases, but I do look at the outcomes in terms of what number of cases were put through, how many were upheld, and the themes about why they were upheld. And often it is because no two cases are the same. There's some individual information to the case or personal circumstance that the bank wouldn't have known, and the appeals process is in place for exactly that reason, to look at the individual circumstances and try and find a solution. Now, the solution may not be to the liking to every customer, but it is an appropriate and an independently led appeals process that is, I think, facilitated by Grant Thornton, but will have independent members that would chair that appeals panel, who would be going through these cases with great rigour.
In great rigour. So where they're told they don't have the complete picture and they continue to make a decision, that's not great rigour.
Deputy, if I may, I think in terms of that process, we've actually gone back over that process in the last number of months, because that was something that one of the independent advisors separate to the bank representing the customers raised with us. And we've tried to make sure is that, and I agree 100% with his point, it's important that all of the issues that are raised are dealt with. So we've tried to make sure that particularly what we were seeing there were aspects of the case that weren't to do specifically with the tracker, but were a broader part of that customer's experience with the organisation. So we now have set up a process to start to twin track that with, here's the appeals panel, but here's also the broader complaint, so that all of that documentation can then be provided back to the appeals panel and they can make a broader decision in the round.
Yeah, well then, in a case like this where Grant Thornton have said no, and where the customer says, hang on, you haven't got the full picture here, and they say not interested, no oral hearing, then it goes back to the bank.
It comes back to the bank, and what we're trying to make sure is that...
And I'm going to send you the detail of this, because it's an issue that I just want to see how the bank deals with it. You're a member of the Banking Federation.
The Banking Payments
Or
Federation.
Banking Payments.
BPFI, yes.
Yeah. What does that cost you?
I'm just going to ask Gavin, who's...
I don't have the cost to hand. I'm actually president of it this year, but I don't have the bank's contribution, but I can get it for you.
What would it be? It's not €50 a member anyway. It's
no, there's a number of members. Obviously, depending on your size in the market, you pay a different membership fee depending on the size of the bank. So there's a number of members across the mainstream banks.
Would you give us a note on that? Just
we will respond with our contribution.
Yeah.
Absolutely.
Because they represent you in lobbying and so on. In the course of the tracker thing, and you may have covered it, I just didn't see there. Did anyone that had a tracker that did they lose their home? We had cases in banks where homes were lost.
Yes, there very regrettably were a number of cases that we've identified where there was involved a loss of residential homes. So in total, 10 accounts, so 10 properties within the track identified as being impacted by tracker mortgages involved the loss of a residential home. Obviously, it's an extremely poor negative outcome as a result of
How would they be compensated then? How do you approach that?
Yeah, I think when we were here in January last year, we would have gone through that in all of the full detail. And if you just give me one moment, let me cast my mind back. So for any customer who lost a personal dwelling home or a home that they lived in, they would obviously receive the same level of compensation as the rest in terms of all the interest would be refunded. There would have been fair value attached to that. And then there was an additional compensation flat amount of €50,000 paid. Secondly, any difference in between the market value at the date of sale and the current market value, given that we've had a recovery in market prices, would also have been returned to customers. And then finally, there would be, depending on whether the customer wanted a new mortgage from us or wanted to, purchase a new home, to make sure that they were provided with a mortgage. But if, let's say, their individual circumstances were that, that they couldn't afford a home in that way, then we would look to make them an additional sustainability payment based on the difference between the interest that would have been contracted to have been paid originally, and we would work that out and look forward.
Maybe I should have put the question this way: that of the 10, have the 10 been satisfied in relation to?
I believe so. I think of the. I'll have to come back with the exact numbers, but I think for the most part we're about 80% of the way there.
Okay. We will come back.
I will have to revert the exact number.
There's one other question I want to ask. I think I'll leave it at that. I'll send you on the information anyway that
Thank you, Chair.
I have here before me, and you can let me have a response in due course. Well, that's it. Any other member? I think you've had a long session, so just to say thank you very much for coming along. It's been very helpful, and say wish you well. You're welcome.
Thank you. Thank you, Chair. Thank you, Committee.